up now. Pour that coffee down your throat hole. It's hot. Now you got a hole in your throat. Oh no. Just call your boss. Take the crust from out your eyes. So tasty, not a coffee.
Good morning, Tasty Nation, and welcome to the very last show of 2025. My name is Liz Deerking, that beautiful brunette in the shimmering gold is Miss Jenny Andrews. Happy New Year's Eve.
Happy New Year's Eve, Liz. It looks like you're ready for the party too.
I'm party on the top. I'm party on the top. Casual on the bottom.
Looking good. Any big plans for New Year's Eve?
I've got huge plans. Can't tell you what they are because I'll be sitting on my couch making sure all of my children make it to their appropriate locations.
Oh, and we were just talking to our super producer, John, about New Year's Eve, and it is, I think the weather's a little iffy around here in Chicago. So I don't know if there's more snow coming, but it is I don't like when we have icy, slippery roads on New Year's Eve and the kids are all over the place.
Oh, icy, slippery roads, kids, New Year's Eve, all those things put together in a sentence. I don't think anyone would be like, that's what I'm looking for.
I think, I'm always like, my husband doesn't drink. He hasn't in 20 years probably. And I used to not like it. I used to think like, oh, I wish he would have a glass of wine with me, or we could go out and go out for a drink. But at this age, I love it because he'll go drop the kids off everywhere they're going, and he'll go out and pick them all up.
Keith, we need some help.
Pick them all up.
Keith, we need some help over here.
He's always the driver. And everyone can count on him to drive everyone.
Yeah, no, that's awesome. Okay, yeah. So considering it is New Year's Eve, I have two things that I need to say. Number one, best cherry bomb ever. Did you read it this morning?
No.
Okay. Then if you didn't, then this is what I want.
Read it to me.
Don't even look. I'm going to read it to you, okay? And this is all TP. I can't take credit for this. I cannot take credit for any of this, okay? But it says, just work with me for a second here. May last year's rally be forgot, and the VIX may be to rise. A real correction would be our friend and be a nice surprise. Let's raise a glass to liquidity, tight bid as spreads too. Let's hope our accounts are always green and probabilities stay true.
Cheers, Liz. Cheers. I love it. I'm very proud of you for singing that whole thing through. Love it.
You almost cut me off halfway through. I was like, no. Hold on.
Good job. Cheers. And that's one of my favorite songs. I love that song.
Well, you've never heard that song before. TP just wrote it.
I mean, so...
I give him, you know what I give him for TP, and I hope I get to see him today. He's getting one of these for the entire years of dealing with us, a certified badass option trader card, and for writing his song.
You know what, Liz, if my box of cards, here it is. You're going to get one too. You're going to get one too for singing that this morning. You're getting one.
And look, you got to check out my glass. Can you read this?
No.
It says might be water, might be Prosecco. Look how big.
Oh, does it say that?
Yes.
Maybe our viewers could see it, but in my world, you're a tiny little box.
Yes, might be water, might be Prosecco. Who's to say?
Very cute.
But wasn't that? I got to give TP a lot of kudos for that. That was fun.
Oh, TP, we love TP. He's very clever. Didn't I say this when I met TP? Like when I met TP long ago, 15 years ago.
You didn't say happy anniversary to TP because he's got the same anniversary as you.
Oh, darn. We missed it. Happy anniversary, TP, a day or 2 late, 2 days late. I forgot that we had the same anniversary. So, and I think maybe the same year.
Same day, same year. Yeah, I think you're right.
Yeah, same day, same year. And our kids are our oldest kids are about the same age.
Yeah.
So originally in my life, when my husband was the smartest person I had ever known, then I met TP.
And then it turned to Liz.
Then I met TP after well, Liz, I knew you. I knew you for
There you go. Good cover. Good cover.
then I met TP and I said, now TP has topped the leaderboard as the smartest person I'm friends with.
Now it goes, Liz, your husband, TV.
But he is, and not only is he smart, he's clever, a clever musician as well.
Clever musician. So the other thing too, I want to give a huge shout out. Now I know it's early and I know it is New Year's Eve, but I want to give a big shout out to Frank the Great. I know it's not Thanksgiving, but I want to say I'm thankful for everything that he's done over the years because he's our man on the YouTube chat and he is amazingly talented, so quick-witted and very quick to the trigger. So I want to say a big shout out to the chat and to Frank the Great for dealing with us for the last.
Yes, for sure. When Frank started, we didn't know it was Frank at first. When he started manning the chats, Liz and I talked about this. We wondered who is on there responding to people because they've got to be an old trader. They've got to be a trader from the floor because they know every response. They know what's going on. They're super smart. They're fast. They're super fast getting their responses out. And we could not figure out who it was. Frank the Great. He's amazing on it.
Yeah, he is. And the Twitter, like everybody up there is great. So I just want to give a shout out to the chat and all that stuff too.
Shout out to everyone. Shout out. We're grateful for you're turning New Year's Eve into Thanksgiving.
It's Thanksgiving. We didn't get a Thanksgiving show.
No, you're right. We didn't. It's kind of fun having the New Year's Eve show. Now, I'd like to compile this. I wish I don't even know. Like if I have a snapshot of my account, and for anyone who doesn't realize this, like tomorrow or the next day, it's all gone. So like it's all changed to zeroed out. So
excellent segue into our options drive, Jenny. Buckle up.
Okay, good. I can't wait. But I will usually take snapshots, and I wish I had been doing it all along of my account, P&L, everything at the end on December 31st, because come January 2nd, you're starting all over again. And I do kind of like to remember that, and I would love to go back in time and make like a little collage of them.
A collage of them. No one would look through that. When something happens to you, no one's going to be looking through stuff like that except for me. I'm like, oh, look at Jenny's P&L in 2012. There are certain things that if something happened to us, and when we go to the nursing home, only you or I will appreciate, and that is one of them.
Yeah. Okay, so
what are you doing on New Year's Eve? Are you staying home too? Because I know we both leave tomorrow.
We leave tomorrow and I'm leaving, and I gave the kids New Year's Eve. I'm like, I'm giving you New Year's Eve. We're not leaving until New Year's Day, but we're leaving at 7:30 in the morning.
Just kidding.
You can have New Year's Eve, but we're leaving at 7:30 in the morning.
We had Lily with us yesterday, who did a wonderful job, by the way.
Oh, I posted her Liz, I got like super savvy, learned how to screen record and then made a little clip. So I made a little clip of just her piece and posted on Facebook. She's getting quite the reviews.
I'm
might
sure
be
she
taking
is.
over my job.
She did. I tried to get her to do this morning. I kept being like, so you're taking over the morning show? You and your mom? She's like, well, I'd have to be on the same box with her because we only have one Zoom setup. I was like, fine, totally acceptable. No, she did a wonderful job. So yeah, but I had a point. She did a good job. She's taking over our jobs.
No. I was happy to have her on. It was fun. It was a fun, like, bring your daughter to
work. I remember. You said you have New Year's Eve, but you're like, you have to be home by 11 on the train home yesterday.
She's not even going anywhere. She decided she's just staying home today. She's not going anywhere.
Yeah.
Has never been one of those kids into like there's a group of high schoolers that like do have actual parties. She has never been in that group. Like she does not go to any like parties.
I hear you. That's good.
So I don't really ever worry about her.
It's so funny though, because my son's home from college and he's the one I worry about the most. He's for sure the one I worry about the most, but he's been pretty tame because everybody seems to be spread out for this Christmas break. I think a
Oh.
lot of his friends here, their parents are so excited that they don't have sports because, they all had sports. And so nobody could really leave over Christmas break
Hmm.
for the last 20 years. And everybody's kind of spread out and in different locations. So he's been kind of wandering around being
I'll
good.
tell you, half of the people we know, like this is kind of crazy, and I don't know when this happened because um it's at some point in time, and it hasn't always been this way. At some point in time, uh half the south side of Chicago has decided to relocate to Marco Island for the week between Christmas and New Year's.
2 of our 14 friends are there right now.
But like half my neighborhood. When I went to the gym to work out, because yes, but don't fall over. I joined a gym. When I went to the gym to work out this week, they said half the gym was in Marco Island.
Yeah, very crowded with our friends down there these days.
It's gotten so crowded. So my next door neighbors, they have a house there or a condo there, and they said it's like. I would talk to their kids, and the kids usually go, and they're like, "We don't go anymore. We don't go anymore because the restaurants are so crowded. You can't even like everything's so crowded down there now." Liz and I, we used to go, but we stopped it.
I It's an unpopular opinion. I never liked it. I mean, because it's easier to get to other places for me.
It's just you good luck getting a reservation anywhere.
Yeah.
It's gotten to be insane.
But it's also not near the airport. If I'm going to a beach,
Yeah, you got to fly into Fort Myers Airport, and then it's like
an
what?
hour and 20-minute drive. It's not easy to get to.
I did love Marco for its time, but now it's too busy.
Yeah.
If you could pick one.
Sarasota. Is that the question?
Sarasota. Okay. All right. Yeah, I like it. I like it. You know it. Your dad lived there for many years. So Sarasota. So if you had to pick like one place to
That was your question. What beach?
Yeah.
Yeah, Sarasota Beach.
Sarasota Beach.
Yeah. And it gets voted. I'm just going to give you
Tell me.
This segment sponsored by the White Sand Beaches of Sarasota. It gets voted every year one of the best beaches because it's got like powder sand white beach.
Okay.
Yeah. That's not Lido, not to be confused with Lido, which is also in Sarasota, but okay. Sarasota Beach is the one.
Okay, so my favorite beach is the Anna Maria Island,
which is also you'd fly into Sarasota.
Yeah, you'd fly into Sarasota, head on over to Anna Maria Island. The Bean Beach is called Bean Beach on Anna Maria Island. That to me is the most beautiful beach that is down in that whole area because it's where the bay, like the bay and the Gulf meet. So you've got this beach and you've got water on both sides, right? You've got water. You can go to one side or the other side is where the Gulf is coming in, or the bay is coming into the Gulf.
I mean, don't get me wrong. I would actually put Anna Maria Island as part of Sarasota. So for our purposes, I'd say our answers are the same.
Our answers are the same. And now I know why everyone from Chicago goes down to Marco because it's like the furthest south you can get. It's the furthest south on the west side of Florida that you can get to. So they're looking for the warmest possible weather. Because I think they think like right now up in Sarasota, it's like maybe 10 degrees cooler than it is down in Marco Island.
Yeah.
That's why it's gotten to be so busy because everyone's trying to get like one more degree of warmth when it's 10 degrees in Chicago.
All I know is I'm going to be in Miami Beach tomorrow.
Yes, and I will be at the Grand Floridian tomorrow doing a Christmas decorations monorail tour.
You are again. Lily, I'm only laughing about this. We should have posted these pictures because we had Lily with us and I love her so much. And she was like, thank God we have a decorated train. My mom's dying to get us on decorated trains. She's trying to drag me all over and put me on decorated trains. And now you're making her get on the decorated monorail.
No. So as far as the decorated train goes, Liz and I have been taking the train to the city for at least a year. We stopped driving. We started taking the train maybe a year and a half ago. And we have never, ever, ever walked on a train where it was totally decorated, Christmas trees, tinsel, everything, garland. And
You're Grinch. Candy canes.
when we got on the train yesterday, and it was all decked out. It was the train they used for the Polar Express. I thought that was very exciting. It really made
so Lily and I were just going, dreams come true, Jenny. Dreams come true. You can take pictures in here. And then our train conductor, John, was the best because Jenny was so excited. She's like, some cars have trees. The ones with the bathrooms have trees. And John's like, they didn't decorate the bathrooms, Jenny. I thought it was hilarious.
Well, my entire lifetime, I've never just walked on a train that was totally decorated unless you're actually signed up for the Polar Express train, which I think that's hard to get on. But no, in Disney, where the monorail is not decorated, but you can do like a monorail tour where you get off at the Contemporary and look at their decorations. You get off at the Polynesian and look at their decorations. You get off at Grand Floridian and look at their.
Oh, the monorail's not decorated. I see what you're saying. So it's not. Yeah. It's not another dream. I thought Lily was going to send me her dream came true again. She's on another train decorated.
No, so you could do a monorail tour of decorations, or you could do the gondola tour and do Riviera, and you could do. It's just our working orders are just popping in. Yeah. Our working orders are popping in. So that's all we're going to get there, do the little Christmas decoration tour, and that's it. Next day, hopping on a Disney cruise.
Woohoo! It's going to be awesome.
I know.
That is going to be super fun. I am keeping an eye on time. We do not have Vanetta. We miss her terribly. Shout out to her too. We're thankful for Vanetta too, because that's usually where I get most of my news. I am seeing something that I think is kind of fun in the chat. Oh. So I'm only saying this. We're not going to do it now, but at some point I might call this up because this is pretty cool. People in the chat are saying what their best and worst tickers of the year were.
Oh.
And I'm talking to you, Nicholas Ventos 3257, because he just said MES and MCL were my best tickers of the year. He has positions in them 100% of the time. It's his main theta. And then he said directional plays on Apple and Google were my big wins. I like when people tell us what their wins and their losses were. So keep talking to each other in that chat. I think it's pretty cool.
I do. I wish I was I'm logged into our show account. I wish I was logged into my account to see. I think my two biggest losers this year are Upstart and Hims.
Ooh, yeah. I can see that.
Ooh.
I could see that. Hims was a tough one.
Hims, and honestly, when am I going to learn my lesson? What I did in Hims is what I did in DocuSign, and I did a whole piece on my DocuSign position back in the day and the bad trader tour of what not to do.
You totally did. I forgot about that.
No, and that's what I did in Hims. So basically, let's say I sold a put in DocuSign that was $2, and DocuSign dropped literally like $100. Do you remember this?
I do. I 100% do.
So on its way down, so let's say I sold a put for $2. Well, then it was worth $10. So bought it back for $10 and sold as many puts as I can sell to get the money puts to get that $10. Then it continued to drop. Bought those put back and sold as many at the money puts as I could sell to get that money back.
I remember this. This was a wonderful concept.
Then it continued to drop. Bought those puts back and sold as many puts as I could at the money to get that money back.
Yeah, and when it keeps going down, it's not that good.
And it turned into a hot mess. And I was doing that in Hims this year, and it didn't go well. And so I think Hims is at the top of the bottom of my loser board. Instead of the top of the leaderboard is the bottom of the loser board.
So the bottom of my loser board this year, it's ironic, some of them that are up there, to be honest with you. I must have made some real bonehead moves because to say that I'm in shock. One of them is Netflix. One is Arm Holding.
Arm. Yeah, that's not a surprise. Here,
I must have gotten directional because I don't even remember what I did in both of those.
I thought an Arm used to just do Jade Lizards, but maybe you got a little carried away. Let's go to the platform. You want to go on the platform?
Sure. Okay. So, and I am keeping an eye on time. We have confirm and send. We put the questions that have come to us. So I'm kind of excited for this.
Okay. So we're in the platform. And before we get to Arm Holding, I just want to show you this because I pulled it up for myself. I was curious. I wanted to see last December 31st, what happened. So if we go, so here's December 31st. but what I looked at the day before, so the close on the 30th was 59.06.
Okay.
And then the open on the 31st was 59.19. So it was up. So we were up like, 12 or 13 points or something like that. SPOOs were up 13 on the open. But by the end of the day, so from the open, 59.19 to the close, 58.81, we had like a 40 point difference. So the SPOOs started up about 13 and then ended down about 30 by the end of the day. That was last year on December 31st. And I do remember it being down because I know we thought it was going to be up. And I think we got long a lot of like SPX or XSP or something thinking like, we're going to cash in on this rally. And it never happened.
Yeah. Yeah.
Yeah.
It never did. We always were. I've seen it once, end of month, end of quarter, where it skyrockets right in the last minute, and we're still trying to capture that wind in a bottle, right?
I know.
Lightning in a bottle. We're trying to capture the lightning in a bottle.
Okay, so I'm actually gonna go to the previous year. I'm gonna see, are all these December 31st similar?
I don't know.
Okay, so here's the year before. On the 30th, we had a tight range. So no, then we're moving. Okay, hold on. Was it the weekend? Yeah, you know what? It was a weekend. So the last trading day of the year was the 29th.
And that's why we thought it went down.
No, and it did go down. So on the 28th, the close was 47.83. The next day, the open was 47.82, so totally unchanged. But by the end of the day, 47.69, it was down on the day again. Down on the day from open to close, down on the day the previous December, the last trading day of the year.
So we're going to let the cat out of the bag. Jenny and I are looking at this because we are both holding long options in
We're both holding long. We're both just like, we were throwing in SPX calendars to leave us with longs for today, but it's not looking good, Liz. I'm going to go to the December 31st before that.
Exhilarating.
Hey, you know what? This is exciting for me. Okay.
That's Jan 17th. That was your son's birthday.
Yeah. Okay. Here, we might have a winner here. I don't know.
I don't think so.
Okay. So yeah. It's another one where it was over the weekend, but we have the 29th, the close 38.49. 38.49. Just a couple years ago. That's great. No, I'm in 2022. I must have skipped a year.
That's all right.
All right, 38.49 on the close the day before. Then the last trading day of the year, 38.29. So 38.49 to 38.29. So open down 20 SPOO points. And then rallied back 10, but still probably down 10 on the day.
So the takeaway from this walk down memory lane is it's really not.
It's not. Well, I don't know why we thought it was going to be up.
No, the one time we did it was in March. It was end of month, end of quarter March. Within the last minute, everything went forward. And that's what we're always thinking, end of month, end of quarter. I wish Alo, the guy from the trading floor, as Jenny likes to call Hollywood, had our phone numbers and would text us when the big trade happens today.
Where's 2023? Like, here's 2020. Oh yeah, here's 2023. We saw that one. So, Liz, bad news is that it's not looking good for our SPX.
But I don't think that matters. What my takeaway from this is it doesn't matter, right? Like we could be up, we could be down, but right now we're basically unchanged. The biggest mover on the day, in my opinion, is silver, because silver is back down what it was up yesterday, and that volatility is out of control. And then the news this morning, and I'm only pulling this. I know nothing about news, but because of silver, I glanced at silver news today, and this is also our first question, confirm and send. But the CME. So can you look at those big bars? So where it's like up down,
Yeah.
So I didn't know this, but the CME has been hiking on the down days. It's when they hike the margin for precious metals because the volatility is so high. They've been hiking the margins, meaning that people have to have so much more capital in it. That's why it comes down. And they did it again today. So it's the CME hikes precious metal margins again 3 hours ago after the violent price swings.
And then people have to get out because they can't carry.
It's very similar to, it's like your account when you're loaded with silver along like you are, and they make you put up more capital. You have to close your position because you don't have the capital because you're overloaded in silver.
So let's say in someone's mind, they're like, okay, I've got $10,000 allocated to this position, and they open it up and they're like, why is this using $20,000 when I put $10,000 in?
Correct.
So they're upping the margin. And we've seen it before in different equity products or different underlyings when we have positions on and we're like, geez, when we put this on, it was using $500 in buying power. Now it's using 2,000.
Yes.
Yeah.
Yes, we've seen that. So pretty interesting. All right, Jenny, it is 7:25. Let's take a short break because we're going to come back with confirm and send, and we're going to jump right back into some silver questions.
Oh, okay. We're taking a break. I didn't know we were taking a break, but sure.
We're taking a break.
Stay tuned. We'll be back with confirm and send.
Forbes called us best online for options trading. Investopedia, best for options trading, period. With stockbrokers.com, we're #1 for options and futures trading. The Motley Fool really likes us. And so does Business Insider. So what else can we say other than boom? Trade like a trader. Tasty Trade. Make your move.
Grow a strong community with Tasty Trade's referral program. When your friend joins Tasty Trade, you'll both receive $100. As your community grows, you get more bonuses. The referral program runs through December 31st, only at Tasty Trade.
When the market moves, traders need to move faster. Tasty Trade Active Trader Tool offers full depth of market visibility, one-click order entry, and instant position management so traders can react in real time. While others charge for professional tools, Tasty Trade provides them for free. Opportunity can move fast. Seize it with Active Trader. Try it now on Tasty Trade.
Feel like your wardrobe is missing something? Like style, purpose, and maybe a dancing dog? Can I pet that dog? The new Tasty Trade and tastylive web store is now live. New merch, bold designs. Did we mention all net proceeds go to one tail at a time? Invest in the real bull market, dogs. Go to tastytrade.threadless.com. Grab some gear and help some pups. You get merch, they get a home.
Tasty Trade's Money Match event. Unlock 30 days commission-free trading. Plus a 1% cash match on all qualifying deposits to jumpstart your trading when you open and fund a new Tasty Trade account. Level up your trading experience with Active Trader Mode, smart order tracking, risk analysis tools, dynamic watch lists, and more. The Money Match event starts now, exclusive to new Tasty Trade customers.
Got trader's block? We've got the cure. Get data-driven trade ideas with Cherry Picks, our weekly newsletter that gives you insights into the market. Sign up at tastylive.com/newsletters.
Hello, everybody. We are back. If you can't get enough of us, we've got 3 full hours today of these two knuckleheads.
Oh my gosh. Yes, we are back. We are back. It's we've got confirm and send coming up. And we really didn't get to answering the chat. A person in chat. Can we call them a chatter?
Sure. You can call them anything you want. They can't stop us. The chatters.
The chatters. Okay, we never got to the best and worst. They gave us their best and worst. And
I was actually just trying to let the chat talk amongst themselves.
Well, I liked the CL, honestly. I liked the CL, and that's something. Remember when we had the one of our like rising stars on who was selling the daily spreads in CL.
He would do Monday, Wednesday, and Friday. It was like 3 days out each time. He always had one on. It was a Monday, Wednesday, Friday trade.
Yeah, and I kind of and CL has been hanging out in this 60-ish range for a while. I don't know where it is right now.
For those of you just joining us, CL is oil. I like that you call it the CL instead of like.
No, I didn't call it the CL.
You did.
No, I said it's been hanging out in the 60-ish range for a while.
Yeah. So it has been, but the vol is down. So we talked about this earlier. The vol is down in oil. We have been looking at natural gas for price point entries, but vol has been down. The highest volatility on the board right now is not Bitcoin. It's the metals. And
Yeah,
that brings
it's the
us,
metals. But the metals are crazy. The moves have been violent. And so you can't just, I know the hot topic are the metals, but no one's going to be all in on the metals. No one's going to be like, oh, vol's down everywhere else and it's up in the metals. I'm just going to be all in on the metals.
but nobody should be all in on anything. When VCL is the hot topic, nobody should be all in on it. You know what I mean?
Let's go to the platform. I pulled up CL here. We've got an IV rank of 18. It's trading 58. I feel like it's been in this range for quite some time now. And I don't mind. Usually we'll turn to MCL because it's smaller, the micro crude. And hold on. So I don't mind selling premium with an 18 rank. I don't mind it, especially with a CL at 58. You can get $1. You can sell the 55 put for $117 using only 567.
And this was this was one of the people in the top number one performer. Was that something they always have in? Just because I'm not saying it's cheap. It's cheap margin requirement to be in for $1.
Now, would you compare this crazy rally in the metals? Would you compare this to the time when crude was going negative?
No, I don't think you can compare these. I don't think history is saying this is what happens here, this is what happens here. Do you know what I mean? I don't think you can, because I don't know. I've never been in this. Don't get me wrong. I'm a metal bull, so I'm an accidental winner here, right, on the metals. But when I look at this, I don't know why silver's going crazy, because it's got something to do with data centers. That's all I know. I've never been to the point where they're doing data centers before, but when oil went negative, that was weird.
I want to see how long was the ride down before it settled down. I don't know if do you remember what year this was?
No, I don't. There you go.
Okay, here we go. So how long did this ride down last? So we went from January of 2020. Oh, this was 2020. And then no one was traveling. Okay, here's, March.
It was 2020. It was COVID.
Yes, COVID. No one was traveling. No one was going anywhere. And so that's the reason that and the bottom, the worst day was April 22nd, and then it turned around.
Yeah, went negative there. So interesting. I don't think there's a comparison for the two. I don't know, though. I mean, but I'm also not. I mean, I look at natural gas more than I look at oil. I'll put it to you that way. I'm a more of a natural gas trader than I'm a crude oil trader, and I understand they're correlated. I get it.
So did he say so?
And this is from Mikos. Wait, this is from Mikos, and I do think this is important. He said, no way, negative crude was a once-in-a-lifetime event. Once again, I'm just reading from the chat. But this crazy silver has happened before.
Okay, so it's happened before. I don't remember silver going nuts like this before, but I'm not a huge silver trader. I haven't been like.
I mean, it reminds me of my neighbor. Remember, I used to call him Silver Bob. He loved silver.
Oh yeah.
But I guess it depends on where you are. That's a big rise from up.
Right, for sure. So here's a big rise from 11. This is 2020. So here we go from this is when COVID happened. We're at March of 2020. Between March and then August, silver tripled.
It did triple. Yeah. And so they were, and that's a crazy, because silver, I think, is up 145%, which is a triple. Do you know what I mean? That's exactly almost what this is. Okay. Which leads us, Jenny, because you and I have a tendency to get a little off track sometimes. Do you want to take, weird, right? Do you want to take our first question? Because I know it's about.
Sure. Yeah. Confirm and send. I think it's, we're on topic. Let's see. What's our first confirm and send?
So confirm and send for Wednesday, December 31st. The first question, drumroll.
Every time I hear that, I think of Christmas Vacation.
I know. Where she just goes, I can't do that with my, I can't do that. Not really, D'Angelo. Okay, what size account do you need to trade /SI? And we did receive this because silver is a hot topic. So people are emailing us being like, and to Jenny's point, you're like, we're not all in silver. So let's pop back in the platform and we're going to talk through this. Okay. It's a hot topic right now, meaning everybody's talking about silver.
But silver is a big dog. Like, it's a big dog. It was a big dog at 38, and it's a bigger dog at 71. And I know the vol is high, the rank is high. I don't see rank here because I'm on the dollar sign, but if I just go,
it's 108.
okay, so we've got
105 now. I mean,
a high rank.
and let's just talk about this too. Look at that rank. The parameters are off, meaning the fence is removed of the ivy rank. It used to be where 100 is the highest and 0 was the lowest. That's not true anymore. It can go negative, and this is above 100 ivy rank.
I know. So
yesterday it was 88.
So me personally, I don't care how big my account would be. I'm not trading naked options in silver.
100%.
I don't care if I have, $1 million in my account. I'm not trading naked options in silver.
No. And that's kind of why we wanted to talk through this on here. So can you hit buy, bid, or ask? I just want to show what the actual
buying power effect, 75,000 to sell one SI future.
I wonder what it was yesterday.
I don't know.
I wish we would have looked at it yesterday.
I don't know.
That seems big.
And there is a micro, right? What is it? 2SI or something like that?
Yeah, there is a micro, but the micro isn't even that small. So let's talk about this. Big. If you are going to Jenny's point, no matter how much money she has, she's not zinging. Even though you have, like, we're on the show every day. You had a directional assumption in silver that you said, I'm going to short it at this point, which great. Like, it's coming to fruition right now, but you're still not out there being like, I'm just going to sell SI, or yes, you're out there defining your risk.
This is why it's good to know options and know how to use options, because for like the Gen Pop out there, they hear about these metals in the news. They hear about the metals in the news, but if you're a Gen Pop and you're hearing this and you're like, geez, I want to get long silver, or the flip side, I want to get short silver. If you don't know how to use options, that's hard to do. That's hard to do. But knowing how to use options is very easy to do. You can make your risk what as much or as little as you want it to be with an option spread. So here we just have a baby call spread. It's just a like 0.25 wide call spread.
Will you do me a favor and just put in another short 0.25 wide call spread? Actually, just do the same one. Sell the 73. So I just want to look at the bottom. Okay. So if you did the exact same trade, your max loss is 740 and your max profit is 510. Don't look at the buying power for this. That's the one thing I want to say about SI options. Don't look at the buying power for this, because the buying power is going to be different. Your max loss on this spread is 725. Your max profit is 510. So that means this is $12 wide, right? Am I doing that math right?
Yeah, 12. Yeah, it's 12. Yeah, 12.
Yeah, it's probably 1250 wide, which means you've got 0.25. Your multiplier is, a half.
Yeah, 1250.
Yeah,
1250 wide. Which, if you're getting this like 0.102 credit and that's somehow equivalent to $510, all you have to do is hit this to see, 5.102 times 5 is the 510.
And the reason we wanted to talk through this today versus just emailing this person back is because, God bless your little heart, Jenny Andrews, is because keep an eye on this. You have to be careful even with the spreads, because it can hold up more. It can hold up more than the width of the spread. And I don't know when that's going to change. So we know your buying power is reduced by 12.
Even though our risk is only $740.
And it could get more than that, is what I wanted to say, if you get closer to expiration or you get closer to the at the monies.
But we know the risk in that trade is not more than the 740 if we were to put it on now. It's not that far from it's about $75 away from when we put it on. But again, the silver's all over the place. It
might be right where we put it on. I mean, not $75 away. The implied volatility has gone up. So that's
no. I just meant that spread was $75 away.
It might be exactly where silver was when we put it on.
Yeah. Just that spread. It's like $75 better if you put that spread on today.
Yeah. So this is a big, big dog. Now, it's SIL, that's the mini. And even that mini isn't that small. So it's kind of, we want to be like warning Will Robinson on this. It's not something I do. I don't trade naked SI.
Micro.
Yeah.
And that would be, I'm guessing, 7,500, right? Yeah, 8,000. If it was 75,000 for SI, it's about a tenth.
Yeah.
But still, it's still big. If someone wanted a very small scale, you have to go to SLV.
Does SIL have options? I don't think they do. And it's so funny because SLV is so small.
SLV is so small, but in our mind, it's so small. But now it's 65. Like we're used to SLV being 20, right?
True.
So when it was 20, it's so small. Now it's 65, and honestly, it's moving. It's moving. The moves it's having in a day. So it closed at almost 69, and it's going to open at 65. So even though, like in our mind, SLV is so small, it's actually having moves where if someone wanted to, trade SLV, it's having big moves throughout the day.
Is there any premium in SLV?
Well, with 105 rank, there might be.
Ooh, look at that.
Well, we had an Iron Condor in here, and then we switched it to SI because
Well, it was up through our call spread.
Yeah. But
wait, can you do me a favor? Will you go see where our Iron Condor was? We can go back to activity.
Yeah, it was, I think, through our calls for still.
It was, but it's down today. Do you know what I mean?
I think we're probably.
Because I know it would be a loss because of volatility.
Here, we had the 63-66 call spread.
Oh, okay. Well, it's not that bad.
And it's going to open at 65. So it's still right there.
It's not that bad.
No. But then we just took that off and sold that out of the money SI call spread just to give us more room.
Yeah. Pretty interesting.
Okay, cool. Yeah. Okay. So I think like smaller scale SLV, you could do spreads in SI. I like this. I like the spreads in SI or SLV. And you talk about naked options. Look at this. So let's say you want $1 and $1. You're going up to the 105.
Wait, hold on. And look at that dotted line, Jenny. That is 2 full standard deviations.
It could be 3.
Is it 3?
I don't. No, 2. 2 standard deviations.
Got a little excited.
So 105, and to the downside, I don't think you're gonna. Where are you gonna go? 50, 54. 54. So you're getting $2. Look at this. You're getting $2, and you're using only 650.
Look at the buying power. It's pretty good.
I know. This SLV strangle doesn't look bad.
It looks very enticing, but it's a little scary.
Because your break evens are. Let's go to the analysis page and take a look at this.
Now, because there is so much implied volatility.
Oh, we've got what do we have? What is
We're short 17 shares of silver.
Oh. 14. Here we go. I'll take them off. Okay. So this is crazy because to think in silver, you can get this wide where you've got your break evens are around 52.
But this is for sure call skew. Look how high that call is.
And 107.
In the next 51 days. That looks pretty good.
70, 80, 90. Yeah. Yeah. I mean,
now it's funny because we forget this. You cannot trade this right now. You can't, I can't be like, press that button, Jenny Andrews, because the market's closed. But you can trade SI options right now.
Right. But we already have, we don't need to add any more to it.
It's kind of funny because my brain is so used to us doing the show during 10 o'clock that I was like, ooh, press that button.
Honestly, that strangle looks appealing a little bit.
I know. We'll circle back at 8:30 and see what happens.
What price did we sell? Okay, so if you think about it, we would get long at 50. Like our short put was 55, 54 and a half, 55, and that's exactly where we sold our silver, 54.84.
Yep.
So might not look as appealing as I thought.
As you originally anticipated. Yeah. Okay, let's go to the next question if we can. Our super producer John. Okay. Oh, I love this one. How did you get your kids interested in trading? Johnny, I'm going to let you go first. Now, it's only the boys right now because the girls are too young. Our girls are 17.
So I'll tell you that it's weird because our kids have grown up in a house with a trader. My son really didn't get interested until he started actually making money. That's true. Like we opened an account and I would sit there with him in the account and we'd put things on, and he didn't really care until he saw himself making money. It took you're going to open this account. We're going to do this. You're going to learn this. And it wasn't until he started making money that he's actually got interested, and his girlfriend got interested. And his girlfriend's like, well, why do you even need to be an engineer? Why don't you just be a trader every day from home? because they didn't
She's
realize.
probably seen Jack Tucker's tweets.
Oh,
Right? She's like, why can't you just be Jack Tucker and call it a day?
so he was never, it was hard to get him interested. I don't know about JD.
Oh, I mean, I do love my son, and I'm not tossing him under the bus. But JD only got interested when, number one, his friends were very interested. Like, so when he was in high school and we brought him down to the show, we brought his two friends who were seniors, and they wanted to trade. They thought that's what they were going to do. That summer, they spent the entire summer trading instead of working. And one made it, one didn't. And I think you know which one made it. Which one didn't. So that's how we originally started to get interested. And then I will tell you, like, options trading only became, once again, it can't come from the mother. It's got to come from somebody else. Then he started to become really interested in options when one of his fraternity brothers was. So he's got a fraternity brother who came up to him and he's like, what does your mom do for a living? And he's like, oh, she, and I don't even know what JD says, but he's like, is your mom Liz Deerking? And he trades options, and he trades SPX options, and he's very conservative. And that's kind of what turned JD into it. And so I'm not saying that it's peer pressure, but what I think happened is getting a trading buddy, right? So if I had to actually articulate it, it's getting a trading buddy.
I think that's a good point. Having a friend who wants to do it too.
Yeah.
I do think that's a good point. And honestly, when my son joined his, I don't even know if it was his engineering fraternity or it was his dorm freshman year. There was a girl in his dorm who knew me, who had seen the show and said same thing, like, is this your mom? And so I would bring her like t-shirts and Tasty swag. And I was like a little celebrity when I came down to visit, and she was in the dorm. It was funny. But then they have a little more interest when they've got like other kids interested. So I think you're right. If they could have a buddy, I honestly think with Lily and Annabelle, we should have a little session with them where it's like, we meet this day at this time over the summer, because then they'll both be, Annabelle will just be 18, Lily will be almost 18, where we have a little, Annabelle and Lily can be each other's trading buddies.
But, I do think this is going to sound, that's what I love about Tasting Nation as a whole, because we are people's trading buddy. You look at the chat, they're all talking to each other. We talk every single day about trading. And if we weren't doing this live show, I called Jenny probably 20 times a day, and we talk about dumb trading ideas and then hang up the phone on each other. That's just what we do. That's who we are. Some people don't have an interest. And I feel bad. I think everybody can trade, but just like we have a very good group of friends, We've all been together forever.
Breaking news, Boozer Green.
Oh, really?
Yeah.
Dreams come true. Okay, so, but we have a big group of friends, and all of them have a little bit of money now, right? And none of them are interested.
None of them are interested, but maybe
you have to have a level of interest. Now, I use that analogy because of cooking, because I understand it's healthier, smarter, and better for you if you cook. I have no interest. Okay.
But I think it would be, especially as people retire. I know this question was about our kids. As people get older and retire, it would be a very nice hobby or interest. As your, I don't want to say like as your body starts slowing down, but my parents, they're both retired and they've been active. They've been very active. And my mom is very busy. She's a busy person, but now she's starting to have a little more downtime than she used to. And she's spending all of her time playing Mahjong or whatever it's called.
No, but I do think traders, and that's why the age of people who watch us, especially options traders, not so much with the SPX 0DTEs, but with our traditional viewers of our 45 days till expiration, the churning, like that kind of churning. I always use this this quote from Captain Ron: when you have a little bit of coin in your gene and a little bit of time is when you kind of find that you can manage your money better than somebody else can.
Wait, who's that?
Have you ever seen the show, the movie Captain Ron?
No.
Oh my God, it's Kurt Russell. They're drinking on he's got like a 10-year-old drinking beer on a boat with him. He's like, now that you got a little coin in your gene, how do we make this interesting? Well, it's like once you have a little bit of money and a little bit of time is when you kind of learn that you can do it yourself. I don't know.
So, and I think it's a nice hobby because it's a hobby that you don't need. As you get older, if you've got more time at home where you're not out and about as much as you used to be, it's a hobby everyone could do till they're like Liz and I say we can do this in the nursing home when we're 90.
We used to joke around about the fact that I won't be able to see and you're going to have to describe it to me. Then that actually happened. We had to practice through that when my eye problem happened.
I wonder if there's gotta be, like, my mom helps with this group of people who are like the visually impaired, and I wonder there have got to be programs where, let's say I hover over the puts, it will tell me like 65 put, 89-cent bid, like where it'll tell me what I'm clicking on.
The program is you. You're going to sit next to me in the nursing home. You're going to sit next to me in the nursing home. Okay, we have 10 minutes left for this last question, which I know is going to take a little bit of time. Okay. I'm very excited about this one too. So, John, back to our last question of the day, please.
Fire it up.
I know what it is. If you'd like me to just tell you what we're supposed to be doing.
Last confirm and send it.
1 minute.
Oh, here he's coming. Spooz up 350. Let's spooz up 350. Rally. I don't know why we left ourselves with these SPX calls, and I'm leaving my deletion today. I'm just gonna let it go. I'm just letting it ride.
You're just gonna shake it and let it ride. Okay, so can you please? And this is to you. I think this is love, Liz. Can you please? I wrote this in. Can you please walk through how to use the back testing feature? And once again, my back testing feature is Jenny. So she's going to show us.
Oh, here, we'll go to the platform. You could tell me something you want to back test, and I'll back test it. Let's see what I can do.
Okay, so we're in
booth up 450 now. So this is going to be a December to remember. Here we're going to have a December 31st where we're up. I guess last year we were up like 12, 13 points and then down on the end of the day. But we're gonna change that trend. We're gonna be up on the day and up at the end. Who's up for a 100-point rally?
Me? Just
7,000.
I want my yes.
Can we get ES 7,000? All we need are 52 points to hit ring that 7,000 bell at the end of the day.
Someone in the chat just goes, if there's a rally in the alley, clap your hands.
There's a rally in the alley, clap your hands. If there's a rally in the alley, clap your hands.
There's a rally in the alley. There's a rally in the alley. There's a rally in the alley. Clap your hands.
I mean, the song from the trading floor is, there's a rally in the alley, get your stocks. There's a rally in the alley, get your stocks. We'll see. I know TP wrote his cherry bomb about looking for a down move, but I feel like we've already had, even though we're near all-time highs, I feel like we've already had a down move.
I know he talked about a down move, but when I'm talking that slow, I didn't hear the words. I don't know.
You just read it. You just sang it. You just sang your old Lang Syne song.
I don't exactly know what the words were. That's how they slow me down when we're doing like the teleprompter. I don't even know what I'm saying.
We've done a teleprompter like 5 times in our life for filming some commercials and stuff. And Liz just reads it. She could be reading anything.
And the person was that correct? I was like, I don't know. You were rolling it too slow. My brain could not absorb it.
Okay, so back tester.
Okay, back tester. Let's back test. I'm going to take something general that was one of my biggest losses. Okay.
All right, hold on. Let me get to it first. So it's down here. So you've got your positions, trade, activity. So scroll down.
Okay.
What's the question mark?
No idea. It's a question. The world may never know.
Okay, so here, right above the question mark, you see this button here.
It says back testing up.
Back testing.
Okay.
There we go. Click it. Back testing. Loading. And here we have it. It's all pretty easy, right? It's all self-explanatory.
Okay, this is what I plan to do in the new year. And the chat, this just came to me now, and it came from the chat from before. We looked at MCL, and it seems pretty good. I want to do a Jade Lizard in MCL every single month.
So
then let's use a proxy. I don't know.
I'm looking. So I don't know if the futures are here. I don't see the futures in here.
Okay, then I'll go with my original.
We could go to
do IWM. It's got dollar wide strikes and it isn't up nearly as much as the triple Qs. I want to see if I consistently stay with go to IWM.
Let's compare. Okay, so let's compare in IWM a Jade Lizard to a Strangle.
Okay, let's do it.
Okay, and we'll go back. We're just going to do this year.
We are kind of cherry picking only because IWM did not go up nearly as much as like triple Qs and SPY. But that's my goal. Is I want to do a Jade Lizard or something in IWM.
I'm just kind of curious to see if a jade lizard would have outperformed if it's like what outperformed this, what was better, strangle or jade lizard? I'm not sure. Okay, so in IWM, you have to sell. So a jade lizard would be sell, a put, and what delta?
So, you have to pick a delta.
Yeah, so with a jade lizard, probably about a 16 delta, I'm going to guess.
Yeah,
I'm just going to go with 16 delta.
Okay.
So 16 delta put, expiration
45 DP.
45 days. Okay.
So this is pretty self-explanatory. If somebody wanted to use it near a term, you can. You can see if it's better to do it. Okay, so you are.
And then you're going to sell a call. But if you're doing a call spread, honestly, it's got to be more like the 30 delta, I think, or 20. Okay. Let's go with this 27 delta call with 45 days.
Okay.
Sell that 27 delta call, and then you're gonna, because you're selling a call spread, so then you're gonna buy a call, and you'll buy like the 25 delta call. That should give you about this 20.
That's gonna be close.
I'm gonna check it. I'm gonna go to IWM and just check our work here.
Okay.
So 45 days, 16 delta. I better use a monthly. I'm gonna use a monthly.
Yeah.
Because we're not in a monthly.
That's new though. Those strikes just got added.
But if we're not in a monthly, we're not going to get dollar-wide strikes for those call spreads.
Yeah, but that's brand new.
It's taking a while to fill.
Well, no, it's new. It just got added. Just go to the 44 day. I want to see what it looks like. Yeah, that's got dollar-wide strikes, but it's not filling.
I know. It's just like taking long to load. I mean, we're not even open yet, so I don't know. It's taking long to load. I'll go back to the back tester, but I think we're probably close.
Just show us how you do it. So like that was the question, is how do you use it? And it is pretty self-explanatory. So you go to the back tester, then you go to the symbol you want, and it back tests from, and can you pick for a longer distance than that?
So you pick. So I just picked a year, past 12 months, right? I picked like for the last 12 months, December 30th of 2024 till December 30th of 2025. And then you set your expiration time. Now you choose here, enter a new trade every day. So basically if I said 45 days till expiration, every day it would put a new trade on at 45 days. And for me, that's not how I trade. I'm not putting an IWM jade lizard on every day. So I'm not going to do that.
But I would have one on when one comes off, one rolls on.
Yeah. So you can have that. So not every
then on exact DTE match. So no, because you'll have daily where it'll be on 45 days.
Here, so limit number of active trades.
There you go.
So if I say limit number of active trades, only have a certain number of trades open at the same time. So
that's great. Is that a new feature?
No, it has this. So don't limit number of only have a certain number of trades open at the same time. Choose what to do when the limit has been reached. So let's say we want to have 3 on at a time. We don't mind 3 on at a time, right?
Yes. Then don't enter a new trade.
Then don't enter a new trade. Yeah, then don't enter a new trade. Yes.
Okay. And exit at a specific DTE. So exit at 21 DTE on the next column.
Yes. Exit at 21 DTE.
Okay. I don't want the stop loss in there, but take 50% out. No, it's a jade lizard. Take 40% out.
No, I think so. My personal opinion from running these back tests, my personal opinion is if you exit at 21 DTE, that's when you have your 50%. Like, I think if you're exiting at 21 DTE, it doesn't matter. You're not going to hit 50% before that.
That's what I'm saying. Take 40%. So when it says percentage of profit, take 40%. I'm fine with that if I get out earlier, and then I'll put on a new trade.
Okay, so take 40%.
Yeah.
Okay.
On that back test, Johnny Andrews, and then we got to take a break because we have.
Then we're almost out of time. There's an error. There must be at least 3 deltas difference between. Oh, okay.
Okay.
All right. So I got to make this 25
to 28. 3 deltas.
Or
we get 28 by 25. There you go.
So we're selling the 28. Okay. So that was clear on the problem. Run back test. Here we go. I do them end of the day, strategy, profit, loss. Now, this is only having 3 on at a time in 1 year.
It's interesting because look how high it was in 24. And then when we had that dip in April, it takes forever for the P&L to come back.
Oh, because you lost on that naked put.
Yep, because you lost on that naked put, so that your P&L does not recover that much.
I want to see. I'm going to go back. I want to see if how do I go? Now I want to go back.
No, but honestly, Jenny, you showed me how to work the back test, and people can play with it and tweak it.
I just wanted to see if we removed this take profit and just left it exit at 21 DTE.
Let's see.
I just want to see how it changes.
It doesn't change much at all.
Doesn't change much. So basically this springtime, and we said that the other day, with the losses we incurred in this move down, it took us a long time to get those back.
It did.
And you're like the losses you would have had on those naked puts.
But the point of this is I love being able to run these back tests. Everybody can do it. We used to rely solely on our research team, and now it's out there for everyone to use, and they are constantly making improvements on this back test.
But honestly, this is interesting. It is interesting. And this maybe, there are people who will say if an option hits at X times loss, they might close it. And maybe this is maybe that makes sense here. And they were only looking at 1 year, but we had that big down move. That is the down move. All right, Jenny, we got to keep an eye on time. You and I have to take a quick break. And when we come back, we've got an options jive. So okay,
look for this.
All right, stay tuned.
Forbes.
Tasty Trade's Money Match event. Unlock 30 days commission-free trading. Plus a 1% cash match on all qualifying deposits to jumpstart your trading when you open and fund a new Tasty Trade account. Level up your trading experience with active trader mode, smart order tracking, risk analysis tools, dynamic watch lists, and more. The Money Match event starts now, exclusive to new Tasty Trade customers.
Your crypto needs a wallet, and crypto is better when it's tasty. You can now do more with your digital currencies with the Tasty Crypto app. We're proud to offer a self-custody wallet for Bitcoin, Ethereum, and Polygon. Transfer your digital tokens directly in-app and access thousands of tokens available only on-chain. Your wallet is your key to decentralized finance. Download the Tasty Crypto app and get started today.
Ready to take your trading skills to the next level? Dive into the world of stocks, options, and futures with Tasty Trade courses. Whether you're a beginner or more advanced trader, our courses can empower you with the knowledge to succeed. Watch as our team in Chicago shows you how to use the Tasty Trade platform and go over the basics of trading. Perhaps you'll learn about a new strategy or a potential product for your portfolio. To find our courses, go to the Manage section of our web platform or head to courses.tastytrade.com. Start taking control of your financial future. Visit our courses today.
What's up, everybody? Check out my new series, Life Cycle of a Trade, where I show you my real-time trades with insights into strategy selection, adjustment mechanics, all the way to the closing order for all of the tastylive core strategies. Look who's back testing. Tasty Trade now has options back testing for free. Test your trades with over 10 years of data for the most popular symbols. See how your trades would have performed in the past. Look back at profit and loss and take the guess out of guesswork. Oh, did we mention that it's free? Get back testing at Tasty Trade.
Grow a strong community with Tasty Trade's referral program. When your friend joins Tasty Trade, you'll both receive $100. As your community grows, you get more bonuses. The referral program runs through December 31st, only at Tasty Trade.
It's options. Jive.
Are you ready, Jenny Andrews, for the last option jive of 2025?
Yes, last option jive. It's so funny because I don't know if you were listening to Jamal and Mike yesterday, but I think there was a period of time where one of them thought that this was that we were actually in 2026.
What?
I do there have been times where I am like writing out a check and I have to say, Alexa, what year is it?
Hey, I forgot the name of somebody that I've known for 27 years yesterday.
And I knew it, and I'm terrible with names. I'm terrible with names. I knew it, and you didn't believe me.
I know. I actually do believe it's because she did drop me on Facebook. So that's probably why. I was like, they're dead to me. I need to
unfriended you. Oh my gosh. All right. What do we have going on today with Option Jive? End of year portfolio review. These might be good tips that I could use.
They are good tips. I'm going to actually I'm going to be taking notes while we're going through this Options Jive. Right. There are some tips that we can use.
All right.
First slide.
Happy New Year Eve. Happy New Year's Eve. Do you know, did Jacob make this?
Yeah.
That's friendly of him.
I really like the enthusiasm of the exclamation point, and you know that I like to put exclamation points on things, so I appreciate this. Okay, so the calendar turning over may be artificial, but now is the perfect time to look at the 12 months of data and ask what worked, what didn't, and what am I doing about it? Right?
Okay, what actually changes on January 1st? Broker year-to-date displays reset to 0. So we talked about that. If you want to see what you've got going on this year, take a picture of it.
Save it in your memories, and you can always look back on it.
New tax year begins for reporting, and a fresh mental slate.
If you let it. So Jenny's trying to hold on to what it looked like by taking snapshots. I don't like to look back. I like to say it's a new day, it's a new dawn. Just like Michael Bublé. Is he the one who sings that song?
A fresh mental slate. If you let it, I'll tell you that in order to be a happy trader, you have to have a good mental attitude, or you're going to be miserable, or this isn't for you. Like, you have to be able to clear your head, move on, not dwell in the past. Like, you have to.
Yes. And if you can't tell, you can't take it too seriously. Like Jenny and I are constantly laughing about, I'll laugh at her P&L. She laughs at mine because that's the only way. We're very happy when the other one wins, but you have to take it all with a grain of salt, right?
I mean, you have to. And I that's what I'm really trying to instill in my son right now, because he's seen his account have swings, right? He's seen it. And I think that's good because I'm trying to teach him that you've got to be able to have a good mental attitude in order to keep trading when you see these swings, right?
Right. And so we have this, my brother has this saying in his kitchen, it's not the amount of times you fall down, it's the amount of times you get back up. And that's true of this as well, because you are going to fall down. If somebody tells you that their P&L goes straight up, they are known liars, right?
You're looking at that IWM backtest and seeing it took there was such a loss on those short puts in that down move in March and April that it took from then to the end of the year to get that money back. Do you know how many people at that time would have given up and been like, I'm not doing this again?
A lot.
Yeah.
Yeah, it's pretty big. It's pretty big. Okay, so what doesn't change at the end of the year and tomorrow or Monday morning when you wake up or Friday when you wake up, your positions, your open positions and their P&L. So you can see the P&L, a year-to-date P&L will change, but not the open P&L.
And your account balance, so your net lick, that's not going to change unless you pull all your money out. If you pull some money out or add some money in on December 31st, your account balance, your net lick, that's not going to change.
And then he's trying to go slimmy on us. What doesn't change? Your trading habits and patterns. So if you want to change something, take a look in the mirror. And what you learned or didn't learn in 2025 doesn't change either. Okay?
All right, we got through slide one of 6, where I think we'll be good. I think we're going to make it we'll make it for opening bell. Finding your data in tastytrade. Let's go. You have a complete year of trading data. Most traders never look at it. Don't be most traders, Liz.
I know, I'm trying not to. Okay, so access your month-by-month position and P&L via My Account statements. And so they have it circled right up there. If you look at it, that's the top of the tastytrade. It says My Accounts. I've never used that before in my entire life. I am most traders.
View a symbol by symbol trading summary under history year to date. Now, I do use my history.
I use the history year to date, and you circled that as well too. You see that where it's like got that little, yeah.
I do like to look at that, see what's going on. I definitely like that.
I think it's shocking to me sometimes when I look at history year to date.
I like to look at that, and that's where I'll sort, best P&L, worst P&L. That's where I'll see like, oh, what's at the bottom of the barrel, Hims and Upstart. What's at the top? My year-end winner this year is not what I thought it was going to be.
What is it?
Intel.
Is it?
Intel's my biggest winner on the year, and I thought for sure it'd be Oklo.
It's with a heavy heart that I tell you mine.
Why?
Hood.
Oh. That's fine. That's fine. I'll forgive her. Someone told me once to get rid of all my hood, and I did, and it was $19, and I never looked back. I've got a good mental attitude about it, Liz.
Oh, you don't. You're always... Okay, but for the quants at home, go to your history, transaction, filter by option and year to date, and then optionally refine by symbol.
Sure. Yeah.
Export. This is where this is for the quants. Export the CSV, I don't know what that means, for spreadsheet analysis. Each trade leg appears in a separate row.
Now, there are people who like to do this. I'm not going to spend any time on this. I've got about, there are people who like to do this. If you've got a lot of free time, I don't have a lot of free time, so I'm not going to export the CSV.
Wait, Jenny, but this is how Jenny Andrews would do it, though. Wait, hold on. So the action item is export your transaction CSV and screenshot your year-to-date summary page
before midnight tonight.
That's what you've been saying all along, is you're going to take a screenshot.
All I do is screenshot like the main page, but maybe I'll screenshot the
CSV,
just the history, like actually the history of each product and stuff. I could screenshot that. All right. Next slide, John. But if people want to there are people who are into this, and then sure, go for it.
I agree. Okay. So now some metrics that actually matter. Okay. Your broker shows you total P&L. That's not enough. Let's dig deeper.
Okay. Win rate, but context matters.
I think then you go down instead of across.
So, right. So I've never at the end of the year looked at my win rate. Let's see where I can find it. Number of winning trades over total trades. Example, 70% win rate sounds great until your average loss is 5 times your average win. Win rate alone tells you nothing about profitability.
How do you find your win rate?
I have no idea. Maybe it's in the CSV.
I'm going to download that thing immediately following the show. Okay, and then your average wins versus average losses. Are your wins bigger than your losers? If your losers are bigger, then you need a higher win rate to break even, which is true. I just want to find out how we find our average win rate.
I don't know. I have no idea.
So I don't consider, hold on, win rate is not, it doesn't look like, oh, if I'm down, I'm just throwing random numbers. It's not going to be like if I'm down $10,000 in Hims and I'm up $20,000 in Oklo, that doesn't give you your win rates. You know what I mean?
That's what I'm saying. Like win rate would be like each trade, what trades won and what trades didn't. And it's probably somewhere. Obviously, if Jacob has it, it's probably somewhere. I just don't know where. And I love the lightning bolt where on there it's like 70% and then it's like blowing that up because even if you had 7% winners, you might not be a winner.
Agreed. You might not be a winner. You know what though? And that's why this is a delicate balance, because we look for high probability trades, but you have to have more winners than losers in high probability trades.
Hey, we talk about this, like you need to have, we talk about it a lot with the SPX. You need your winners to make enough so that they can offset and then some for the losers. That's why.
Go ahead.
That's why sometimes those high probability trades that have a 90% probability, there's so much risk in those. If you have a max loss, it's going to take you too many winners to make back that loss.
And that's why I feel like my biggest game changer for this year was having Jacob give us the SPX 0 DTE studies, which I am praying. My goal for 2026 is to have him continue to do this and build on it. I mean, I'm putting it out into the universe, so hopefully it happens. Because what he did for us, which was great, is show us if it's a high probability trade and then what your actual P&Ls are if you did it every day. Because it is daily, right? If it's an SPX 0 DTE, it's daily. And it showed you what your profits and losses added up in that actual thing were. which I thought was fascinating.
Yeah. No, those studies have been good. Those studies have been good.
Yes.
But, game changer for me is collecting more. Like we were going for bigger profits, collecting more bigger profits because
your drawdown is less than.
Yeah. Okay, strategy specific performance. Looking at credit spreads, naked puts, which structures made money for you? Credit spreads versus iron condors versus naked puts. Don't trade what works for others. Trade what works for you.
I love that Jacob is totally going Slimmy on us. Slimmy was one of the OGs at Tasty, and he was a would you say he's an options counselor?
Trader psychologist.
Oh, there you go. I was saying options counselor. It's a trader psychologist.
All right, next slide, John.
Okay, positions crossing years. Gains and losses are reported when positions close, not when they open.
Yes, open to trade in December 2025, closed in January 2026. That's a 2026 tax event, not a 2025.
Okay, I've got a lot of positions that have been opened over years that I haven't closed, and then open positions equal unrealized. Okay, if they're open, not on your 2025 tax form. Yeah. Okay.
Year-end loss harvesting. Common strategy. Close losers before December 31st to realize losses. Can offset gains from earlier in the year. Must be a genuine closing, not immediate repurchase.
Okay, and then this is I can't believe there's no exclamation point after this, but tax rules are complex. This is general information, not advice. Your situation is unique. Talk to a qualified tax professional. I agree.
So, and I know Mike and Jamal were talking. It sounds like they both use just like they input because on Tasty you can go and download all all the information you need, all your tax forms you need, and I just download those and email them to my accountant. Sounds like they download them and take them right to put them right into TurboTax. Sounds like they do their own, but I have never done my own. I just let my accountant do everything.
I have never done my own either, but I also will tell you, you and I have been trading for a long time, right? So. And we've traded through lots of different account sizes. And I think when it got to the point where our accounts crossed a certain area, you need a professional.
It's so funny because when I was a trader on the trading floor, we all had, because when I was trading, you were a little different, Liz, because you were trading for a firm. So you were trading for a firm where you got like a regular paycheck, where I was just trading one man's money, but just trading like on my own. It wasn't like a regular paycheck. So at the end of all the guys in our group, we all used the same accountant. He was way up north. I had to drive up to like Skokie or something I would take this like big stack and just, here you go. Have it. Like we all went to the same guy.
You almost needed back then somebody who understood what you were doing. You couldn't go to like H&R Block and just hand H&R Block that stack. And that's why now, even when I print out all that stuff, I still kind of need somebody who understands what I'm doing. There's so many different accounts. She's always asking me questions. Do you know what I mean?
Yeah. Yeah. I wonder where my I wonder how this will fall on my taxes, where I put the down payment on to buy a rental property and then that got canceled and I haven't gotten my money back yet.
Did it get canceled?
Well, they have till today. They have till end of day today.
They have till midnight.
Next night.
Clock's ticking.
I wonder how that'll fall on my taxes this year.
Well, it'll probably be next year. They're going to give it back to you next year.
What if I never get it back?
I'd be so mad. Okay, let's go to number 5 because we've got about 12 minutes left before opening bell. Okay,
goal setting for 2026.
All right. Let me ask you this. I'm just going to read you this thing. Set return targets based on your data.
No, I don't.
That's what I was going to say. No, you can't do that.
I don't think so. I think that would like not be good for your mental state, because if you don't hit your target, like I live with someone who's in sales. As something I never want to do. I never want anyone to give me a target and be like, this is your target. That no thanks. That's why I'm not in sales.
This is your target. It doesn't work that way in trading. That I agree with what you just said there. You made 8% in 2025, target 10 to 20. And the reason I don't think that is because I think It depends on what you're doing. It depends on what you're doing. If you are just in there and you're just trying to beat the market, sure. But
Yeah.
we've talked about this before. Our targets are a lot bigger than what the market is doing. So that's just it is with how you trade. And I think that's what old floor traders kind of understand is I'm not going to put a target. I want it to be astronomically high. If I get to 10, I'm not going to be like done for the year.
No, and again, it depends on the people, right? It depends on the people. So if I've got my parents' account and my in-laws' account, and their targets are very different because their money is not. I don't want to have their money. I don't want their money like too much at risk, right? So their targets are very different. So for them, like we do have targets, and some people might be like that. But for you and I, who've been traders for decades, like my target is much bigger than I would put in writing. If someone saw it in writing, they'd be like, what the heck?
Yeah, correct. You can't write it. It's just in here. It's in this black box. Okay.
Here.
I just want to read these bullet points because I read the last one and it made me laugh. Okay, I'm going to read the next two. You lost money in 2025. Target small, consistent wins first. I mean, everybody wants a win. That's just it. Is you can't be like, oh, I'm going to. Do you remember the one year when we first started and you're like, I'm going to put all the winning trades in this account?
I'm putting only the winning trades in this account, and this other account is going to get all of them. And you just don't know what they're going to be. But I guess. When I see that, when I see small consistent wins first, that reminds me of TP style of trading. That reminds me of just like small narrow credit spreads where you're taking them off, where you're just kind of I don't want to say like baby trades, but like little trades, like little high probability trades.
Yeah. And that's kind of the tasty method. But this is what made me laugh. This next line. Compared to your baseline, not Twitter flex posts.
No, and it doesn't upset me when I see Jack Tucker taking in 53,000
nothing makes me happier. I root for people to win. I want him to win.
Hey, Jack Tucker, I did set a target. My target for
is to be Jack Tucker.
Right. No. Honestly, I was just saying to Liz, like, hey, I don't mind. SPX is not SPX is a very small part of my portfolio, right? So I said to Liz, like, I don't care if I make $200 a day. My goal in SPX is like $250 a day. If I make $200 a day, 52, how many trading days do we have a year? 250?
252.
What am I? I mean, basically like $50,000 if you make $200 a day in SPX on average, if you could average that. Yeah. Right. You're going to have some wins, you're going to have some losses, but that's, smaller fry for me, but SPX is just like a small piece of. But
like I said, I've got my son's small account in 2026. He's going to every day be putting the SPX in, and that's it. So it's a very small compared to baseline. He's not going to try to flex his muscles. Although when I taught my brother the SPX, he's like, "Why can't I do it by times 100?" I was like, "Oh my god, I can't even deal with him." Okay, so let's keep moving forward.
And I want to clarify this just for like legal purposes. I'm not saying like you'll make $50,000 in SPX if you average $200 a day on 250 trading days, it comes out to $50,000. But
for legal purposes.
But I'm not saying that that's going to be easy because there are going to be losers. But my goal is to average $200 a day in SPX. That's just my goal for next year.
And honestly, that's a very manageable small goal for your style trading and your size account. Fair enough, right? Okay, now strategy refinement. What worked for you? Do more of that. Modify or drop what didn't, and be honest about what you actually execute well.
So with last day of the year, we're doing what didn't work for us. Like we're just long SPX calls for the last day of the year. And if I look back at my account, what didn't work for me, it's putting on long SPX options and thinking I'm going to hit it big.
So listen, here's the deal. We are parents, and we really want you to do as we say, not as we do. Is that fair?
Yeah.
Do as we say, not as we do. Okay.
All right. Where are we now?
Position sizing.
Okay. Account grew. Consider sizing up proportionally. Account shrunk, must size down. Now, that's a hard one on both ends, right? Like account grows and you got to get bigger, or you don't necessarily have to have your size get bigger, just change to higher priced products. And account shrunk, I mean, that's tough. It's tough to scale down, but sometimes it has to be done.
Yeah, sometimes it does have to be done. Okay, process goals versus outcome goals. Bad. Make $10,000. You can't control the outcome. Good. only trade IV rank above 50. You control the process, but it's very rare.
Yeah, it's hard to find that.
That's one of the hardest things to do.
Yeah, like it's tough. All right.
The other good is journal every trade same day.
I don't like that. I mean, you people do it, but I don't. To me, it's a waste of time.
Did you just say you people?
No, I said some people do it.
I thought you said you people do it, but I think it's a waste.
Do you know how many emails we get about do we journal our trades? No way.
No, I've never
And
journaled.
I'm not putting down Jacob. It's a great idea.
No, honestly, this is what a lot of people do need. This is, I mean, he's.
Hey, do you ever hear that saying, analysis paralysis?
Yeah, I have. I agree with you.
All right, next slide. I'm going to zip through this next slide in 1 minute.
We've got plenty of time.
No, we don't. It's 8:25. We got to take a break and be back for opening bell.
What is our sixth?
Last slide, please, John. Takeaway. Get your data today. It's available, but trickier to pull tomorrow.
Point. Review what strategies worked and didn't work for you, not for anybody else.
Identify your biggest mistakes and why they happened.
Okay, and set specific goals for 2025.
Adjust position sizing with your current account balance.
And most important, we'll go every other for here. You can't change 2024's results. Well, good, because it's 2025.
You can change what you learned from them.
And the best traders treat every year as continuing education.
Your edge comes from consistently improving your process. The end. We're going to take a quick break, and we will be back with the opening bell. Stay tuned.
Stay tuned.
Tasty Trade's Money Match event. Unlock 30 days commission-free trading. Plus a 1% cash match on all qualifying deposits to jumpstart your trading when you open and fund a new Tasty Trade account. Level up your trading experience with active trader mode, smart order tracking, risk analysis tools, dynamic watch lists, and more. The Money Match event starts now, exclusive to new Tasty Trade customers.
When the market moves, traders need to move faster. tastytrade Active Trader Tool offers full depth of market visibility, one-click order entry, and instant position management so traders can react in real time. While others charge for professional tools, tastytrade provides them for free. Opportunity can move fast. Seize it with Active Trader. Try it now on tastytrade.
Woof! The first half of this year's market has been giving the good guys the business.
It's certainly been back and forth for sure, Pete, and I'm getting whiplash over here.
With good mechanics, we can see Team Tasty stay strong in the second half.
Absolutely. Let's check out our starting lineup.
Tony Bat Batista, the John Jay College of Criminal Justice. Number 69, because it's one standard deviation plus one. And you know, I'm the Bat.
John McLaurin, Wisconsin, number 2, because I'm Beth's right-hand man.
Vanetta Logan, the Indiana University, number 3, because that's how many shots of bourbon it takes to make it through the first hour.
I like the looks of that lineup.
Well, be mechanical is always better than just trying to run plays to see what sticks, Pete.
When you got skin in the game, you stay in the game.
That's right. Now get off the couch and get into the game.
Watch Tasty Trade.
Global markets never sleep. Explore them with Forex on Tasty Trade. Get in on 80-plus Forex pairs, 24 hours a day, 5 days a week. FX marks the spot. Trade it on Tasty Trade.
Jenny, we made it before opening bell, the most exciting day of the year, because you and I are going to sit here during that bell and put on some trades that we literally do on the train.
Yeah, right. Normally, this is very exciting, and it would have been even more exciting yesterday, 8:30, if we were on the Polar Express train.
Oh, yeah, because that's the way things happen on the Polar Express.
Is that? I don't think it's from that. I think that's a different thing.
That is from the Polar Express.
It is?
Yes.
It is.
The one with Tom Hanks.
I only saw that movie once.
hot chocolate. That's
All right, I only saw that movie once, and maybe I fell asleep during it. I don't know
why I know that song so well? Because anytime little kids would get into my minivan, I would make my kids sing, because that's the way things happen on the Deer King Express, and they'd have to go, yes.
I do remember. I remember that. Okay, 8:29. Let's jump in the platform. We have the bell is going to ring, and we are opening the day. Green spoos are up 2. We're going to show you what we do at 8:30, what we've been doing at 8:30.
At 8:30, and then again at 9:05, we have 2 trades, and we should be able to do both of those, even if we're in what's your assumption or something else. We're going to jump into what we do at 9:05 as well.
So
here we go. Oh, we opened. Did we open down? I think we opened.
Wait, no. Oh, I don't know. Well,
it's okay. It doesn't matter.
So the only SPX trade we do at 8:30 is the calendar, and usually it's a 0-day, 1-day. I'm just going to put it at the money and take a look. The 68.95, 65. That's pretty cheap, yeah.
Now let me ask you this, only because I'm asking just to discuss. I know you're going to the at the monies. Why are you doing the puts instead of the calls?
It doesn't matter. I just went to the at the monies. I'm not this isn't one. We're not trying. This is a trade we're closing. We're not trying to let it roll off and be left with calls. Yesterday, Liz and I did it with the calls so we could just let the shorts roll off and be left with some calls. That's not the plan here.
Well, yesterday we laddered calendars because we wanted to be left with things.
Can I just ship this?
Ship it.
And then Or do we want it slightly higher, hoping that we're up today? So we can.
My only thing that I was going to say is I just like the round numbers. That's all I was going to say is if you have 6,900 as an option because you were 68.95, I would have done the calls. I would have done. I was just saying I like round numbers. That doesn't mean anything to anybody though. So now do the puts, but before you could do the puts on the 6,900, but before when you were separating, 6,900 was above. You know what I mean? That's all I'm saying.
Okay, 6,900. 690. All we're going to try to do is take 10% out of this.
10%. I'm trying to take $70. Yeah. But first you got to get filled.
It's tough because what was it the first time? 660.
But it was
this is we got to get this on the open because it changes quickly.
I just pay 20 cents over. Who cares? I mean, 20 cents over what we got.
I know, but it's tough because that's if we would have paid 660, 670. If this is one that on the open, you've got that we could be, halfway to out.
Yeah, but still just pay. We're live. You're killing me, Smalls. Just pay 7.
I don't like to pay up for these because I want to be out of these. If we didn't get filled, we didn't get filled. You know what I mean? Because already these decay so rapidly. That's why you go in right on the open.
But you can still see there's a lot of premium in those 0 days. Yeah, just do 10. Perfect. You still have $9 in premium in those 0 days. $10 in premium. It's not when you go later on in the day. If you're looking at noon, sometimes you're only getting $3 or4 for what you're selling.
There, we're filled. 705. Okay. 705, and I'm going to put in an order just to take 10% out of this. So close at 10%. So if we paid 705. We'll get out we'll take $70 out of it.
Sounds like a plan. Love it.
So that's working. And that, again, what's our risk in that? The $705. That's what we paid for it. So we're going to leave that.
Can we take a look at, only because we were talking about it today, let's take a look at silver. I want to take a look at some other things we were glancing at today. Bitcoin, it says, is up a little bit. Bitcoin's trading 88. That's a little bit of a rally, but not necessarily.
I don't know. I felt like I was trading. Well, yeah, now over an 89. Over 89 doesn't seem.
You know what's crazy? That says over 89. And then when I'm looking at the side where it says Bitcoin USD, it's 88.
I know. But I feel like.
I know. I get it.
This is the F6
future.
The future. But you're right. I do usually look over here. And as far as if you want to see from yesterday's close to today's open, just look at IBIT. It's up a little bit. Up 1% since yesterday's close. And we put on that new Jade Lizard in the 10-day in IBIT. So we'll just,
and that's working according to plan.
I'll put in a DPC.
Can we take a look at the metals because they are a hot topic?
Yes. So on the side here, you can kind of see where are they all?
I don't know. I don't know what you have up there, Tasty Default. But the chat is talking about how it's been crazy moves on the open in both the metals.
Okay, so GC down 0.5%, but SI.
SI is the hot topic.
Yeah, that's the hot topic, down 7%.
Yeah, that's what we were seeing. We were almost seeing this before the open, right?
It was down even more. It was down even more on before the open. And we saw, remember SLV? Do you remember the price it was showing before the open? 65. Yeah. And now it's 66.
Yeah.
So it was down even more pre-market. We have our SI short call spread. And again, these markets, you'll see this change so much because these markets are a little bit wide and they're just big markets.
Yeah, but it does look like a loss. Like if we're going to break this down, only because we know what we're doing with this, we have the 73.25. It's trading 72.5. So is it underneath it? Yes. Did we start when we sold this? We sold the call spread with silver underneath it? Yes. But the implied volatility, look at this. It was 105 today. Now 105 this morning, the IV rank, and now it's only 86 again.
Yeah, that's crazy.
That is crazy. So silver went down and the IV rank went down.
Yeah.
That is pretty interesting.
Let's check out. I'm going to look because the market's open now. I remember I was looking at that strangle in SLV of, is it here?
Oh, yeah. You still have it pulled up.
Yeah. So I still have it pulled up.
You were getting $2 and now you're only getting 173.
Well, IV rank was showing higher from like yesterday's prices. And again, silver was down more. It was down like 5% instead of 4%.
Yes.
Or maybe even more than that.
Yes. So, I mean, these are the biggest movers of the day.
Now, metals are something with the skew, with the way the skew is in metals, it's a product where a reverse jade lizard does work. Like, let's say you go to the downside and we sell the 56.55. Maybe I want more than 23 cents. So here, 57.56 put spread. I sell that for 26 cents. And then I sell a call for 84 cents. Reverse skew makes sense for a reverse.
You can go to the 100 and still collect over. Go to the 100. Yeah, you're still collecting over.
Yeah, so that's kind of nuts, right? You've got the 100 call. I'm not afraid of this reverse jade lizard.
Well, so here's the deal. As much as and this is what I love about jade lizards and reverse jade lizards of things of this nature, jade lizard takes advantage of vol skew. So in order to do this, you have to flip the cards over because the vol skew is flipped over, right?
Yeah.
So your two standard deviations are out at the 100. Now, I don't know that silver's not going to get to 100, but in my mind, is it going to get there in 51 days? Is it going to double again in 51 days?
Hi, who all in favor of putting in a reverse jade lizard?
Jenny, press that button.
This might be our only reverse jade lizard in 2025.
It could be.
Like, I don't think we've done a reverse jade lizard in 2025. Spoon's down 10. Spoon's down 10. I don't like it. I don't like it.
I don't like it either. I wish I knew when that big SPX trade that Ayla was talking about goes on.
Oh, yeah, we can
ship this. I think we should put this on. And if something happens next week and we get nervous about it, we'll close it. That's what I love about this and that's the one thing that was one of my takeaways the 1 year, I think it was 2 years ago, that you put it on, you don't like it the next day, take it off. As long as if you have over $25,000 in your account, if you don't like it, you can always put it back on.
Okay, so this is a reverse jade lizard. We've got the naked call and our risk is here. And then we make, the $105 anywhere in between. But to the downside, we don't lose because we've got a dollar right put spread and we're collecting over $1.
You know what's crazy, Jenny, is that put spread brings our break even to almost where our put was when we were going to sell the put.
I know. That's why the jade lizard made sense in normal products, because we would say, geez, all we have to do is bring the call in a couple strikes and we've got a spread instead of the naked option. Now in the strangle, we were collecting, it was like $1.70 instead of $1.05, but I like only having my risk to one side.
I do too.
And with this reverse skew, you could see the put, like you said, would have been right around here. The call is up at the 100 level.
Yeah. All right, press it. I can't believe I'm saying this. Go ahead.
Reverse jade lizard. Okay, and then are you pushing these out?
Yeah, I got it.
Okay. So I don't know. I don't know what to think about the market, but shouldn't be surprised after looking at every other December 31st.
I know we shouldn't be, but I was just very excited when it was
up.
When it was up.
And I was hoping for,
in the words of Whitney Houston, for that one moment in time. Right?
I almost made Lily watch The Bodyguard with me the other day.
Did you really?
Yeah.
I feel like that movie would be so old for our kids.
Do you think so?
Yeah. Yeah.
Okay. Someone just asked if we're taking tweets today, and we actually are. So we've got, look at this. I know this is opening bell.
No, we're okay. It's our show. We can do whatever we want because so we'll go. Let's take a couple tweets. Then we're gonna go into what's your assumption. And after we're done with that, we'll probably take a couple more tweets or just trade in our account.
Sure. Okay, so look at this, Mikey. Happy New Year's Eve, ladies. Don't know if you're taking tweets today, but here's my SLV Forest expiring today. So look at this setup Mikey's got going on, and crazy, Mikey. I love it.
But take a look at that, and also have the SPX Forest. So he's got two different, and I know Mikey's been working at this for the end of the year. He's been putting trades in consistently for a long time. Look at how many things he's got in SPX.
I know, but it's all green here.
Yeah, I don't even need to do the genie blink.
Good luck. Yeah, right. He can't lose. You can't lose.
We're kidding. Yeah, I mean, I'm sure there's a way to lose, but right now it doesn't look like it on that chart.
Fabio, Happy New Year's Eve to you too.
Fabio, Happy New Year's Eve. Now I know he's in a different country. I wonder what. Did you see that? You get little sparklers when you hit the up. I wonder what. Because it's New Year's Eve somewhere. It's already New Year's Eve somewhere, right? Australia. It's already 2026.
Yeah, I mean, I don't know, Liz. I maybe. Oh, it's midnight. Our show would come on like at 10 a.m. Our show would come on. It'd be like midnight in Singapore. Remember?
Oh, yeah. The Midnight Put Seller.
Yeah. And Steve Jones says, Ask Slim, Trader Psychology. Those were the show segments I loved in the early days. I loved the Trader Psychology segments.
I did love them. Yeah. I did love them too.
So we will be popping in and taking live tweets. We will.
Go underneath Mikey. I think some came in too. I want to make sure we got to everybody. So Frank the Great comes in with some things, which is awesome. And he's always telling us the volume. He's full of information. So if you are not, he puts it on Twitter for us, which we appreciate because you can look at it with the hashtag LIZJNY. But he also puts this stuff in Twitter. So if you're not in the, not Twitter, in YouTube, if you're not part of the YouTube chat and you want to go in there and kind of actually ask questions real time, he's wonderful at it. So pop in there and just give a virtual hug to our buddy Frank the Great.
And if you're in the YouTube chat and you have a question and post it in the YouTube chat, Frank will share it with us here.
And I try to keep an eye on it sometimes, but it's really hard while doing the live show. So sometimes I can glance at it, sometimes I can't.
Oh, and Ajit's going to be, he says, hang tight. He needs a few more moments to pass by. He'll be coming in with his trades of the day. Thanks, Ajit.
I love it.
All right. Okay. Do you want to take a break and come back with what's your assumption?
Yes, because we have 10 trades that we're going to take a look at. I haven't looked at any of them, so it should be fun.
Okay. All right, everybody, stay tuned. We'll be back.
Tasty Trade's Money Match event. Unlock 30 days commission-free trading. Plus a 1% cash match on all qualifying deposits to jumpstart your trading when you open and fund a new Tasty Trade account. Level up your trading experience with Active Trader Mode, smart order tracking, risk analysis tools, dynamic watch lists, and more. The Money Match event starts now, exclusive to new Tasty Trade customers.
Diversify your portfolio with stocks, options, futures, crypto, and more. Focus on the markets that matter to you. See the odds before you trade using curve analysis, IV rank, and more tools. Tasty Trade. Download today.
Your crypto needs a wallet. And crypto is better when it's tasty. You can now do more with your digital currencies with the Tasty Crypto app. We're proud to offer a self-custody wallet for Bitcoin, Ethereum, and Polygon. Transfer your digital tokens directly in-app and access thousands of tokens available only on-chain. Your wallet is your key to decentralized finance. Download the Tasty Crypto app and get started today.
Feel like your wardrobe is missing something? Like style, purpose, and maybe a dancing dog? Can I pet that dog? The new Tasty.
Today's episode of Market Measures is brought to you by SIBO.
SIBO is partnering with tastylive to provide educational opportunities for traders at all levels.
Grow a strong community with Tasty Trade's referral program. When your friend joins Tasty Trade, you'll both receive $100. As your community grows, you get more bonuses. The referral program runs through December 31st, only at Tasty Trade.
Jenny, we are back, and I really like that "What's your assumption" intro, John. You really outdone yourself with that one.
Yeah, right. It's different than it used to be. Or do we still have the guitar?
No. Barrel was the old "What's your assumption."
I'm ready. We're ready for it. Are you ready for it, Liz?
I am ready. Let's hit it. So we have 10 trader assumptions. So let's
There's the guitar. There it is. There it is. Okay. All right. Let's pull them up. First assumption. Let's go.
Okay, what's your assumption? There are 10 viewers' assumptions. They send them in. Jenny and I are going to take their assumptions and maybe place a trade. So what's on tap for number one? Okay, Jenny, you get this geared up in the platform while I talk, because we don't talk about what we're doing. We're actually going to jump back and forth between the platform. Apple, type in AAP.
Yeah, I got it already. I already have it up.
Bullish, Feb March, 121 setup, March 275 call. Okay, I'm going to read this. So 121 setup, March 275 call, short 295s, and long, hold on, I just lost it. Hold on, let me go up here. And long, we got to go back. And long 1 Feb 310. So I've got the strikes up now, so I can see it up here when I'm looking at YouTube. So you are March 275 call, short 295 calls, and long.
But here's my question: where are the 295s? Are they in Feb or March?
I believe.
This is like a crab. Yeah, here. This is like a crab because you're long the at the money in March.
Yep.
Long the at the money in March, and then you're short 2 at around the expected move, and then long 1. So this is your ratio spread, and it's a crab trade. So it's a bullish Apple crab trade. Want it to go up to about 295 in Feb, but not too far. And then you've got your March long. So 773. Sure, let's do it. First,
I'm going to push these out after this is all done because I'm looking at too many things right now. But just ship it.
Okay, Apple. We're in it. And who did that come from?
No idea. The slide's gone.
All right.
That came from Kev from LA.
All right. Well, nice. We've got it. We've got in an Apple crab trade.
Okay. Number 2, silver, neutral, Feb. Ooh, we already did it. This is Trevor from Sioux Falls. Highest IVR with fantastic premium. Momentum has stalled. Betting silver ranges next few weeks. Strangle looks amazing.
So we just did a reverse jade lizard, which is also neutral. So strangle, reverse jade lizard, we just put one on.
And that was already on the follow page, so we can put a check column and saying we did it. Trevor from Sioux Falls. So we appreciate it. We think it's going to stay within the range as well in February. All right, let's go to number 3. MOS. This is Marcus from Wilmington, Delaware. Bullish. 45 DTE, short-term neutral, long-term bullish. 45 DTE.
So this, to me, let's pop in the platform. A Mosaic is only $24. It has a 38 rank. To me, this kind of screams either, naked put here. You're only using $318 to make 70. Or you can do a synthetic covered call where your put is slightly in the money. You've got a little more profit potential. I mean, maybe a lot more profit potential. And that's only using $500.
So they're short-term neutral, long-term bullish. So premium selling in a put makes sense. Like that would, when they use that verbiage, that makes sense.
So here's Mosaic. It's really beaten down. I'm glad they brought this to my attention because I like stocks like this. Stocks have been beaten down, decent rank. And I think the only choice is, do we want the 22.5 put or the 25 put?
Well, I think you're fine with either, but I'm going to walk through why I would go with the 25 because there's way more extrinsic value in that 25 than there is in the 22.5.
I agree. So we're just going to mid-market here, $1.92. We'll see if we can get filled. Only $482 in buying power. Not bad. This is Mosaic. And I'm actually going to see, because this is... sometimes I look for stocks like this, and then if they enter the wheel, dividend 3.64. Sell at the money puts until I get the stock, and then turn them into covered calls and get the dividend, and you're cashing in on every end. All right, perfect. That one's working.
All right. So, and we'll push all those out when they get filled. It's kind of a little bit of wide markets.
I moved it down to 190, and then I'll leave it there.
It keeps getting away. That's okay. We're not going to chase this one. Okay. Next up in what's your assumption would be number 4.
Yes.
So let's bring up number 4 and what's your assumption? Okay. Gold, bullish. And this is from Russ C. from San Lorenzo, California. Look, just stay long. Buy a leap in GLD.
Buy a leap. Buy a leap. So with the 57 rank, I don't think I'm going to buy a leap, but we could put on,
Let's pop in. I have their strikes pulled up, so I just paused it up there. So they said buy a leap, 440, 465 call. Apparently they want if they're buying a leap, you got to go to the leaps, which would be December.
The leaps, you're going to Jan of 2027.
Yeah, go Jan of 2027. And they want you to buy the 440, 465 call spread.
$25 wide for $6.
This isn't how I would trade. If I'm long gold, I don't want to put $600 into it.
Or a year trade far away.
Trade.
And I guess that's something people would put on and just forget about it.
So what I would do in GLD, I do in GLD is I will do, when I am bullish in a metal and it's a $300 product, I'll do short-term diagonals and keep going with them.
Keep going with them. Now they're expensive in GLD. I'm going to do Feb March. So
what I do find about my short-term diagonals is they're very zebra-esque, meaning that if you continue to go up, you can continue to keep removing your cost basis. I know they're still expensive, but once you have locked in a profit, then it becomes more of a ratchet situation.
So here's the 400, 426.
No. I was saying short-term diagonals. Like I know you're in the 70, 51 day.
I was in the March Feb. Where do you want
that's expensive. I would go maybe like 10 day, 20 day. You know what I mean?
Okay, so if I go the 10-day and sell the expected move, and then
because you're getting a decent. What's happening in GLD because you have that I rank is you're still getting a decent amount. When I would stop doing these, if I go 10 day, 20 day, and I'm not getting $2 for the option I'm selling.
Right, and you want to make sure that you're getting positive theta, where you're getting more decay on your short term than you're losing on your long, and then like Liz said, you can keep moving these. Now this is still it's $11 wide, and you're paying $7.40 for it. So
but it's because it's so short term, you're not going to expect to make much money here. I put them on, take them off like after $100, then I move it up or move it down or move whatever. That's what I've been doing. We don't have to stick with that, but that's just kind of what I've been doing in GLD.
And if someone wanted to just have like a small bullish trade, like some small, you could make it as big or as little as you want. Like you could do a $2 wide call spread for 95 cents, or $3 wide for $1.40, or $4 wide for $2. Like you can make these as big or as little as you want, and pick your time frame. And
why don't you just throw a wrapped around the at the money debit spread in the 51 day? Just pop something in GLD, something very short. Because what I wouldn't do is go up far and buy a debit spread. You could just sell a put spread here. I mean, you could flip the cards over and go 99.97.
Yeah, with the rank.
Yeah, just do a $2 wide, 99.97. Call it a day. You're getting $1.
Yeah, and it's just a baby trade, but we're only risking $1. We're like getting $1, risking $1.
Then we can say we're in the bullish gold game, right?
And you can make that as wide or as narrow as you want.
Yes.
I'm going to leave it at $1. I don't want to collect less than $1.
No, I think that's great. It's kind of a chicken. It's a chicken-esque, but you can sell premium. We flip the cards over. It's the same thing as that debit spread, but when you have a high rank, it's easier to sell the out of the monies instead of.
I know we're down 10, but I kind of think we'll be up on the day. That's just my thought. But
me too. Here's to wishful thinking. Okay. Right. Next, what's your assumption, please? Oracle, Sam from Fargo, North Dakota, bullish. February, neutral to slightly bearish here. Decent IVR. Synthetic jade lizard.
Synthetic jade lizard. What did they say? Neutral to slightly
bullish here. Synthetic jade lizard.
So
let's pop in.
Okay, in my mind, synthetic jade lizard, you're still, you're selling a call spread and you're selling a put. But
I think it's buying something maybe.
Yeah. So in my mind, a synthetic jade lizard is buying something.
Okay.
So then I'd have to bring my put up. So I have a $10 white call spread and
buy the 160s.
And then I get that extra $2 to buy something. So I can define my risk.
So you're basically here, if you looked at the buying power went from 4,000 to 1,900. That's, I think, what he means. And I don't mind this.
I want to take less risk.
Go with the big lizard.
I don't think I want 2,000 in risk.
Go with the big lizard.
Make it like more like a big lizard.
Big lizard with a fat tail. I kind of agree with you. There you go. Pull it up one more.
Here.
There you go. Did you do one more? Can you even go one more?
Almost.
No.
Oh, I mean,
it's not bad.
You're getting only 500 in risk, but here, 800 in risk. That's not bad. I'll do the 800 in risk.
I like it. I like it. It's not bad. And I'm glad you brought it. It's more big lizard-esque. So she's selling the 95, 200, 210 and buying the 75.
So it looks like this. Like we have risk, but our risk is only $885. We've got this wide win range, and up to the upside, wherever it goes, we're guaranteed $115.
I like it. I mean, and we're making assumptions here on his, what's your assumption? That when he says synthetic jade lizard, he means something with a fat tail.
Yeah, that's what I would assume.
That's what that's the assumption we're making. Because it's called, what's your assumption?
Okay. All right. What's next?
Okay, next up, we're not getting filled on those, but that's okay. So SPX, 0 DTE, neutral. SPX barely moved this holiday season. Classic 0 DTE iron condors. Cole from Santa Barbara. And Jenny, this couldn't be timed more perfectly.
I know. It's almost 9.
6. Okay.
Okay, so I am going to go to the table page. And the 0 day. Now he's right. We haven't moved much.
Let's jump in the platform so we can all see Jenny's screen.
Now, there are a couple things we can do. What Liz has been doing is about a $10 wide right at the money, and you're getting about 370. Does that sound about right?
Sounds spot on accurate.
You know what? I'll just ship it.
But wait, hold on. I don't want it to cross streams though. So here's part of my problem. And I know you shipped it, but then I
didn't ship. I
will immediately butterfly it off, and then we'd be buying back our one short that's in the 0 DTE for the
And when she says immediately butterfly off, it only happens if it becomes a winner.
No, I immediately put the order into butterfly off.
Yeah. Yes. What I've been doing is a little more.
An iron condor. So let's do what you've been doing.
I've been doing just like 10-point wide for getting about between $1.50 and $1.60. It gives me a little bit of room.
Now they are looking at the iron condor. Would you ever put that in with like a $10 wide call spread or a $5 wide call spread?
You know what? I kind of like one side because otherwise you're stuck in it. I like to get out quick.
I
like one side.
And we'll put this in because, like I said, I do like my put spread, but I don't want to cross the streams of the calendar that we already have.
I get it. And then this, I'm going to put in a GTC for 50% because if we get a bounce up.
And keep in mind, puts are neutral too. You're pretty far down there.
It gave us some room. So that's the 68.70, 68.60, and I'll put in an order to close it for 50%. So we sold it for 180 if we buy it back for 90.
Yeah, and all you're looking for, we can still be down on the day with this trade. We can still be down on the day, meaning red on the day. If you just get a little pop, you'll get out of this for 50%.
Yeah, we could even go down, anywhere above 68.70. That's still that'll still be out of the money.
Yeah, at some point it'll be 50%.
Mm-hmm. Now this calendar, we can't leave that. This one would be in the money. We can't leave that through till tomorrow.
You mean till it's 2 days?
Yeah, till 2 days from. We can't just leave it. If this is well in the money and this gets marked at $20 or something, and then we've got our long, and then we skyrocket on the January 2nd, and then that's worthless. That'll be a bigger loss than what we paid for the calendar.
Agreed.
Okay, what is next?
I want to see. I don't know what number we're on, so let's go to the next one. It's 7. Okay, so this is IWM RGTI. Rigetti. This is from Fabio, and Fabio's in Italy. So 21 to 30 days, the January effect will impact small mid-cap, so suggest a bullish butterfly in both of these.
Okay. So
IWM and RGTI, 21 to 30 days.
All right, so bullish butterfly. So I pulled up And he's saying the January effect. So I'm going to put the butterfly. Let's go on the platform. Do you want to put the butterfly in the January monthly, or do you want to put it on January 30th?
I would like to do the January monthlies, please.
Okay, so we're going to put in a bullish butterfly.
Because he said 21 to 30 days.
Okay. Yeah, and this is only 16 days.
Yeah, so maybe we should go a little longer.
Maybe just go to the end of January, which is going to take us to 30 days. Yeah.
Or split the difference and go the 23 day. It doesn't matter. IWM's liquid enough.
So all I'm doing is going to the expected move. I'll sell 2 there. So if I buy 1, sell 2, this is going on for a small credit, and 53.
It's probably take away that 57 and a half. Just go to the 57 so you can get regular strikes. There you go. Because then you're $4 wide and then go $4 wide, which would be 61. Right?
Yeah, so we're paying 50 cents for it, but you can not pay for it and break their wing, but
I'll pay for it, Fabio.
Yeah, $400 in risk if you don't pay for it, but we'll pay for it. We'll pay for it.
We'll pay for it, Fabio, and think of you every time we look at it. 61.
We know it's symmetrical when it's like your buying power effect is the debit.
Correct. That's a pro tip.
Then there's no math. Then there's no math required.
It's a pro tip. You know it's symmetrical when the buying power is your max loss.
Okay, so I'm working that upside butterfly in IWM and then Rigetti. RGT. I. Okay, what do we have here? Another.
It's same thing. You said 21 to 30 days.
I think this is, we can't use the weeklies. I don't think they're going to be liquid enough.
So I think you got to go. So try Jan 16. This is a small price product. So keep your, let's just do a dollar wide. Just do 24, 25, 26 or 23, 25, 27. Fine.
Let's see.
Either way.
Yeah, it's not bad. 23, 25, 27.
Jib it. We're in with both. It's Fabio.
Butterflies. We usually don't just pay for butterflies, but we're in with Fabio.
You know what? It makes me happy because every time we open it up and say, what was this? We're going to be like, do you remember New Year's Eve, Fabio?
Oh, yeah.
Okay. We're working those. And like I said, I'll push everything through once we are done. Let's see our next one. We've got 2 more left. Well, 3, 8, 9, and 10. Costco bullish. Dylan from Wellingham, Washington. Best chance to grab Costco while it's bouncing around the bottom. How many times over the years have I kicked myself for not buying Costco even when it looked expensive?
Huh.
He's bullish long-term, it says.
Yeah, even when it looks expensive. So 863, but to his point, bouncing around the bottom. He's bullish Costco. I would just go to Feb and sell a put spread.
So let's pop in the platform. Take a look.
So we're trading 863. Here's a $10 wide for 250.
Yeah.
Or we could just do $5 wide for $1.35.
Ship it. Long-term bullish. It's a small trade where we can pay for our Costco membership with that trade.
Oh my gosh. So
how much is the cost? Isn't it like 100 something?
I don't know, but for Christmas, so every year for Christmas, my mom and dad give my brother his Costco membership. That's one of the things he always asks for. One year they gave it to him because he was never a member. And then ever since then that they give him that as one of his yearly Christmas gifts. So this year, the Costco membership gift came with like a Costco trucker hat. Like how those, and it says Costco across the front. And I almost took it from him on Christmas.
You should have taken it.
just to wear on the show when we trade Costco.
I mean, the next time you see your brother, he lives in Lamont. Give me his code. I'm going in to get the hat.
I guarantee he's never wearing that hat. Never wearing that hat.
No, but we will wear it proudly. Yeah. So we're in Costco, which I love. We've got 2 more to go, Jenny. And I think we put in 10 for 10 if we go 2 for 2.
So? I don't know. And we're not filled. But yeah.
I mean, honestly, IBIT bullish 45 DTE.
Oh, we've got it.
I mean, John, you're giving us this one too, right? So we're long Bitcoin and Ethereum, naked puts or covered calls. Now, we don't do naked puts in IBIT because it's so non-cost effective. So we always wind up buying something, but we are...
Again, it depends on your account size. Like I have, it's not terrible. I've got naked puts or covered calls or whatever, and I bet plenty of people do.
But can you do me a favor too? Honestly, let's go to the platform because I don't think it's that bad. It's not if you go 45 DTE.
Right. If you're going 45 DTE, then it's too expensive to buy something. So if I'm looking 45 DTE and I'll sell that, 47 for $1.70.
That's not that bad. It's 10%.
It's not bad. It's not bad.
We buy something because we're in the weeklies, and it's very cheap to do. Oh, we're filled in gold. Good. Okay.
It's cheap to do in the weeklies, but here I don't want of that $1.72. I don't want to give up, 30 cents. You could, but I don't know. I don't. So I do have naked options in IBIT. It's not really terrible anymore. It used to be worse.
But in the weeklies, it's easier to buy something than not to because it gets cheaper in the weeklies.
In the weeklies, it's cheaper. And honestly, IBIT used to be 70, so now it's 50. It's not as much margin as when it was 70.
I know. You're knife in the heart. I mean, I want it back to 70. All right, let's go to our last final. What's your assumption of 2025? Circle. Garrett from Traverse City, Michigan. Circle, bullish. Feb, March. Going long circle at this level. I view rank low, maybe poor man's covered call. Maybe.
All right, hang on. Circle, what maybe. Does he go out to Feb?
He said Feb, March, poor man's covered call.
Okay, so in March, go in and buy something.
Yep.
So if I buy that 70.
Why don't you see what you can sell first? See how much premium you're getting for the...
I was just looking at extrinsic value. If he said poor man's covered call, that's different than a diagonal.
Oh, yeah. No, I was going to see how much extrinsic value you can get for the Feb that you sell.
So.
And then go down and buy something so you're covering extrinsic value.
So if you sell, here's the 31 delta, you're getting 365.
Okay.
And then if you
go in and buy March where you're paying 360, there you go. That's perfect.
It's expensive.
It's expensive, but that's how I would set up a poor man's covered call, washing extrinsic value.
Yeah, that's how I would set up a poor man's covered call. And
it's not diagonal. That's a poor man's covered call.
Right. You've got $20 wide, $30 wide. And you're paying half. And what you want to do is wash extrinsic value. You've got 350 you're giving up in March, but you're getting 350 in, where'd that Feb go? You're getting 350 in extrinsic value in the Feb. And you're washing extrinsic value. I don't mind it.
I don't mind it either.
I'll ship it.
Let's ship it if we get filled. Great. It's only $1,500.
Yeah, that's true. Okay. So we're in.
Yeah, we are in. Now, I don't think we got filled on many, to be honest with you.
So I can see here
on GLD.
We're still working our put spread in Costco. We're still working Circle. We're working the IWM butterfly.
I mean, will you penny up at least the butterflies? Because
I'm going to go through and penny all these up a little bit. So
Costco got away from you.
Yeah, Costco. We would want $1.66. So
yeah,
$1.30 is my final offer at Costco.
Yeah, that's fine because okay. Next,
and then Circle, I will make this.
No, you're not going to go up by 50 cents either. That's fine. $15.85. Just ship it. Mid again, ship it and see if it gets filled. Okay.
We're filled in Circle. Filled in Circle. IWM, I will raise this butterfly up a couple pennies.
Yeah, I don't mind taking butterflies.
So we're filled in IWM.
You're getting a gold star, Jenny Andrews.
Mosaic, that's just the naked put. I don't want to give up 15 cents though.
No.
We'll just leave that. It was. So if Mosaic drops down, we'll get filled. Oracle, that's that big lizard. Kind of like jade lizard, big lizard. Rigetti's a butterfly. I'll penny up this butterfly just by 1 penny. That's it. Filled. And SPX, we're working all of these to close. We're working them all to close, and SPOO's around 15. So it's not. We need SPOO's higher.
Well, that's not going according to plan. Okay, so then all those that we got filled on are pushed out to the follow page. We're still working a couple, but Rigetti, IWM, Circle, Gold, SLV, and we already had our IBIT and things like that in there.
Liz, this is something we're going to be gone. We have a SPY Jan 2 day 685 call This was, we thought we were gonna get this big Santa Claus a year in rally. We didn't. Well, maybe, I don't know. But we got the 685 call, and it's if we just leave this and go on vacation, we could end up coming in long 100 shares of SPY after our trip.
Well, that doesn't sound fun.
I'm just gonna sell this.
Yeah, get rid of it. Didn't work according to plan. It's still got some value.
Yeah. I just don't want to come in and we're long 100 shares of SPY.
Got it. I'm picking up what you're putting down.
Okay. All right, everyone. We're going to take a quick break. We'll be back with the market measures.
And you're going to want to make sure you get filled on that.
I know.
Okay.
Okay. Stay tuned. We'll be back.
Hi, my name is Liz Deerking. The beautiful brunette next to me is...
What an intro. Jenny Andrews, and we are about to play a very exciting game. No. Hold on.
No, you're wrong.
Hold on.
She's wrong. I'm right.
High school party, high school condo.
Yeah, because it wasn't in school.
I had friends at my high school who were mutual friends of Liz, and so we were all at the same party.
And then parties for the rest of our
lives. The same thing with college. She went to a different college. I went to a different college. But we both ended up at the CBOE together.
Yep.
Tasty Trade's Money Match event. Unlock 30 days commission-free trading. Plus a 1% cash match on all qualifying deposits to jumpstart your trading when you open and fund a new Tasty Trade account. Level up your trading experience with active trader mode, smart order tracking, risk analysis tools, dynamic watch lists, and more. The Money Match event starts now, exclusive to new Tasty Trade customers.
Diversify your portfolio with stocks, options, futures, crypto, and more. Focus on the markets that matter to you. See the odds before you trade using curve analysis, IV rank, and more tools. Tasty Trade. Download today.
Your crypto needs a wallet. And crypto is better when it's tasty. You can now do more with your digital currencies with the Tasty Crypto app. We're proud to offer a self-custody wallet for Bitcoin, Ethereum, and Polygon. Transfer your digital tokens directly in-app and access thousands of tokens available only on-chain. Your wallet is your key to decentralized finance. Download the Tasty Crypto app and get started today.
Feel like your wardrobe is missing something? Like style, purpose, and maybe a dancing dog? Can I pet that dog? The new tastytrade and tastylive web store is now live. New merch, bold designs. Did we mention all net proceeds go to one tail at a time? Invest in the real bull market, dogs. Go to tastytrade.threadless.com. Grab some gear and help some pups. You get merch, they get a home.
Global markets never sleep. Explore them with Forex on Tasty Trade. Get in on 80 plus Forex pairs, 24 hours a day, 5 days a week. FX marks the spot. Trade it on Tasty Trade.
Tasty Trade is now on TradingView. Trade stocks and futures directly on TradingView charts with Tasty Trade's low commissions. Try it out and leave us a review.
Hello, everybody, and welcome back. It's getting crazy behind the scenes. TP is joining us, and he missed the opening today. TP, Liz was so happy when she saw your cherry bomb.
Best cherry bomb ever. Jenny hadn't seen it, so I sang it for her. Would you like
You
to?
did?
Yeah. Do you want a rendition? Do you want to hear it?
The chat said it should be clipped, and it should be a commercial.
Should we all? So let's see if I have the words. I loaded it up. All right,
got the words.
Let's go ahead.
So,
Liz, I
this.
can't sing.
I can't think about me because before the show, when she said I got to sing it again, I was doing my warm up of red leather, yellow leather. Do that with me, everybody. Red leather, yellow leather.
Red leather, yellow leather.
That's
Red
because it
leather,
teaches your
yellow.
voice to articulate.
Liz, I can't even make it through that. Okay, I'm not sure if I can sing.
Okay, TP, Liz sings on the show. She used to sing on the show quite often. So I'm terrible. I have a terrible voice. So I started taking professional voice lessons just to be able to sing with her on the show.
Yeah.
The lady fired me. Like I was kicked out. She's like,
Really?
You're hopeless.
Has everybody seen what's the Elf? Have you guys all seen Elf?
Yeah.
I sing like the mother from Elf. May old acquaintance. So here we go. TP, this is for you because you wrote the song.
Liz. Thank you, Liz.
We think you're a genius. But so can I get a okay. May last year's rally be forgot, and the VIX may be to rise. A real correction would be our friend and be a nice surprise. Let's raise a glass to liquidity, tight bid as spreads too. Let's hope our accounts are always green and probabilities stay true.
Oh, that's lovely. That's
And I'm going to show you what I showed Jenny this morning.
It brings a tear to my eye.
This might be water, might be Prosecco. Who's to say? Who's to say?
No, I like it's we always sang Auld Lang Syne growing up on New Year's Eve. Back in Massachusetts, we always used to sing it, but it was always played when the ball dropped. That was it. So we used to watch it on TV when the ball would drop, and they would play Auld Lang Syne for whatever,
It's such a sad song until you change the words.
It is.
I like it.
It is.
It's like my favorite holiday song.
It is.
It's a sad song until now we want the probabilities to stay true.
So here's the problem I'm having this morning is I'm not getting filled. I got some fills on some currency trades, some currency futures like in the British pound, things like that. Early today, like 6:30 a.m. But in some of my S&P trades, my SPX trades, I didn't get filled. I was waiting to come on, routing some orders, nothing done.
We chased a few things, pennied things up. We just had watch your assumption, and we did have to make some adjustments. And do you think that's just because there aren't as many people out there trading today?
Yeah, the holidays are always a tough time. And I remember when I was just starting out, I think it was the day after Thanksgiving. And this was back in like 1995 or whatever it was. And the market had this huge move up. And I was thinking, what the heck is going on with this? And because, like you just said, Jen, the market was so thin, nobody was trading. So any little movement gets accelerated as the liquidity gets taken out. Normally, a 5-point move in the S&Ps, nobody cares. But when it takes out all the offers, boom, 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 suddenly it's, take my bid, take my offers and make them bids, right? And that's what you got to watch out for. I didn't get filled. Okay, I'll live with it. I'm not going to chase anything today.
Yeah.
But you can see some wider swings when the liquidity is down.
So TP, as an old floor trader, yesterday we were talking to some of the market makers on the trading floor, and they said today a huge trade will come in, a huge trade where the customer is buying put spreads and selling calls in SPX. It's like a big roll they do every quarter. Mm-hmm. And so when the market makers are doing the opposite, if they're doing, tens of thousands selling put spreads and buying calls, to offset that, are their hedges going to move the market at all?
It depends on what the deltas are. So what the customer is doing in that kind of size, maybe there's somebody making a big bet. Chances are they're hedging a long stock portfolio, long index portfolio.
That's what it sounds like if you've got very big, huge put spreads and selling calls to finance it.
Yeah.
Yeah. And so it depends on the deltas they're getting. It sounds like it doesn't have it could have a big delta. Yeah, if you're selling naked SPX calls up here, it's going to generate some deltas. And you add some long put verticals, which are depending on how wide they are. Remember, guys, too, is even a 10,000 lot or a huge order gets split up between, 50, 75, 100 market makers.
Yesterday we saw an order come through 35,000 SPX. 35,000 SPX order that just got filled, like that,
right,
between the guys in the pit. So this could be, it could be a sizable order.
While you're talking, I was trying to glance and see if it had traded yet. So he was saying at some point, all the traders wait for this roll on December 31st because they know what's going to happen.
But he said it usually comes around 1 p.m.
Yeah.
See, if you know it's going to happen, and this is, and don't get the idea, anybody, that this is a pre-arranged trade or some kind of insider stuff. That's not what this is. It's just whoever that institution is, and believe me, it's an institution. There's no individual trader doing 10,000, 20,000, 30,000 contracts.
It's me. I'm going to do it as soon as I get off the show.
Well, yeah, because you're not a retail trader, Liz. You're big by big. Okay, right. So there's Liz in her own little section. Okay,
as the show ends, you'll see that trade go.
That's right. So the point is, it's not pre-recorded, not predetermined or anything like that. So if you know something's going to come like that, okay, I'm going to take the other side of that. I'm going to get some long deltas, right? So I'm going to be short. I'm going to be long, buying those out of the money calls, selling those out of the money put spreads. I want to be long some deltas. I can calculate what the deltas are. If I take 100 of those, I know what my hedge has to be. So if I know what my hedge has to be and it gets spread out over half an hour or an hour ahead of time or something like that, I don't think it's going to move the market very much. And if it worked, by the way, and you can know this too, guys, if it works into your existing position, if I'm already short some deltas, I'm adding this on, I just get a little flatter. That's it.
And if they are, we kind of talked a little bit to the market maker yesterday. He was great. Some people are afraid to talk to us on the floor, but Alo is not. He's very tanned accordingly, just to make sure that he looks good on camera. But he was explaining, we were talking about how the market makers are actually doing a good service down there because they are taking down this big size in kind of a single click instead of it being like where they're taking out the electronic book. So those market makers are flattening themselves out, but they know it's coming. So they might have been hedging their delta, not within that 30 minutes, but maybe kind of leading up to it as well.
Right. And so and what that trader just described perfectly, and this is what you see in live action, is what, and I would still say to this, if we did not have option traders, you, me, the people on the floor, you would not have the modern world.
I love that, TP. I love when you talk.
You wouldn't have it. Why? Because whoever is selling those calls, buying those put spreads, is taking off risk that he or she doesn't want to have. Okay, tightening up the risk that they have. Great. Okay, you do that. And when you're doing that, you are reducing your cost of capital. Okay, so if I can hedge my risk, if I'm buying municipal bonds or if I'm putting money in a startup or whatever, if I'm putting capital out there at risk and I can't take my risk off, I demand a higher return. Okay, I demand 8% return. Okay, the cost of capital to whoever is selling that risk to me has to pay me 8%. But if I can hedge it, maybe I'm taking it down. Maybe I only demand 6%, 5%, 4%. So the person generating who needs the capital, who's selling me the investment, doesn't have to pay 8%. They're paying 5%, 4%. And because their cost of capital is lower, they can expand more. You can build hospitals, roads, schools, airports, companies, yada, yada, yada. Go down the list of all the things that you live in the modern world. If people could not take their risk off, the cost of capital would be higher, you wouldn't see you wouldn't see what we have today.
Love it, TP. And that's a wrap. That's a wrap for 2025. That could be mic drop.
Do you know what you just did? Do you watch the show Landman, TP?
No, but I know what it is.
No, remember the speech he gave about, he's like, when the girl goes up and she's like, tell me, Mr. Oil Guy, what do you have against wind? And he goes into this huge rant about how everything. TP, that was well said. I'm going to cut that and share it with my friends, my family,
Thank you.
my coworkers.
Thank you. And like, you know, the three of us talk pretty frequently, but trades and things like that. And I'll point out, oh yeah, I just booked a little winner, blah blah blah. And gee, it's hard for people to say, oh well, Tom, you just sit in your butt all day and press some buttons and you make money. That's not working. Yeah, I get it. I'm not out there doing other stuff like real quote unquote real jobs. But because I'm taking risk, because I'm performing a service, taking the other side of risk people don't want, I get rewarded for that. And it is the fundamental, it's the foundation of our economy.
Well,
our job here is done.
Since we have you on the last day of the year, and we just had an option jive that Jacob put together, he talked about things that people might do on this last day. And our viewers would love to know, like for you personally, do you go into your history? Are you doing anything in your trade history, looking at positions from the year? Are you trying to calculate your win percentage or looking at what happened in 2025 to help you make changes for 2026?
So Jen, you and I have talked about this past year. Sometimes I'll go into my transaction or my year-to-date performance and look at some of my losing symbols, and I try to clean them up, particularly the ones that are like, I'm down $50 or something like that. And I'll try to make $50, like, okay, can I sell some strangles in here or whatever? So yes, I will do that. And I have been doing that over the past 2 months. Some of the things, they're just crappy for trading. It's hard to get fills. It's like, trying to trade Costco or Goldman Sachs and things like that. I just couldn't get filled. Against that is the money is green everywhere. I don't care where my profits come from. My bank account, my trading account doesn't care if I'm losing money in Goldman Sachs but making money in Amazon. Okay, if there's more green in Amazon than there is than there's red in Goldman Sachs, there's money coming in. My account doesn't care. Why should I care? So here's the big question. Yeah, I like to get and what would be a nice feature is on our history pages to be able to see the percentage of winning symbols.
That's and to mention like the win percentage, like overall from the year, like what's your win percentage? And I don't know if there's a place to find that.
Right. I mean, all it is just summing up all the, it's how many symbols do I have and how many are green. One divided, the green divided by the total. So it's two things. There are other things I'm trading. Okay. So it is not part of my trading plan to go and turn my losers into winners at the end of the year. In fact, guys, December 31st is just kind of an illiquid trading day for me. I don't really care. I'm more concerned about the upcoming January expiration. I'm more concerned about the risk I have. I think personally, New Year's, it's on the wrong day. I think it should be Labor Day. That is a much more personally, it's when school starts, the summer ends. It's a much bigger change, right? Personally, for most families, that should be our new year. December 31st, it's kind of another day.
I agree with you. When the kids go back to school is when my trading really levels up because I don't have the kids home all day.
Right. See, there's all sorts of big things that happen, but December 31st for you guys, it's cold. There's not a whole lot that happens. You watch the ball drop. Tomorrow's a day off. Whatever. Okay. Personally, I already have my risk out in January and February.
Yeah.
So today isn't really a big day for me.
Well, but I think we're all traders where you're constantly trading. You're constantly moving.
Right.
Doing
Yeah.
things.
Right.
Just because your P&L resets, it doesn't mean anything. I
mean, how does the P&L reset affect you mentally? Like when you go to from seeing your P&L to then it's zeroed out tomorrow.
Yeah. So what I'll do is I'll either download all that data so that I can keep track of it. In other words, how many, whether it's for tax reasons or risk reasons or whatever. So I will either download it or screenshot it or whatever, because I do like to be able to track over time the number of profitable symbols that I've traded. So am I hitting that 70 or 80% of symbols being profitable, even $1, okay? And if my winning trades are bigger than my losing trades, they are, okay? That's really what that's the process I'm really focused on. It's not necessarily, gee, can I get Goldman Sachs profitable again?
Yeah, no, I get it. And TP, we don't want to take up any more of your time because you are the busiest branch hand that we know. But in 2026, are we going to finally have our segment? TP and I were joking around the other day, and we both thought it was going to be a fabulous idea. I'm sorry if I'm letting the cat out of the bag. We're really not going to do this segment. But I said, let's swap losers. I'll give you my loser. I'll take yours.
Oh, no, I think we should do that.
Oh, I love that. I love the idea of tell me your biggest loser, because if it's my biggest loser, someone else is getting in at a much better spot, right?
Well, see, it's a bit, but part of it is too, guys, is sometimes you get, and this happens to me as much as I don't want to do it, is I get wrapped up in a ticker, a symbol. Oh, yeah. Right. So, what am I doing with this? And yeah, I've got all the mechanics. I get that. But having, let's say, somebody else, even between you two, who you've been friends for 30 years, you're best friends, you already know what's in the accounts. But sometimes maybe having, Liz, you look at one of Jenny's losing trades. Yeah. Here's what I would do with it. Jenny, you take one of hers.
Next week,
let's have my number. I don't want to be like, you take my loser and I'll take yours.
Next week. Let's compile our biggest losers and see if we could put new trades on.
Well, no, I don't want to take your I don't want to put a trade on in your losers. I want your trade that's a loss, and you're going to take mine, and you have to figure out what to do with it.
No, I don't want I don't want that.
And we can't actually do that legally. Okay, you can't just transfer trade, but you can say, "Here's what I would do. Here's how I would manage it."
I just want you to tell me your biggest losers, and I'm going to get in with a new trade and better footing.
TP and I are having a losers. We're going to have a loser swap show.
All right, TP. We're out of time, and Quentin's waiting in the wings. Have a happy New Year. We'll see you in 2026.
Thanks, Liz, Jenny. Happy New Year. See you in 2026.
Goodbye. TP's the best. Okay, so we got to take a quick break, right, Jenny? We'll be right back.
Quick break, and we're going to bring in Quentin.
Tasty Trade's Money Match event. Unlock 30 days commission-free trading. Plus a 1% cash match on all qualifying deposits to jumpstart your trading when you open and fund a new Tasty Trade account. Level up your trading experience with active trader mode, smart order tracking, risk analysis tools, dynamic watch lists, and more. The Money Match event starts now, exclusive to new Tasty Trade customers.
Having trouble understanding what your trader buddies are saying? Here's what a scalp is. We love those quick profits. A scalp is a trade opened and then closed in a short period of time, usually minutes or hours. A scalp is usually done for a small profit and is typically a very directional position. Scalps are most commonly done with future products because of the liquidity and added leverage they provide. But you gotta be careful, it's not always a profit.
Ready to take your trading skills to the next level? Dive into the world of stocks, options, and futures with tastytrade courses. Whether you're a beginner or more advanced trader, our courses can empower you with the knowledge to succeed. Watch as our team in Chicago shows you how to use the tastytrade platform and go over the basics of trading. Perhaps you'll learn about a new strategy or a potential product for your portfolio. To find our courses, go to the Manage section of our web platform or head to courses.tastytrade.com. Start taking control of your financial future. Visit our courses today.
Got trader's block? We've got the cure. Get data-driven trade ideas with cherry picks. Our weekly newsletter that gives you insights into the market. Sign up at tastylive.com/newsletters.
Look who's back testing. tastytrade now has options back testing for free. Test your trades with over 10 years of data for the most popular symbols. See how your trades would have performed in the past. Look back at profit and loss and take the guess out of guesswork. Oh, did we mention that it's free? Get back testing at tastytrade.
In the world of investing, a beast lurks between the numbers, ready to pounce. Some traders hide from it, some ride it. If that's you, join us on Tasty Trade. Genius loves company.
Hello, everybody, and welcome back. This is the closing segments of, we're closing in on the last segments for us for 2025. But it is my great honor to introduce one of our dear friends. Can we bring him in?
Yeah, let's bring in Quentin, live from the trade desk. Hello, Quentin. How are you?
Liz, Jenny, hello. How's it going?
I forgot. I need to say something. We in 2025. I'm very thankful that you have. Well, you've been here for a while, but that you are on the Tasty team because I really think you have cleaned this place up a lot. So we're happy to have you.
Thank you very much. Thank you very much. Happy to be here. Happy to be here.
So Quentin, we've been on. Liz and I have been on. TP was on. We talked to John. Out of all of us, none of us have New Year's Eve plans, but something tells me you do.
You know, I actually don't have big New Year's Eve plans. I'm not like a massive like New Year's person. To me, it's sort of just another day. You know, I like how TP said that Labor Day is like his New Year's. I mean, I'm gonna like go out with some friends, whatever. But for me, New Year's is more like Rosh Hashanah, Yom Kippur, when like the season is changing. That's the Jewish New Year, and I feel like it just makes more sense rather than like right now it feels like kind of random based on like everything else besides the calendar, you know?
Correct. It is very bizarre. Not anything else is changing. We're just on break and then it's a new year. I kind of agree with you.
Well,
yeah, exactly.
Well, have fun tonight, Quentin. I figured I could count on you for going out.
Yeah, we'll have some fun.
What about
what is the office consensus? Are other people in the office going out?
I will have to ask, but we'll see. I feel like this year, the vibe I'm getting this year is like that New Year's isn't that big anymore.
And nobody's
it's very cold, so
and nobody's. It's just us. It's just us now, so you can just talk freely because nobody can hear us. Who's the biggest partier on the desk?
That is a great question. I am not really sure. Actually, I would say honestly, I would probably say
you're a good witness, and they're going to keep you on.
I would honestly probably say Marty's probably the biggest partier on the desk. Maybe not now, back in his heyday for sure.
Back in the day, okay.
But yeah, I'll give it to Marty.
I could see that about Marty.
I just looked it up at midnight when people are coming out of the bars in Chicago. It's going to be 16 degrees. So
Marty. Yeah. He's going to be out.
People aren't like that thrilled to be out and about because it's very cold.
You know, get the little alcohol blanket. It's fine. It's fine.
The alcohol blanket.
Well, I mean, you're talking about Chicago. One year I was in New Year's in Disney. We went to Disney with the extended family. There was like 45 of us, and it was colder in Disney World than it was in Times Square, New York.
Wow. Yeah. I mean, 'cause at least in Times Square, right? It's like all compact too. So you're probably very warm there. I've actually never been to like the ball drop in New York.
Yeah, that's not on. I don't think that's on any of our bucket lists, Quentin.
Yeah, I've seen it from like a hotel room, which was pretty cool one year. But I've never been. Yeah, that's a good idea. I've never been in the like middle of Times Square though during the ball drop.
So we were there with my daughter's dance team in New York in July. And in July, our hotel was selling tickets for their window view of the ball drop party. And that sounds perfect to me, where you have indoors, you have a bathroom, you have drinks, you have service, you have food. But to sit outside and line up so early to sit outside, that sounds crazy.
Oh yeah, I mean it's probably packed right now.
Half naked up there.
Yeah, yeah, it could be a little much, not necessarily a family event, right?
I'm just kidding, but yes.
But okay, Quentin, what's going on the trade desk today? What are you seeing? Is it slower today because it's a holiday, almost a holiday?
Yeah, I would say it's been slower. I mean, and also the market's been very slow too. I mean, because I'm in the camp that traders do not care about holidays. If there's things to trade, they will trade them. A real trader, will trade through any holiday. It doesn't matter whether it's recently Black Friday, Christmas Eve, or the day after Christmas. Traders will trade, but there hasn't been much to trade recently, unless it's the precious metals, right? But in the overall market, because typically I'm looking at the S&P 500 and the volatility, and that's been not doing much. And that's usually when those are moving, that's when we see a lot of other traders, whether it's Tesla, Nvidia, things like that. That's when we'll see people, getting more active. It's more active on the trade desk. But right now it's been pretty calm. We've been getting a lot of IRA questions. So something I just want to go over is that you can contribute in your IRA up until April 15th of 2026 for the 2025 tax year. So if you're trying to get it in today, you don't have to worry. You can still get it in on Friday or anytime up until April, and you're good to go.
You're a wealth of information.
Yeah, that's great. That's good to know. A lot of people think they have to do it by December 31st.
Yeah.
Yeah, for sure. We actually had this, I had this new guy from compliance sit next to me and just go over what we do on the trade desk. He was just absolutely fascinated with how much we have to know and just what we do for customers and stuff like that. And he was just mind blown. I was yeah, I guess it is pretty cool, what we do here.
Yeah, it is cool. I'm glad you did that because I think that's the hardest part is compliance. It's almost as if, I'm not saying they're battling each other because you want to do more. You probably want to do more than compliance probably would allow, but you have to follow certain rules.
Mm-hmm. Yeah, I mean, I would say our compliance team is great, though. Our compliance team is really good, and they're very we work together. We're on the same side. It's not they're always I know Nikki's oh, if I'm not going to jail or you're not going to jail, it doesn't matter. I'm no, that is not the right mentality. They're here to protect us too. They want to protect us just as much as we want to protect us. That's not a good belief system.
Yeah, belief system. I love it.
Yeah.
All right. All right. What are the movers and shakers today?
Yeah. Let's go over the top 20 symbols going through the system and their IVR. At number 1, we've got SLV 88, Tesla 12, Nvidia 6, GLD 57, Micron 35, IBIT 34, AMD 27, Palantir 13, TQQQ 18, Nike 14, Meta 25, Amazon 24, MSTR 28, Robinhood 12, SoFi 10, Apple 9, CoreWeave 18, Google 25, Microsoft 25, and Taiwan Semi 12.
How long has silver been number 1?
It's been flipping on and off between silver and Tesla. So it hasn't been silver's just been number 1 the entire week or something like that. It's also been Tesla too. Yeah, it's been flip-flopping back and forth. And then one more thing I'd like to go over. If you want your net lick values, end of year, year to date, something like that, or any date that you want it, just send us an email to support@tastytrade.com and we can send you those net lick values because we don't display that on the platform. But if you want it for reconciliation, feel free to send us an email, look at your P&L, things like that. When were your big down days or big up days? We can send you all of those files if you want. And then I think we have plans to. Yeah, we can. Yeah.
No, but do you have to do it today, or can you do it after, the new year?
Yeah, you can do it today, after the new year, for whatever dates you want. You could do it even for 5 years back or whatever.
Oh, what are you saying people can ask for? They can ask for.
Yeah, they're net lick values every day. So it's your year-to-date balance snapshots or whatever dates you want, really. So your beginning of day and end of day net lick, we can send you a file with all those numbers.
Pretty cool.
Yeah, for sure. So if you want to do, I download my own. So if you want to do some reconciliation on your platform, see how you were doing throughout the year. If you're not a nerd and you don't track it like I do, feel free to just ask us to send you a file, and we'd be more than happy to do so.
I love it. I love it. Well, Quentin's my go-to guy for everything on the trading floor.
Oh yeah.
He probably rused the day he ever gave us his number.
I'll text Quentin and say, "Hey, Quentin, Quentin, I need to do this," and he's like, "I'm gonna have to call you on a recorded secure line."
I'm gonna have to call you on a recorded line.
I gotta call you on the work phone. But yeah.
Don't call my cell phone. I gotta call you on the recorded line.
Yeah, see, now that would be compliance is trying to save us because that's against the regulatory rules. Compliance trying to protect us.
He's like, "No, Jenny, I will not talk to you. Call me over."
Jenny, give me 2 minutes, okay? And I'm going to call you right back.
All right, well, Quentin, you have a wonderful New Year's Eve.
Yeah, I have so much fun tonight. I don't know if you're going anywhere over the holiday, if you're taking any time off.
Yeah, no time off. I think around MLK Day, I'll be gone for a little bit. I'm going to visit my mom in New York. But yeah, otherwise, that's it. We're locked in.
Nice. Well, have a happy New Year. Thank you for coming on and joining us today.
Yes, Happy New Year to you and the Tasty Nation as well. Happy New Year.
All right, thank you very much, Quentin. Jenny, we have about 16 minutes left of our 2025 trading, and there's a couple things we wanted to do.
I know, jump in the platform because we have been getting tweets, so I want to make sure I get to everyone's tweets. Let's take a look at what has been coming in. So, Ajit, I got to that earlier. Death's Knees.
Death's Knees is the greatest handle ever.
Just wanted to say hi and Happy New Year to you both. Been watching forever. Thanks for what you do and for being part of my daily trading life. Both segments are great. Oh, thank you.
Thank you, Destiny.
I think that's just for New Year's. Watch the. So thank you, Destiny. Happy New Year to you. Yeah, Liz, watch this when I click the heart on the runes.
Oh, I know. I love it because it shows the sparklers. I was saying that
I think that's only for New Year's Eve.
Yeah, I think you're right. And then a rune comes in. Good morning, BE, which is Bloom Energy. Sell February 20, 80 put for $10. Wish you all a tasty, a very happy New Year. I'm in Bloom Energy, and I believe I have that put with you.
And well, we've been in and out of it. We've been definitely in and out. Bloom Energy's kind of been bouncing around, and Feb 80 put for $10. That's a decent credit, Arun.
100% return on capital. I'm just kidding, but that's all it's putting up is $97.
Yeah, maybe I'll give ourselves a little room and go with the 70 for 5.
I'm in Bloom. I like Bloom. It's been pretty good to me this year.
All right, I'm gonna go 45 on the 70 put. Thanks, Arun.
Yeah, thank you for bringing that to our attention. I like it. And I believe it's Arun that brings the Bloom to our attention all the time.
Well, hey, it's been good to us. Okay, then, Mikey, LOL, you gotta love Grok. You look great as an 18-wheeler queen.
Can you please click on that?
Click on what part of it?
Hold on, I'm gonna see if I can do it. And then scroll forward, up. I don't know. Mikey, we missed the picture. I want to say Jenny is an 18-wheeler queen.
Well, let's see. Where am I? Is it down here?
No.
Saw this. I don't know, Mikey. And we don't know. 18-wheeler queen.
That's all right. We'll come back to it.
We'll come back. Here's a G. He's in Meta. With this looks like just a short put. Short puts, February 6th, 595 short puts collecting 770 at the 16 Delta. Yeah, nice Ajit. That looks good.
It does look good. And Meta.
I've got to give all hearts today.
Because we're keeping you up.
Hey, you know what? I was up early, up late. I'm busy packing.
Okay, and then 10 comes in. Happy New Year's Eve. Thank you very much. There's one that's pretty funny that you got to get to. The one that just came in. If you go top down, Ajit comes in where I don't want to pass up Ajit.
SPX, short strangle and SPX.
Look at him. He's great with the SPX short strangle. That's big by big, Ajit.
Yeah, Ajit's big by big. But Ajit's a pro. He's a pro.
He's a total pro. This is what my favorite was. A Johnny Jack Tucker. That's what I'm saying. I'm going to call myself this.
DRDP collected 1040 in premium. Have loved following along this last month. Thanks for the tweets.
But I want to say 1,040 in premium, which is amazing because that is a Johnny Jack Tucker and it's great. It's been super fun.
So we've got $20 wide, $20 wide, 60, 69, and for 520 credit. Good luck. Good
Yeah,
luck.
that's great. I love it.
Good luck. Okay, and then in 2026, let's talk about how an SPX 0 or weekly DTE pays so much more, and one can have more patience via Euro exercise versus stock options with American exercise and less premium cast majority of the time.
Yes, Ajit, I'm glad you brought this up because it is. So the 0 DTE or cash settled is Euro exercise, meaning like you can wait because it doesn't matter. So you can wait until the bitter end because you have nothing else left to lose. Where we closed that SPY, I'm not saying that we would have kept that open, but just like that long SPY position, if it were XSP, I'd be like, leave it. But I don't want to forget about it.
But this is something we need to, so he says, let's talk about this more in 2026. So we can send this over to Jacob.
Yeah. I do. And because you can, I can sit on my hands. And my go-to trade for in one of my accounts is going to be that where I put on that put spread, I either butterfly it off or I close it at the end of the day and leave it if it never butterflies off. And I have the patience to leave that butterfly, which gives me more profit.
You know, and you talk about the 0 day in the weekly, we know at the money's or theta's greatest shorter term, right? Theta's greatest as your shorter term. And our studies have shown for risk and to flatten out deltas and to smooth out risk, you know, selling at 45 days and closing at 21 days. But I hear what you're saying with these 0 DTs in the weeklies, you're getting paid quicker.
Yes, you are getting paid quicker, which I do like. And what I do like about the 0 DTEs too is your ability to define your risk is cheaper because there is less on there. And Mikey just texted me saying refresh. Please refresh because this is amazing. Refresh.
Oh, that's it. That's it. That's the Costco hat. That's the Costco hat, Mikey.
That is amazing.
Yeah. I'll get it. I'm gonna get it.
Steal that thing. I mean, he lives down the street. Do I have to go get it?
No, I honestly, I think it actually might be in my basement. I think my son snuck it out.
Good job, Logan.
I'll see what I can do.
That's pretty funny. That's pretty funny. No, so Ajit, I like it. I want in 2026, what I really want to focus on, and it's going to be harder because I don't know if we're going to be able to get the pieces from Jacob about the 0 DTE SPX, but I want to continue my learning journey on that because I feel like we were in a pretty good place getting where all the studies were building on one another. And I want to get back to that. And I really want to focus on that because that to me has been the biggest game changer, the 0 DTE SPX.
I know, definitely. So while you were talking, I popped in to see if we have anything expiring Friday. We have this ETHA Zebra.
That's worthless. I mean, it's worth 27 cents. Just close it.
Okay. I was going to say,
we tried to do a Jade Blizzard in ETH and we must not have gotten filled yesterday. We tried to put something else.
Thing that could happen with this is if ETH really rallies, we'd come in long 100 shares of ETH. If ETH rallies a little, we'll come on long 200 shares of ETH. So like as far as buying power goes, 100 shares of ETH is $1,600. We could afford it. I mean, we could just leave this until Friday and see how it shakes out.
I'm not going to lie to you. Just buy the 25 call and pray for a miracle.
I mean, I'm not even, if it gets to 25, I will do this. Liz.
This is wishful thinking. This is
all right. And then we're gonna leave those 23s and we're gonna hope we come in long 200 shares of ETH.
Yeah. Then things have gone horribly right. Yeah. That's a ticket.
All right. Anything else in here that's expiring Friday that we don't want to walk into any surprises?
I mean, and it's a good exercise to go through. Starbucks is short term. We just put that on.
We need a rally. We need a real rally.
Yeah, I mean, Spoo's down 24 now. So things have gone horribly wrong since we put those trades on. We do want to close our calendar. Take a look at how much our calendar is a loss. They usually aren't that bad, right?
Well, we're at the 5,900. We're trading 25 points away from the calendar. 25 points away.
No, but it's something that we talked about how 0 DTEs, you can leave them. I don't leave calendars. I'm not going to leave this.
You can't. You could leave this till the end of the day, but you can't leave this and let the because look at this calendar. The 0 day would mark for 2,600, and if we rally on Friday, that could mark for 0. Then you're losing more than what you paid. So for this calendar, we paid like 710 and it's trading 580.
Yes. So that's what I was going to say is even though we're far away from where our calendar is, because you have that long, it still has some value. I don't necessarily know that I would leave it. Now, you can leave it if it goes the opposite direction, but you can't leave it if you have one that's in the money.
No, you can't leave it if you've got one in the money. So this is like $120.
I mean, we paid 7. We're closing it for $120 loser. Things didn't go according to plan.
Yeah. Now, if I were watching in this account and watching this account, I would leave it longer in the day. It's only 9:50. It's only 9:50. And so I think a lot of
honestly, the timing is really throwing me off because I didn't realize it was only 9:50, but it is smart. Yeah.
So normally I wouldn't leave it, but Liz and I are both leaving and going out of town, and I'm not going to be back in this account today.
No.
Now, as far as this put spread, we can leave that.
You can leave that because that's something that it doesn't matter. That's what I love about the European style exercise and assignment, because it's going to come in, it's cash settled. So even if it lands in the middle, you're not going to come in long one and the other one expires. It just, whatever cash you have, it gives it to you.
If we can make that 150 or whatever it is we took in on that, the 190, 180. If we can make 180 on that put spread, that'll cover the loss on the calendar.
Correct.
So to my point of, trying to average $200 a day with my little baby SPX trades, you're going to have days where you're happy if you could get out at a scratch. You've got one loser in this, maybe a small winner in this, and try to scratch it. You need to have, you can't just, whatever your goal is per day, you have to be trying to make more than that a day because you're not going to walk away with that net in the end.
100%, because there will be losers, and you have to just make sure your winners outpace your losers. If you can go top down, that'd be great. Top down.
Yeah, that's what I'm. Okay. Oh, Patty Handy. Happy New Year, ladies. Question on trading 0DT and SPX. Any studies done on slightly out of the money bull put spreads and taking less than 50% profit? Where is the sweet spot to minimize loss?
So that's what I've been doing. I'm selling a $10 wide put spread, and I'm locking it in by putting it in order to butterfly it off if things go according to plan. So I'm not taking 50%.
But if I do those slightly out of the money bull put spreads, I don't need 50% because you're taking in so much. So if you're doing a slightly out of the money, you're usually taking in $3 to $4. And if you're taking in $3 to $4, you don't need 50%. I don't think you need to look for 50% on that.
Yes, I agree.
And we could bring back a study. There are studies on that. We can bring them back. And here's Blue Wackadoo, final tweet for us for the year. Happy New Year's Eve Wednesday. I don't love the IVR down here, but it is what it is. Staggered in the put side, eventually a possible iron condor on the 90 to ease with MES short insurance. I hope 2026 is just as great for both of you. Happy New Year.
Happy New Year. I was going to tell you, I didn't know if you knew what Happy New Year meant. Thank you so much, Blue Wackadoo. Happy New Year to you too. And then Shahe. We love all of our Twitter people. Thank you very much, Shahe. Hope you and your lovely wife have a great New Year.
Happy New Year, everyone. I think that's the wrap, Liz.
Jenny, 2025 is done and dusted for us too.
Liz, have a wonderful time on your cruise. I will be waving from my Disney ship as your Royal Caribbean ship passes. We're going to be actually probably passing each other. And you might even pull up during our fireworks night. And watch. Sometimes the other ships pull up when the Disney cruise is blowing off the fireworks.
Oh, I hope so. Then I'll think of you. When I see the night sky light up, I'll think of you. You think of me.
Have a great trip. Liz and I will be back Tuesday.
From the floor.
Wednesday.
No. Wednesday from the floor.
We'll be back Wednesday, January 8th. From the trading floor.
I love that you're saying that like a question. Whatever January 8th is, we'll be there Wednesday from the trading floor.
And that's it. We're off until then. So we will miss everybody, but we'll be back Wednesday, January 8th.
Okay. And everybody out there, remember to trade small, trade often.
Laugh with us, learn with us, and watch the Liz and Jenny show. We'll see you all in
next year.
2026.
It's option jive.
Are you ready, Jenny Andrews, for the last option jive of 2025?
Yes, last option jive. It's so funny because I don't know if you were listening to Jamal and Mike yesterday, but I think there was a period of time where one of them thought that this was that we were actually in 2026.
What?
I do get, there have been times where I am like writing out a check and I have to say, Alexa, what year is it?
Hey, I forgot the name of somebody that I've known for 27 years yesterday.
And I knew it, and I'm terrible with names. I'm terrible with names. I knew it, and you didn't believe me.
I know. I actually do believe it's because she did drop me on Facebook. So that's probably why. I was like, they're dead to me. I need to
unfriended you. Oh my gosh. All right. What do we have going on today with Option Jive? End of year portfolio review. These might be good tips that I could use.
They are good tips. I'm going to actually go. I'm going to be taking notes while we're going through this Options Jive. Right. There are some tips that we can use.
All right.
First slide.
Happy New Year Eve. Happy New Year's Eve. Do you know, did Jacob make this?
Yeah.
That's friendly of him.
I really like the enthusiasm of the exclamation point, and you know that I like to put exclamation points on things, so I appreciate this. Okay, so the calendar turning over may be artificial, but now is the perfect time to look at the 12 months of data and ask what worked, what didn't, and what am I doing about it? Right?
Okay, what actually changes on January 1st? Broker year-to-date displays reset to 0. So we talked about that. If you want to see what you've got going on this year, take a picture of it.
Save it in your memories, and you can always look back on it.
New tax year begins for reporting, and a fresh mental slate.
If you let it. So Jenny's trying to hold on to what it looked like by taking snapshots. I don't like to look back. I like to say it's a new day, it's a new dawn. Just like Michael Bublé. Is he the one who sings that song?
A fresh mental slate. If you let it, I'll tell you that in order to be a happy trader, you have to have a good mental attitude, or you're going to be miserable, or this isn't for you. Like, you have to be able to clear your head, move on, and not dwell in the past. Like, you have to.
Yes. And if you can't tell, you can't take it too seriously. Like Jenny and I are constantly laughing about, I'll laugh at her P&L. She laughs at mine, because that's the only way. We're very happy when the other one wins, but you have to take it all with a grain of salt, right?
I mean, you have to. And I that's what I'm really trying to instill in my son right now, because he's seen his account have swings, right? He's seen it. And I think that's good, because I'm trying to teach him that you've got to be able to have a good mental attitude in order to keep trading when you see these swings, right?
Right. And so we have this, my brother has this saying in his kitchen, it's not the amount of times you fall down, it's the amount of times you get back up. And that's true of this as well, because you are going to fall down. If somebody tells you that their P&L goes straight up, they are known liars, right?
You're looking at that IWM backtest and seeing it took there was such a loss on those short puts in that down move in March and April that it took from then to the end of the year to get that money back. Do you know how many people at that time would have given up and been like, I'm not doing this again?
A lot.
Yeah.
Yeah, it's pretty big. It's pretty big. Okay, so what doesn't change at the end of the year, and tomorrow or Monday morning when you wake up, or Friday when you wake up, your positions, your open positions and their P&L. So you can see the P&L, and year-to-date P&L will change, but not the open P&L.
And your account balance, so your net lick, that's not going to change unless you pull all your money out. If you pull some money out or add some money in on December 31st, your account balance, your net lick, that's not going to change.
And then he's trying to go slimmy on us. What doesn't change? Your trading habits and patterns. So if you want to change something, take a look in the mirror. And what you learned or didn't learn in 2025 doesn't change either. Okay?
All right, we got through slide one of 6, where I think we'll be good. I think we're going to make it to, we'll make it for opening bell. Finding your data in tastytrade. Let's go. You have a complete year of trading data. Most traders never look at it. Don't be most traders, Liz.
I know, I'm trying not to. Okay, so access your month-by-month position and P&L via My Account statements. And so they have it circled right up there. If you look at it, that's the top of the tastytrade. It says My Accounts. I've never used that before in my entire life. I am most traders.
View a symbol by symbol trading summary under history year to date. Now, I do use my history.
I use the history year to date, and you circled that as well too. You see that where it's like got the little, yeah.
I do like to look at that, see what's going on. I definitely like that.
I think it's shocking to me sometimes when I look at history year to date.
I like to look at that, and that's where I'll sort, best P&L, worst P&L. That's where I'll see like, oh, what's at the bottom of the barrel? Hims and Upstart. What's at the top? My year-end winner this year is not what I thought it was going to be.
What is it?
Intel.
Is it?
Intel's my biggest winner on the year, and I thought for sure it'd be Oklo.
It's with a heavy heart that I tell you mine.
Why?
Hood.
Oh. That's fine. That's fine. I'll forgive her. Someone told me once to get rid of all my hood, and I did, and it was $19, and I never looked back. I've got a good mental attitude about it, Liz.
Oh, you don't. You're always. Okay, but for the quants at home, go to your history, transaction, filter by option and year to date, and then optionally refine by symbol.
Sure. Yeah.
Export. This is where this is for the quants. Export the CSV, I don't know what that means, for spreadsheet analysis. Each trade leg appears in a separate row.
Now, there are people who like to do this. I'm not going to spend any time on this. I've got about, there are people who like to do this. If you've got a lot of free time, I don't have a lot of free time, so I'm not going to export the CSV.
Wait, Jenny, but this is how Jenny Andrews would do it, though. Wait, hold on. So the action item is export your transaction CSV and screenshot your year-to-date summary page
before midnight tonight.
That's what you've been saying all along, is you're going to take a screenshot.
All I do is screenshot like the main page, but maybe I'll screenshot the
CSV,
just the history, like actually the history of each product and stuff. I could screenshot that.
Oh, yeah.
All right. Next slide, John. But if people want to there are people who are into this, and then sure, go for it.
I agree. Okay. So now some metrics that actually matter. Okay. Your broker shows you total P&L. That's not enough. Let's dig deeper.
Okay. Win rate, but context matters.
I think then you go down instead of across.
So, right. So I've never at the end of the year looked at my win rate. Let's see where I can find it. Number of winning trades over total trades. Example, 70% win rate sounds great until your average loss is 5 times your average win. Win rate alone tells you nothing about profitability.
How do you find your win rate?
I have no idea. Maybe it's in the CSV.
I'm going to download that thing immediately following the show. Okay, and then your average wins versus average losses. Are your wins bigger than your losers? If your losers are bigger, then you need a higher win rate to break even, which is true. I just want to find out how we find our average win rate.
I don't know. I have no idea.
So I don't consider, hold on, win rate is not, it doesn't look like, oh, if I'm down, I'm just throwing random numbers. It's not going to be like if I'm down $10,000 in HIMS and I'm up $20,000 in Oklo, that doesn't give you your win rates. You know what I mean?
That's what I'm saying. Like win rate would be like each trade, what trades won and what trades didn't. And it's probably somewhere. Obviously, if Jacob has it, it's probably somewhere. I just don't know where. And I love the lightning bolt where on there it's like 70% and then it's like blowing that up because even if you had 70% winners, you might not be a winner.
Agreed. You might not be a winner. You know what, though? And that's why this is a delicate balance, because we look for high probability trades, but you have to have more winners than losers in high probability trades.
Hey, we talk about this. Like you need to have, we talk about it a lot with the SPX. You need your winners to make enough so that they can offset and then some for the losers. That's why.
Go ahead.
That's why sometimes those high probability trades that have a 90% probability, there's so much risk in those. If you have a max loss, it's going to take you too many winners to make back that loss.
And that's why I feel like my biggest game changer for this year was having Jacob give us the SPX 0 DTE studies, which I am praying. My goal for 2026 is to have him continue to do this and build on it. I mean, I'm putting it out into the universe, so hopefully it happens. Because what he did for us, which was great, is show us if it's a high probability trade and then what your actual P&Ls are if you did it every day, because it is daily, right? If it's an SPX 0 DTE, it's daily, and it showed you what your profits and losses added up in that actual thing were, which I thought was fascinating.
Yeah, no, those studies have been good. Yes. But game changer for me and is collecting more. Like we were going for bigger profits, collecting more bigger profits because
your drawdown is less than.
Yeah. Okay, strategy specific performance. looking at credit spreads, naked puts, which structures made money for you. Credit spreads versus iron condors versus naked puts. Don't trade what works for others. Trade what works for you.
I love that Jacob is totally going Slimmy on us. Slimmy was one of the OGs at Tasty, and he was a would you say he's an options counselor?
Trader psychologist.
Oh, there you go. I was saying options counselor. It's a trader psychologist.
All right, next slide, John.
Okay, positions crossing years. Gains and losses are reported when positions close, not when they open.
Yes, opened to trade in December 2025, closed in January 2026. That's a 2026 tax event, not a 2025.
Okay, I've got a lot of positions that have been opened over years that I haven't closed, and then open positions equal unrealized. Okay, if they're open, not on your 2025 tax form. Yeah. Okay.
Year-end loss harvesting. Common strategy. Close losers before December 31st to realize losses. Can offset gains from earlier in the year. Must be a genuine closing, not immediate repurchase.
Okay, and then this is I can't believe there's no exclamation point after this, but tax rules are complex. This is general information, not advice. Your situation is unique. Talk to a qualified tax professional. I agree.
So, and I know Mike and Jamal were talking. It sounds like they both use just like they input because on Tasty you can go and download all the information you need, all your tax forms you need, and I just download those and email them to my accountant. Sounds like they download them and take them right to put them right into TurboTax. Sounds like they do their own, but I have never done my own. I just let my accountant do everything.
I have never done my own either, but I also will tell you, you and I have been trading for a long time, right? So. And we've traded through lots of different account sizes. And I think when it got to the point where our accounts crossed a certain area, you need a professional.
It's so funny because when I was a trader on the trading floor, we all had, when I was trading, you were a little different, Liz, because you were trading for a firm. So you were trading for a firm where you got like a regular paycheck, where I was just trading one man's money, but just trading like on my own. It wasn't like a regular paycheck. So at the end of all the guys in our group, we all used the same accountant. He was way up north. I had to drive up to like Skokie or something I would take this like big stack and just, here you go. Have it. Like we all went to the same guy.
You almost needed back then somebody who understood what you were doing. You couldn't go to like H&R Block and just hand H&R Block that stack. And that's why now, even when I print out all that stuff, I still kind of need somebody who understands what I'm doing. There's so many different accounts. She's always asking me questions. Do you know what I mean?
Yeah. Yeah. I wonder where my I wonder how this will fall on my taxes, where I put the down payment on to buy a rental property and then that got canceled and I haven't gotten my money back yet.
Did it get canceled?
Well, they have till today. They have till end of day today.
They have till midnight.
Next night.
Clock's ticking.
I wonder how that'll fall on my taxes this year.
Well, it'll probably be next year. They're going to give it back to you next year.
What if I never get it back?
I'd be so mad. Okay, let's go to number 5 because we've got about 12 minutes left before opening bell. Okay,
goal setting for 2026.
All right. Let me ask you this. I'm just going to read you this thing. Set return targets based on your data.
No, I
That's what I was going to say. No, you can't do that.
I don't think so. I think that would like not be good for your mental state, because if you don't hit your target, like I live with someone who's in sales. As something I never want to do. I never want anyone to give me a target and be like, this is your target. That no thanks. That's why I'm not in sales.
This is your target. It doesn't work that way in trading. That I agree with what you just said there. You made 8% in 2025, target 10 to 20. And the reason I don't think that is because I think it depends on what you're doing. If you are just in there and you're just trying to beat the market, sure. But we've talked about this before. Our targets are a lot bigger than what the market is doing. So that's just it is with how you trade. And I think that's what old floor traders kind of understand is you want I'm not going to put a target. I want it to be astronomically high. If I get to 10, I'm not going to be like, done for the year.
No, and again, it depends on the people, right? It depends on the people. So if I've got my parents' account and my in-laws' account, and their targets are very different because their money is not. I don't want to have their money. I don't want their money like too much at risk, right? So their targets are very different. So for them, like we do have targets, and some people might be like that. But for you and I, who've been traders for decades, like my target is much bigger than I would put in writing. If someone saw it in writing, they'd be like, what the heck?
Yeah, correct. You can't write it. It's just in here. It's in this black box. Okay. I just want to read these bullet points because I read the last one and it made me laugh. Okay, I'm going to read the next two. You lost money in 2025. Target small, consistent wins first. I mean, everybody wants a win. That's just it. Is you can't be like, oh, I'm going to put. Do you remember the one year when we first started and you're like, I'm going to put all the winning trades in this account?
I'm putting only the winning trades in this account, and this other account is going to get all of them. And you just don't know what they're going to be. But I guess when I see that, when I see small consistent wins first, that reminds me of TP's style of trading. That reminds me of just like small narrow credit spreads where you're taking them off, where you're just kind of I don't want to say like baby trades, but like little trades, like little high probability trades.
Yeah. And that's kind of the tasty method. But this is what made me laugh. This next line. Compared to your baseline, not Twitter flex posts.
Hey, and it doesn't upset me when I see Jack Tucker taking in 53.
Nothing makes me happier. I root for people to win. I want him to win.
Hey, Jack Tucker, I did set a target. My target for
is to be Jack Tucker.
Right. No. Honestly, I was just saying to Liz, like, hey, I don't mind. SPX is not SPX is a very small part of my portfolio, right? So I said to Liz, like, I don't care if I make $200 a day. My goal in SPX is like $250 a day. If I make $200 a day, 52, how many trading days do we have a year? 250?
252.
What am I? I mean, basically like $50,000 if you make $200 a day in SPX on average, if you could average that. Yeah. Right. You're going to have some wins, you're going to have some losses, but that's, smaller fry for me, but SPX is just like a small piece of.
But I've got my son's small account in 2026. He's going to every day be putting the SPX in, and that's it. So it's a very small compared to baseline. He's not going to try to flex his muscles. Although when I taught my brother the SPX, he's like, why can't I do it by times 100? I was like, oh my God, I can't even deal with him. Okay, so let's keep moving forward.
And I want to clarify this just for like legal purposes. I'm not saying like you'll make $50,000 in SPX if you average $200 a day on 250 trading days, it comes out to $50,000. But
for legal purposes.
But I'm not saying that that's going to be easy because there are going to be losers. But my goal is to average $200 a day in SPX. That's just my goal for next year.
And honestly, that's a very manageable small goal for your style of trading and your size account. Fair enough, right? Okay, now strategy refinement. What worked for you? Do more of that. Modify or drop what didn't, and be honest about what you actually execute well.
So with last day of the year, we're doing what didn't work for us. Like we're just long SPX calls for the last day of the year. And if I look back at my account, what didn't work for me, it's putting on long SPX options and thinking I'm going to hit it big.
So listen, here's the deal. We are parents, and we really want you to do as we say, not as we do. Is it fair?
Yeah.
Do as we say, not as we do. Okay.
All right. Where are we now?
Position sizing.
Okay. Account grew. Consider sizing up proportionally. Account shrunk, must size down. Now, that's a hard one on both ends, right? Like account grows and you got to get bigger, or you don't necessarily have to have your size get bigger, just change to higher priced products. And account shrunk, I mean, that's tough. It's tough to scale down, but sometimes it has to be done.
Yeah, sometimes it does have to be done. Okay, process goals versus outcome goals. Bad. Make $10,000. You can't control the outcome. Good. Only trade IV rank above 50. You control the process, but it's very rare.
Yeah, it's hard to find that.
That's one of the hardest things to do.
Yeah, like it's tough. All right.
The other good is journal every trade same day.
I don't like that. I mean, you people do it, but I don't. It's To me, it's a waste of time.
Did you just say you people?
No, I said some people do it.
I thought you said you people do it, but I think it's a
And do you know how many emails we get about do we journal our trades? No way.
No, I've never
And
done
I'm not putting down Jacob. It's a great idea.
No, honestly, this is what a lot of people do need. This is, I mean, he's.
Hey, do you ever hear that saying, analysis paralysis?
Yeah, I have. I agree with you.
All right, next slide. I'm going to zip through this next slide in 1 minute.
Well, yeah, we've got plenty of time.
No, we don't. It's 8:25. We got to take a break and be back for opening bell.
What is our sixth?
Last slide, please, John. Takeaway.
Here we go.
Get your data today. It's available, but trickier to pull tomorrow.
Point. Review what strategies worked and didn't work for you, not for anybody else.
Identify your biggest mistakes and why they happened.
Okay, and set specific goals for 2025.
Adjust position sizing with your current account balance.
And most important, we'll go every other for here. You can't change 2024's results. Well, good, because it's 2025.
You can change what you learned from them.
And the best traders treat every year as continuing education.
Your edge comes from consistently improving your process. The end. We're going to take a quick break, and we will be back with the opening bell. Stay tuned.
Stay tuned.
Starbucks, Amazon, Apple, Netflix, Tesla, and Circle. 6 of the most popular stocks in the market today. 6 stocks that are probably in many of your portfolios right now. Some old and some new. But what if you had to find the best stock to trade to fit a $30,000 account today? How would you do that? Well, I'm Dr. Jim, and after having traded for nearly 20 years now and having been on the Tasty Network for the last 10, we've created a 5-step checklist that's going to help us walk through exactly how to find your next trade. As we work through each step on the checklist, we're going to use market metrics, strategic choices to help us narrow down the list. And one by one, we're going to eliminate a ticker from the list until we're left with one ticker, one strategy, and we execute the trade. So let's get started with step number 1, liquidity. So the first step in finding a new trade and a new trade's journey is without question liquidity. You need to make sure that you are trading a very, very liquid stock, because I can say from personal experience, there is nothing worse than getting exactly what you wanted. You get the move that you want, the perfect position is on, the strategy checks out, and then the next thing you know, you can't get out. You can't get out for a good price because you're trapped in a very, very low liquidity stock. You're stuck. So in this situation where the liquidity in the stock is really, really poor, you essentially have 2 choices. You either A, stay in the position a bit longer and wait for the price that you've been targeting all along, or B, you get out at a worse price essentially and take a fill on a price that isn't necessarily near the mid price or the mark price at that time. Neither one of these options is good for you. So to avoid essentially any and all problems associated with liquidity, you want to do 2 things, both of which are pretty simple. Number 1, check the liquidity star ranking in the tastytrade platform. And then number 2, cross-reference that with the bid-ask spread differential that's in the market at that time. Doing these 2 things will keep you on the right side of liquidity pretty much every single time. So let's dive in. All right, so we already have our list of 6 stocks, so we're going to work mostly from that list. But if you didn't have a list already, just go into tastytrade, click on the watch lists. You can use Tom's watch list, or you can use the Tasty default watch list as a great starting point. Okay, but with our stocks, I want to begin by checking the liquidity star ranking for each one. So here's Starbucks. Let's go over to the overview tab, and then you can see the liquidity star ranking, 4 stars. So Starbucks looks good. Here's Apple. We go to the overview again right here. You can see also 4 stars in the liquidity ranking. So Apple is good. Tesla, overview, liquidity ranking, also 4 stars. So Tesla is good. Netflix, overview, liquidity ranking, only 2 stars. Okay, so a big question mark by Netflix. Amazon, overview, liquidity ranking, 4 stars. So Amazon is good. And lastly, Circle, overview, liquidity, only 3 stars. So it appears it's going to be between Circle and Netflix for which one gets the chopping block. Now, again, to cross-reference the liquidity, now we're going to turn to the bid-ask spread differentials. So with Circle still loaded up, let's open up the October cycle with 44 days to go because that's closest to that 45 marker where we like to enter our positions. And let's just simply look at the at-the-money strike. You've got Circle at 120. Let's look at the 120 strike. You can see that the bid-ask spread differentials are about 60 to 70 cents. I mean, they're moving around as the market moves, but about 60 to 70 cents on the put side and also on the call side. Now, generally speaking, for the most liquid names in the world, like SPY, like QQQ, you're going to see 1 penny wide markets. You're going to see 3 penny wide markets. You're going to see really, really tight bid-ask spread differentials. Now, with a lower liquidity name, we might be willing to accept slightly wider markets, but Circle at 60 to 65 cents for a $100 stock, I would much prefer to see that at maybe 10 cents or 15 cents. But let's now take a look at Netflix. If we look at Netflix with 44 days to go, same thing, right? But this is a $1,200 stock. So if I look at the bid-ask spread differential for the at-the-money strike, look at what we see. We see at the 12.15 strike, you can see that you're only about $1 wide on the put side. You're a lot wider on the call side, $2 wide. But you have to keep in mind, this is a $1,200 stock. So on a relative basis, I would argue that Circle is a lot less liquid than Netflix because the bid-ask spread differentials are going to scale with the stock price. So Circle is gone off the list. The liquidity is just not good enough. The next market metric that we want to turn to is volatility. At Tasty, we feel the most opportunity as an active trader is with a focus on volatility. It's not directional. It's not trying to get bullish for the next leg higher or get bearish for the next leg lower. It's actually trading volatility and specifically elevated volatility and trying to sell that volatility to take advantage of its natural tendency to contract over time. Now, we already have an entire crash course dedicated to volatility, so definitely check that out when you have a chance. But simply put, our foundation is short premium, so selling options. By selling options, we're able to essentially put probabilities in our favor, put the passage of time in our favor, and then also position ourselves to take advantage of any volatility contraction over time. So we really like the short side of the option contract when it comes to the strategic choices that we make. But we don't want to just sell volatility willy-nilly. We want to be strategic and we want to be patient. So that is why we prefer to sell volatility when it is indeed elevated. Volatility is a unique characteristic in that it has been shown to demonstrate a mean reverting property. This is something that can be shown both empirically and also mathematically. Now, of course, you never know exactly when volatility is going to contract. It's never going to be that easy. But by selling elevated volatility, we are stacking the probabilities in our favor to eventually ride the volatility contraction later on down the road. Okay, so let's take our 5 remaining stocks, take a look at volatility, and see if we can't narrow down the list even more. So to begin looking at volatility, it's always kind of best practice just to get a gauge of where is market-wide volatility. And the best ways to do that are to look at the VIX or the /VX futures. So if I scroll down here on the Tasty default watch list and it's in alphabetical order, you can see the VIX right now is at almost 17. That's right around the historical average, maybe slightly over a historical average of around 16. Similarly, volatility futures are right around 17 or just over 17. So this tells me that volatility is around historical average, maybe slightly elevated in an overall market sense. But really, I'm not interested in market-wide volatility. I want to get laser focused with individual stock volatility. So similar to what we did with liquidity, let's just go through our stocks one by one, starting with Netflix. And the metric I want to look at is the IV rank. An IV rank shows me where volatility ranks on a percentile basis relative to where it's been over the last 12 months. So obviously a 9.6, like what I see here in Netflix, is telling me that it is essentially on the lower end of the distribution of all volatilities for Netflix for the last 12 months. So Netflix, 9.6. Okay, Starbucks 20.6, so much better candidate for selling volatility because remember, I want to sell elevated volatility. So Starbucks certainly looks better than Netflix. Apple, IV rank of 14, so also looking relatively okay, at least in relation to what we saw with Netflix. And then Tesla also at 9.6, so very similar to what we saw there with Netflix. And then lastly, Amazon, only 6.2. So of the 5 remaining stocks, Amazon clearly has the lowest IV rank. So it essentially presents us with the least amount of opportunity as premium sellers. So Amazon is gone. Our list is indeed narrowing, and the time has come to finally choose direction here in step number 3. Are we going to play the stock higher? Are we going to play the stock lower? I mean, in my estimation, this is the age-old question. This is what everybody wants to know. And in my humble professional opinion, nobody knows where any stock or any market is going next. The markets are far too random and unpredictable. And so when it comes to picking direction, that honestly takes a lot of pressure off. I mean, by all means, use the technicals, use the fundamentals, use volume profiles, use order flow. Hey, you could even use your portfolio metrics to guide you. Quick little shout out to another crash course that is already on the YouTube channel all about portfolio management. But perhaps an even simpler method, and one that we generally deploy here at Tasty, is to kind of adopt a short-term contrarian mindset. So when something is down, we like to buy it, and when something is up, we like to sell it. All right, so let's take a look at Starbucks, Apple, Netflix, and Tesla and see if anything jumps out at us. All right, so for the 4 remaining stocks, Apple, Netflix, Tesla, and Starbucks, let's just bring up a daily chart, and we're not even going to measure any technical levels or moving averages or support resistance or any of that. I mean, you could do all that if you want to, but just very simply, I want to get a feel for, is something jumping off the page from a short-term contrarian standpoint? So Apple, to me, looks like a pretty obvious short. Now, I say obvious jokingly because nobody knows what's going to happen next, of course. The randomness and the unpredictability will indeed take over. But if I had to choose a direction in Apple, it would be bearish. Okay, now Starbucks, conversely, this is a different story. To me, this looks like a bullish opportunity. Not to mention today, Starbucks is even down a couple of dollars. So for Apple, I'd probably want to get bearish. For Starbucks, I'd probably want to get bullish. If we bring up Tesla, this one looks a lot less clear, right? From a short-term contrarian standpoint, I think you could make the case that you could go either way in Tesla, bullish or bearish. And then with Netflix, very similar story to what we just saw in Tesla. I think it's hard to make a case either way. You could probably make a case for being bullish here. You could make a case for being bearish here from a contrarian standpoint. So it seems like Tesla or Netflix is probably on the chopping block. So how are we going to determine which one of these we should get rid of? Well, now this is where we can go back to some of the previous steps on this checklist to see if there was a clear winner or loser with liquidity or with volatility. Now, interestingly, remember with Netflix, the IV rank was 9.6. With Tesla, the IV rank was 9.6. I mean, that's quite serendipitous. It is literally a tie. But what about liquidity? This is where it's going to tell a very different story, right? Tesla, remember, we go to the overview tab, liquidity, 4 stars. Very, very liquid. Netflix, if I click on Netflix, liquidity, not so liquid. So only 2 stars on the liquidity meter. So Netflix is gone and Tesla remains. Okay, so direction is always tricky, but for now, Netflix is gone. Let's put that guy on the shelf. That leaves us with Starbucks, Apple, and Tesla. And it is now time here in step number 4 to decide, are we going to do undefined risk or are we going to do defined risk? And the answer here is simple. Defined risk. If you're just starting out, every single one of your trades should be defined risk, 100%. Now, is undefined risk more effective than defined risk? Yes. Is undefined risk going to essentially give you more opportunities than defined risk? Yes, but you're just starting out. We are just getting going. You have to build up your experience and your exposure to the market before you ever consider an undefined risk strategy. Remember, this isn't a race. This isn't a competition. There is plenty of time to grow into the riskier strategies that may be more effective sometime down the road. For right now, let's get laser focused on defined risk only. All right, so Apple, Tesla and Starbucks. That's what's left. So which direction are we going to play? Well, as you can see, it largely depends on which stock we're going to choose. So let's proceed with the checklist and we'll circle back to direction. And to really drive this point home, that essentially this case could be made with any of the stocks that we have left. Tesla, Apple, Starbucks, it doesn't matter. Defined risk versus undefined risk. Let's compare and contrast like a short strangle versus an iron condor. Short strangle, undefined risk strategy. Iron condor, defined risk strategy. So with Apple pulled up, let's sell a strangle together. So if I sell a 220 put and then I sell a 255 call, this is a classic short strangle. This is a great strategy, a very popular strategy. But when you click over to the curve view and you click on the analysis tab inside of the curve view, you get a nice visual representation of this strategy. And so it's essentially showing you that you have unlimited risk on both sides of the market. Just starting out, this is not something that we want to engage with. So back on the table view, let's buy some wings. Let's buy a 215 put and let's buy a 260 call. If you go back to the curve view, you can now see that your risk is indeed defined. Now, this is not the greatest trade because we're only collecting $1.20, but for illustrative purposes only, it does showcase the difference between defined risk and undefined risk. So with whatever stock we choose, we are definitely going to lean on defined risk because this is the best way to start as a new trader. Okay, but one of these stocks has to go. I mean, those are the rules. One step, one stock gets eliminated. Well, again, let's use the previous steps as a tiebreaker, right? Apple, IV rank 13.9. Starbucks IV rank 20.8. But Tesla IV rank still only 9.6. So we are going to eliminate Tesla, and that leaves us with only 2 remaining stocks. All right, so we've made it to the final 2. Tesla is gone. Tesla is forgotten. It's all about Starbucks or Apple. And so now it's time to select a strategy, pick one of these stocks, and execute the trade. And if you are just starting out, like a pretty brand new trader, the one strategy that I would focus exclusively on in the beginning is a pretty clear choice: the vertical spread. And more specifically, since you want to sell volatility, the short vertical spread. Now with short vertical spreads, you are going to be directional. If you want to be bullish, you would choose a short put spread. If you want to be bearish, you would choose a short call spread. And remember, with Starbucks, we were leaning to the bullish side. And with Apple, we were leaning to the bearish side. So the strategy that we select is going to kind of go hand in hand with the stock that we end up choosing as well. And so to help us do all that and essentially complete the checklist, we are going to lean on some of the tasty methodology to choose our strategy, select our stock, and execute the trade. Okay, so we've got Starbucks and we've got Apple. If we're going to choose Starbucks, we're going to be bullish. If we're going to choose Apple, we're going to be bearish. So if we're going to choose Starbucks, we're going to choose a short put spread. If we're going to choose Apple, we're going to choose a short call spread. So one of the key rules with short vertical spreads inside of the tasty methodology is we want to make sure that we're collecting enough premium on entry. So with a vertical spread, we want to make sure that we are collecting at least 1/3 the width of the strikes. By doing this, the risk-return relationship is a little bit more balanced in exchange for a high probability trade. So if I go into Apple, October with 44 days to go, and you've got the stock at 237, let's say I just sell a 240, 245 call spread. If I do that, you can see the probability of profit looks good. The credit collected looks really good. I'm collecting 227, so well over 1/3 the width of the strikes. So Apple looks like a pretty good candidate right here and right now. Okay, so let's do the same thing with Starbucks. Starbucks, 44 days to go, October cycle. Let's go just one strike out of the money. Let's sell an 85 put and buy an 80 put for the 85-80 short put spread. Look at the credit collected. It's only $1.33. So it is actually much less than 1/3 the width of the strikes, even with Starbucks having a higher implied volatility rank. So it appears that the winner is indeed Apple. So with Apple at 237, our short call spread is selling for about 230. Let's see if we can get filled. And there you go. We are now bearish on Apple with a short call spread, having worked through the 5-step checklist that we just worked through. And so I hope this helped, and we'll see you guys next time.
The market has sold off over 1,000 points in the last week, but it's hard to ignore the fact that we've already hit 37 new all-time highs this year alone. Will we make it back to those highs? Honestly, I have no clue. But if you're someone looking to take advantage of these dips, there are a few key things you need to understand before jumping in. That's why I sat down with an ex-prop trader to break down how to set up trades during market pullbacks, how to recognize when momentum is actually shifting, and what signals to watch for before stepping in. After that, you'll hear from a macroeconomist who explains why paying attention to the US dollar matters and why we should even care what the dollar is doing when gauging overall market sentiment. When markets sell off, everyone's talking about buying the dip. But the reality is, timing, structure, and risk management matter a lot more than people think. So I sat down with Jamal, a former prop trader and current options expert, to get his take on how professionals approach short-term pullbacks, especially when using options. Before we go deeper, I want to touch on something every trader thinks about when the market pulls back. How do you mentally position yourself to trade this right? Because let's be honest, buying the dip sounds easy, but once you factor in timing, strike selection, and decaying premium, you realize there's some extra thought that needs to be put into it. For example, if you think something like QQQ or the NASDAQ is going to rebound in 7 to 14 days, do you buy calls or sell puts? They both let you get long, and that's where the confusion comes in. Which one makes more sense in this kind of pullback? And then there's a timing problem. When traders see a dip, they either jump in too early or too late. Is the real mistake entry timing, strike selection, or how they manage the position once that premium starts bleeding? What about traders with smaller accounts? Say you've only got $1,000. How do you position for a dip without over-leveraging or blowing through your buying power? And even if you do catch the move right, do you go in the money, at the money, out of the money? What makes sense when you expect a short-term bounce? These are real problems traders face every single week. And here's what Jamal had to say. If you believe an indice or an ETF like QQQ will rebound within the next 7 to 14 days, do you prefer to buy calls or sell puts?
Something like QQQ, more than likely, I'm looking at selling put spreads because it's an index/indice, and I usually think that those might have a bounce on the order of 2 to 3%, which is sizable, but it's not the kind of bounce where I would want to buy calls expecting a massive move to the upside.
In your experience, what's the biggest mistakes that you see traders make when they're trading short-term dips, especially using options? Is it timing the entry? Is it something like selecting the strikes? Or could it be managing the position as your option premium is running out?
All three are pretty tough. If I had to choose the biggest one, I would say the timing of the entry. I think early traders want to just be all in. You want to push all your chips in immediately on what you feel is going to happen. I've certainly been victim to that at times in my trading career. And I think being able to time it slower, being able to scale into a position, which I think requires patience. It's hard for newer traders to do, but scaling into a position, a couple of units, maybe 1 or 2. Say you want to do 5 overall, do 1 first and see how it reacts. Do 2. Things might fall further, and then you don't have the ability to scale in if you went all in the beginning. So give yourself some time, I think. And I think that's the biggest takeaway in a lot of situations, giving yourself time and scaling in slowly and being small.
If you only had like $1,000 trading account, how would you buy the dip?
I think you got to think in terms of, again, back to size and timing. I think you got to think in terms of sizing. $1,000, that means if I do a $100 position, that's 10% of my portfolio. And what can I do with that? What kind of names am I trading with that? You're automatically taking a lot of names off the board just from that size alone, unfortunately, but it's true. I mean, it's hard to trade a name that's $500 or $600 or $700 with that type of sizing. So I think you got to give yourself further time. One thing, you got to go multi months out and try to find something, finding a stock size that actually works for you and therefore option sizes that work for you. And think about it in terms of percentages. How much am I going to use in my portfolio in this trade? Is it going to be 1%? Is it going to be 10%? If I'm going in with $500 in one trade, I mean, that's half my portfolio, and you're going to live and die on that position. So you have to think of things in terms of percentages.
I wanted to zoom out and look at the bigger picture because knowing how to set up a trade is one thing, but understanding the sentiment driving the market behind the move is just as important. That's why I brought Ilya Spivak, a macroeconomist who can break this down into plain language. We talked about the US dollar because it's one of the best gauges of risk sentiment across global markets, yet most traders overlook it. I wanted to understand why the dollar matters so much when it comes to reading the market's mood. So I asked Ilya a few key questions. Can you see hints in the dollar that tell you when the market might get jumpy soon?
Absolutely. So the dollar is one of these more interesting instruments. It waxes and wanes in its relationship relative to the market's risk sentiment. And so it's not so much that the dollar is one thing or another, but it is that you can look at the dollar and see how it's behaving, especially relative to other currencies and relative to other assets, and get a sense for what risk sentiment in the market is. And that, of course, gives you insights on other things happening as well. So there's a great insight from economist Stephen Jen, who sort of popularized this, is the idea of the dollar smile, which suggests that the dollar outperforms when the economy in the U.S. is doing really well against the other major economies or really poorly, and that it's down when performance is kind of middling. Now, that's not so important as far as economic growth per se, but it does tell you that it can play these dual roles. So if you're looking at the dollar and you're seeing, oh, stocks are declining at a time when the dollar is rising, that's usually a sense that there's some sort of significant risk aversion going on because capital is coming out of assets and going into cash. And make no mistake, the dollar is a safe haven asset in any kind of significant market sell-off. So you get a situation where you see the dollar rise, especially if it's rising against higher yielding and more cyclical currencies like the Australian dollar and the Canadian dollar, and maybe it's a little bit weaker against the yen and the Swiss franc and defensive currencies like that. You definitely can get some insights and say, okay, well, this is the kind of configuration that would be consistent with higher risk assets like stocks or Bitcoin having downside momentum and being under pressure and maybe continuing to go that way.
If the dollar starts getting stronger, but the VIX isn't moving, is that weird? What does that mean?
It's not weird. It's not weird because the dollar can have these different relationships. So let's consider, for example, the situation in 2022. You have a situation where the Fed is raising rates, stock markets are falling all year, but of course, at the same time, you have the dollar rising because these rises in interest rates make the dollar more attractive because it yields more to its holders than other currencies. And so when interest rates rise, the dollar gets attractive. Now, is that enough to extrapolate that the dollar goes down when stocks go up and the dollar goes up when stocks go down? No, of course not. Because you could just as well have an environment where they go down together. For example, take a look at the Liberation Day situation, late March, early April of this year, where the market became generally concerned with U.S.-based assets, and you had stocks, the dollar, and treasury bonds going down at the same time. You could have a situation where stocks and the dollar go up at the same time. If there's a significantly strong economic expansion, good for earnings, probably encouraging the Fed to raise rates because they're concerned about what the economic boom would do for inflation. So you can have stocks and the dollar go up at the same time. So if you don't have a clear relationship between the dollar and the VIX that's consistent, those cross-market relationships that we were just talking about, they become most interesting because you have to look at what kind of dollar you have. So if the dollar is going up and the VIX isn't, is the dollar going up at the same time that stocks are weakening? Is Bitcoin weakening? What's the dollar strengthening most against? Is it the Aussie or the yen? And if it's the Aussie, well, then you have to start thinking, well, maybe the VIX is going to pop. Maybe it's a risk-off kind of a vibe. If it's the yen, maybe not. So it depends, and context really matters.
Whenever we're viewing the dollar relative to another asset, is that where we gain our context? With where we could just be looking at the dollar itself, is there not much context to derive out of that? Do we need to look at it a little bit more, relative to other assets?
Well, anytime you think about quote unquote the dollar, it's really important to sort of define what you're saying, because currencies don't exist in a vacuum. the only way that you can really say what is the dollar. Is it the dollar's exchange rate against this currency? Is it against that currency? Is it against a basket of currencies? And so when you look at, for example, something like the dollar index, DXY, what is that? Well, it's a dated basket made out of currencies made to give you an average view of the dollar, but it was made before there was a euro. And so now most of that basket is just euro. So what is DXY? It's just the euro US dollar exchange rate upside down. So it matters what you're talking about. I think the most insight you can get is in looking at, let's say, how the dollar is performing against currencies that are more linked to economic growth relative to those that are more defensive. So saying, okay, how is the dollar performing relative to, let's say, on one side, Australian dollar, Canadian dollar, and on the other side, euro, yen, pound. And that gives you a sense of what kind of a dollar is this? Is this a risk-off dollar? Is it a risk-on dollar? Is the dollar rising at the same time that bonds are falling and so yields are rising? So is it rising for reasons where people want to hold dollars because interest rates are going up and that's a return on holding dollars? Or is it rising very potently, let's say in 2008? Stocks absolutely crater. Interest rates go to zero and the dollar soars. Why is it soaring? Because interest rates are going to zero? That seems counterintuitive if that's what you're focused on, but it's not going up for those reasons. It's going up because it is the most liquid currency in all existence, as far as we know. And so when people divest from things and money goes to cash, where does it go? Which cash, right? If I'm cashing out of my stocks, bonds, commodities, whatever, what's my cash of choice? Obviously, it's the most liquid one because I want to be able to reinvest back smoothly without losing a ton of money on the way in and on the way out. If I were, let's say, to be shifting my capital into an illiquid currency, well, then I better be the first one to have that idea. Otherwise, I'm buying very expensive. And if I'm shifting into a less liquid currency on the way back out of cash back into assets, I better be the first one on that idea too. Otherwise, I'm selling the currency very, very cheap. So the dollar is uniquely liquid, and so it can take a lot of capital coming in and a lot of capital going out without moving all that much relative to other currencies. So it's important to look contextually and say, well, what kind of dollar is this? How is it performing relative to some of these other currencies that occupy sentiment extremes? How does it correlate with yields? How does it correlate with stocks? How does it correlate with gold? And what kind of an environment is it in?
So Ilya, I'm a new trader investor. What's some advice for how much weight or attention we need to be putting on the dollar on a day-to-day basis, a week-to-week basis, maybe a longer-term perspective?
I think you have to pay tremendous attention because the dollar is a reflection of the underlying cost of money. And that's the decision that matters more before anything else. Before you go, okay, I should buy that stock or this stock. I should look at this sector or that sector. Stocks in general at the index level are biased higher, biased lower. All of that, before you make any of those decisions, you first have to make the decision, do I want to place a trade at all? Is this even an environment where I should be deploying capital in markets? And that's going to be largely a function of the Fed, of the path of interest rates. And of course, the dollar is a direct reflection of that. So looking at the dollar might be the most important thing. If you want to get a good sense on what the price action is telling you about the market mood and whether you should be looking at this thing or that, step one, in my mind, is looking at what's the 10-year bond doing and what's the dollar doing.
When the dollar goes up, does the market get too scared or not always?
So people oftentimes get themselves into a little bit of a logical trap because they start to think about market relationships, this asset to that asset, in causal terms. So they think, well, when this happens, that causes that to happen. And that is almost always the wrong way to think about it. Because as we know, and as we constantly get beat over the head with in the markets, correlation is not causation. Just because things are moving together, it says absolutely nothing about whether one is causing the other, or indeed the other way around.
Why do we think in such a cause and effect naturally in the market?
I think it's human nature. I think people like to have simple answers, and they like to say, for example, well, when the dollar goes up, stocks go down. Well, no, not really. There are plenty of examples when that isn't the case. The question is context. Is it certainly the case that sometimes when stocks go down, the dollar goes up, and sometimes when the dollar goes down, stocks go up? Of course, because the dollar is this kind of risk-on, risk-off asset. You can absolutely have a situation. Just think to what we saw this year. We've seen the dollar weaken. We've seen the dollar strengthen. We've seen stocks weaken and strengthen. And they've had, sometimes, relationships that are parallel, sometimes relationships that are inverse, depending mostly on what the outlook on interest rates is. If the dollar is going up because the economy is strong, and the Fed is going to raise rates because they're going to be concerned about inflation in a strong economy, stocks are probably going higher too. If there is a risk-off situation, especially a critical one, think COVID, think 08, where you have a market collapse, capital is fleeing to the dollar. Now, is that rising dollar the reason why stocks are going down? Of course not. So you go down the list and you go, okay, let's look contextually. The dollar is doing what it's doing in the context of what? Are stocks going up or down? Are interest rates going up or down? What's happening with Fed policy expectations? What's happening with gold? What's happening with bonds? And when you start to put these things together, you find what kind of dollar you're looking at. And generally, what I like to do is look at scenario themes. So when you look at and you go, okay, this is an environment where the dollar and the yen are up, stocks are down, interest rates are falling. Risk off, very clearly. And when you put those things together, you go, okay, this is a scenario like that. And then when you see, okay, this is a scenario where, like in 2022 again, stocks are going down, dollar is going up, interest rates are going up. Okay, this is a rate hike cycle that the market is uncomfortable with. So it's risk off, but it's positive for the dollar because rates are going up and it's more attractive to hold it. There are environments like in April of this year where the market is just generally negative on U.S. assets, and so stocks and the dollar fall together. It's really important not to get stuck in these paradigms where you say, oh, well, this always happens when X. That's almost never the case. Correlations wax and wane between all assets. Sometimes they become inverted, sometimes they're direct, sometimes there's no correlation. And looking at what those relationships are can be very, very telling about what the macro environment itself is doing and where it's going.
At the end of the day, there's always going to be variables to consider when you're looking to buy the dip. And there's plenty of different ways to do it. But no matter which approach you choose, the most important thing is always the same. Manage your risk. That's what keeps you in the game long enough for these setups to actually matter. And if you're looking for more trading resources, be sure to check out tastylive.com, like, subscribe, and we'll see you in the next one.
In the world of investing, a beast lurks between the numbers. Some watch from the safety of the sidelines, but others saddle up and ride that one-ton rowdy ribeye for all he's got. If that's you, join us on tastytrade, named best online broker for options trading. Genius loves company.
The Liz and Jenny show is probably my favorite hour of the day. It's
somewhere where I get to be with one of my best friends that I've known since I was 14 years old and do something that I love.
Liz and I always say to get a trading buddy, and we are each other's trading buddies, and I wouldn't know what I would do without her.
People get to take a look at how our minds work as explore traders now transitioned into self-directed investors. What is wonderful about being on this show is that you see the good, the bad, and the ugly, because not every trade is a winner. If it were, the game would be rigged. So you get to watch us manage our winners, and you get to see how we look to get out of a trade that might not be going our way.
My biggest piece of advice to beginners is to jump in, but stay small.
Putting it out there and doing it in small increments, you will learn more than ever reading anything in any book.
So stay small, but jump in.
Top kid.
Grow a strong community with Tasty Trade's referral program. When your friend joins Tasty Trade, you'll both receive $100. As your community grows, you get more bonuses. The referral program runs through December 31st, only at Tasty Trade.
Okay, cowboy, here's an earnings event. Keep an eye out for them when you open your trade. They're fast, they're loose, and they can take you for a wild ride. But that's no reason to steer clear, because you can be your own personal earnings event if you take the bull by the horns. What makes earnings events so special? Before the event, people will start guessing how the stock will move once the earnings report is released. That, in turn, makes the options IV rank higher. Like way, way higher. The nearer the event, the more the speculation, the higher the IV rank. Then right after the event, IVR goes the way of the buffalo. If you sell high premium options right before the event, when IVR is really high, you can take advantage of inflated prices and lock your profits when volatility disappears. Only if, and this is a big if, the stock doesn't move against you. If it does, well, sometimes you eat the bear and sometimes the bear eats you. Earnings events can hit you hard. They can also pay off big and fast if you play your cards right. Pretty simple.
Ready to take your trading skills to the next level? Dive into the world of stocks, options, and futures with Tasty Trade courses. Whether you're a beginner or more advanced trader, our courses can empower you with the knowledge to succeed. Watch as our team in Chicago shows you how to use the Tasty Trade platform and go over the basics of trading. Perhaps you'll learn about a new strategy or a potential product for your portfolio. To find our courses, go to the Manage section of our web platform or head to courses.tastytrade.com. Start taking control of your financial future. Visit our courses today.
Diversify your portfolio with stocks, options, futures, crypto, and more. Focus on the markets that matter to you. See the odds before you trade using curve analysis, IV rank, and more tools. Tasty Trade. Download today.
Tasty Trade's Money Match event. Unlock 30 days commission-free trading. Plus a 1% cash match on all qualifying deposits to jumpstart your trading when you open and fund a new Tasty Trade account. Level up your trading experience with active trader mode, smart order tracking, risk analysis tools, dynamic watch lists, and more. The Money Match event starts now, exclusive to new Tasty Trade customers.
Tasty Trade has crypto, and you can trade with zero commissions. Bitcoin, Ethereum, Litecoin, and more. Diversify in one place. Crypto, we got it, we get it.
What's up, Tasty Nation? Welcome back to the show. This is Options Trading Concepts Live. My name is Mike. I'm here with Jamal. Hey. And of course, Glenn Freibarger, fresh off the slopes.
Happy Glenn's Day.
Oh.
Glenn's Day.
Oh.
Right.
Technically, I guess it is, huh?
Yeah.
New Year's Eve.
New Year's Eve, last show of the year. I got to tell you guys, when I started 2025, I had no idea I'd be sitting here with you on New Year's Eve. Like zero.
That's true.
Like zero idea.
Very
Zero
true.
idea. Neither did you guys. This is a pleasant surprise.
It
It's
is.
awesome.
I don't know.
I'm guessing you bought a ticket to a bar. You're gonna go rage somewhere. Get nice and
This is
dressed up.
good.
What's
This is
the
really
deal?
good, by the way, because we're so like different in age. This is good. What are we doing? What's going on? What are you
It
doing?
sucks because I didn't even want to, but yes, I.
Yeah.
Oh, the days.
It's downtown, I assume.
It's downtown.
That's fun.
What I planned was a dinner at Cortino, one of my favorite Italian places in
solid.
Chicago, with my girlfriend, and that was going to be it. That's all I want to do. I'm not a huge New Year's Eve guy.
You are now.
So wait. There's something deeper being explained here. Go ahead.
Yeah.
So wait,
Well,
that was what you planned.
That's what I planned.
What?
Thought it was a pretty good plan.
And there's a button there.
And I thought it worked out pretty well because my girlfriend then had plans with her friends to go to a bar. I was like, okay, perfect. But I did abandon her for Christmas for the past week, and so she said, "Well, you can come with us, you know." So,
The old.
so I'm excited to go with her. It'll be.
I love how she left it open ended so that if you denied her,
Yep.
then it's
exactly.
you owe me
That
something
is
else.
great.
Yeah.
First of all, man, how old are you again?
24.
You are smarter than me at 24 because I was totally into going out on New Year's Eve. Like I was so into that shit. I mean, seriously, like that was me. And that's not smart. Honestly, it's not.
It's I like the festivities of New Year's Eve, but I feel like it's always much more fun when you have like a house party with a bunch of friends.
Much more
than
fun.
than a bar, and especially downtown Chicago, it's absolute chaos.
Yeah. I love that chaos though. I did.
Fun.
When I was 24, like for sure, it was actually 24 that I remember specifically. I was in downtown Chicago kicking it. And I lived in Madison at the time, but I was in downtown Chicago kicking it.
Where'd you go? On like Hubbard Street?
Oh, geez, man. I mean, it doesn't even exist anymore. I went, but I don't know. It was somewhere.
Tony's Club?
Nah, it was in the Viagra Triangle for sure.
All right,
Yeah,
nice.
yeah. That was definitely the spot at the time. Russian Division, like that was the spot.
All right. Well, yeah, I'm going to Spin, the ping pong bar.
Ah.
They're having multi-room
That'll be fun.
DJ
that'd be
extravaganza. So yeah, that's the plan tonight. It goes all night, but hopefully I can call it early.
Nice.
Yeah, the last time I did that, it was supposed to be so sick. It was a hotel with different convention rooms, and it was the same thing. Like one room was like 90s
Nice.
DJ, one was a live band, one was a silent disco type thing. The problem is for like 500 people plus, they only had 2 bars, and the bars only had 2 bartenders. So I'm not even kidding you. There was there was a 10-person line, like 10 people here, 10 people here, 10 people here. You had to wait like 30 minutes just to get a beer. It was insane.
Yeah.
I was like, yeah, I think I'm done with this now.
Not great.
But I hope that your situation is much better.
Thank you.
A modern bar like Spin will have fully staffed bars.
Hopefully. Otherwise, I'll get back there.
Yeah, there you go.
There you go.
Wouldn't be the first time.
And I don't. Correct. And I don't need much. I got blood drawn this morning, so we're ready to kick the BAC up, jumpstart it.
Your
what are
personal
you
Vicks
doing?
level's high. I'm just hanging out with some friends.
Yeah.
But my friend, so this goes to your point of like just want to chill and do nothing. So my friend checkmates us all because he does a big New Year's Day party. So everyone's like, well, I'm not going to go out New Year's Eve because I'm going to go to the New Year's Day party. So he allows us to lean on that.
That's
and
good.
have, the full shebang.
I'm so curious. What is the New Year's Day party? When does that start?
I mean, that sounds
Well, it starts at like 11 a.m. tomorrow.
Okay.
But they make
Eggs and eggs.
Yeah, they make a bunch of food. They cater food. They have a bunch of booze. They have a big house in the burbs, and we'll have college football on.
Yeah.
And there will be like 50 people there. So it'll be nice.
Pretty good.
Yeah.
Jamal?
I am. I have no plans. So this is. I mean, again, I got to take you through the evolution a little bit because I always used to look for like going out. Never really had any like specific plans. Just like let's just go here in this general vicinity and see what happens.
Drop
That's what we
in.
did for years, and then kids came into play, and you still try to go out a little bit, like for the first couple of years when you have the kids.
Right.
They're not sexy places. I mean, they're really not. Like I remember one year, like maybe after my oldest was born, it might have been 2. I don't think we had my daughter yet. God, we went to like the boat in Elgin. I mean, that's probably the worst New Year's ever. Seriously. I mean, not a good idea. Seriously. After that, what's funny? After that, me and my roommate from college, we started hanging out. And they live in Michigan. They live in Detroit. And we started feeling like, well, we're not going out and we're just going to be home. You guys got kids too. Why don't you guys come here? And for, I don't know, like almost 15 years, they came to us.
Nice.
Like every year we hung out, a few days, all that. And then, now that we got a couple of kids in college and like the kids are starting to scatter, even though my youngest is still the youngest one, that just stopped like in the last year. And so now we're at a point like, what do we want to do? Haven't figured it out. Last year, I ended up hanging out at my local bar with a bunch of friends, a lot of people. We ended up hanging out there. Who knows?
On Madison?
Yeah, on Madison. Yeah. I won't say that it's an undisclosed location.
Yep.
But yeah, it's my spot. It's my personal cheers. Definitely everybody in there knows my name. It's just how it goes. So I don't know. We'll see what happens. I mean, I'm either going to be at home or wind up there. Haven't decided yet, but it's nice. It's
New era.
Yeah. It's nice to go. It's interesting to go from only worrying about yourself to then, oh God, I got to worry about what everybody else is going to do, to now I'm like, I just only got to really worry about like what me and my wife are going to do.
We're
That's
back.
pretty much it. So.
Love it.
The evolution is a trip. I'm telling you. You guys will see someday. It's a trip. It's a trip. Speaking of college football, we all are rooting for the Miami Hurricanes today, okay? Just so you guys know.
I'm on board.
We're all rooting for Miami. No. We need a different sound. This is where things get real, okay? Where we can't have that sound after I say University of Miami Hurricanes. We need cheers, guys. We need, hell no.
John's doing you
Who's
dirty
running the
today.
board right now? What the hell is going on?
Happy New Year!
Against OSU? Okay.
Yeah, we're playing. Look, I don't. You guys don't know about this, but in 2003, in January 2003, the biggest robbery ever happened. Okay, like Ohio State stole a game from the University of Miami from their repeat. We would have repeated.
Yep.
This bullshit play in the end zone where they called pass interference on us. We went to overtime. We lost the game. They think they won a national championship. They really do. We need to take that back starting today.
I didn't know that it was.
Yeah, no, it's serious.
It was.
I've actually let it go. I was really mad for years. I've let it go. We need to take that back today. We need to take. You serious? There's clearly some weird Ohio State fan out there that I didn't know. You find out who your friends are, Glenn. You see how this happens?
The moment you take a stance, find out quick.
Yeah.
Well, at least Carson Beck might be. Looks like he'll be back, and he is 35 years old. So you got a nice,
exactly.
You got a nice veteran on your side.
Oh, he played last game. He was in the last game.
Yeah.
It's gonna be a good one. Oh, it's gotta be a good one.
It'll be fun.
It's gonna be good. I mean, we need it. They obviously need it, and they lost their last game, so they're gonna be coming in angry. They lost to Indiana, of course. They're gonna be coming in angry.
Lost the Big Ten.
Yeah.
Embarrassing.
Can't do it.
Not like Northwestern. 6 straight bowl wins.
I did see Northwestern.
Did you guys play?
Smoking this team recently.
Central Michigan.
Yeah. Would they win like 50-0 or something? It was like 30-0.
It was like 34-7 or something. Yeah.
It's fun.
Easy
Did
money.
you guys play?
Central Michigan.
Central Michigan, yeah. Was that in Fenway? Something like that? No? Was one of those?
It was
Okay.
somewhere like
Yeah.
Game
It
Changer
was
Bowl or
somewhere.
something.
Wasn't in
Boy,
France.
Justin Mullins had 4 threes last night.
Yeah. Jay Moles.
4 for 5.
Jay Moles, yeah. They played they played
Howard.
nobody. Yeah, they played Howard. Yeah, I mean, Howard's on the come up, but
Not there yet.
no. Yeah,
It's all right.
Jay Moles.
Well, looking forward to tonight.
I
Looking
coached that
forward to
kid
the new
since
year.
first grade, man.
That's crazy.
Yeah.
Tonight will be fun. Got sports on. There's a bunch of basketball games too. which I didn't realize. But
I didn't realize neither. Have you noticed that recently? Like it used to be, but there are so many different sports on these days, like big games on like these days now, like big NBA games, big college games.
It's
The best clip I saw yesterday was Coach Calipari ranting for like 5 minutes about the current state of like what's going on. It's kind of bad. I mean, he was like, you can't allow
on the draft and the
he's like,
overseas?
you can't. I mean, why is it fair? Because basically, what they've allowed is like dudes to come back from like they could be in the draft and then they can come back and play in college
if they're not American.
But you know what? The same thing happens with the European dudes, but nobody says anything about that. So he's like, it's pretty good the way he was like laying out all the different issues right now.
Yeah.
There's an issue. They got to fix it. They got to fix it.
same with the NFL. Like the Bucks have a chance to make the playoffs and they have a negative record. That's preposterous.
Yeah.
That's just
That
bad.
shouldn't happen.
Bad divisions.
Yeah, the whole division winning thing. Yeah, there's like 3 games that are determined by this weekend.
Yeah.
Like
Steelers, Ravens.
Yeah, Steelers, Ravens.
Yeah.
Seattle, San Francisco.
Yeah.
And there's a bunch of like
Well,
the
that one
games
you
on
just said,
Saturday
Carolina
matter.
and Bucks.
A lot of the games on Sunday matter. So it's a very different week 18. Normally week 18, like everyone's playing the backups.
Yeah.
But anywho, quick market update, and then we'll get to Glenn's topic of the day. Platinum and silver down big, over 8%. Natty gas down 6%. Everything else kind of just inside or at 1% to the downside. And there's really nothing moving to the upside here. Some random movements, but everything under half a percentage point. So as foretold, the big movers, platinum, silver, they'll keep on chugging. Gold down 1%, so not participating in the big sell-off with silver and platinum, but that continues to be the story of the week and last week, really. This huge volatility in platinum and silver continues. Does it leak into the FX markets? What do you think?
A little bit, yeah. We'll get into it, but exporters like South African rand, has been doing pretty well. Nothing quite as jumpy on some of these speculatory moves, just because if you think about the time horizon, it really is those things play into currencies more as a factor of import-export, percentage of GDP, which, these quick, sudden moves perhaps normalize before they start to get into those figures in the futures market and on the spot market. But you definitely see it if we sustain some of these.
Cool. I'm making some money back in this long dollar position, starting to come in. What's the story there? Is this the end? Is this the end of the pain?
We'll see. I mean, 2026, whole new animal for the U.S. dollar, but it is nice to see that in these 2-week kind of holiday stretches, we had a big move pre-Christmas to the U.S. dollar's downside. That all kind of appearing to be the low for now, and stabilizing this week on pretty consistent dollar upticks, albeit the magnitude not as strong. Some stabilization today. I'm tightening up the time horizons a little bit, just looking for any funky moves around year-end flows. We saw a little bit about an hour ago, some bigger candles in dollar yen and euro dollar. Euro dollar actually giving, even though it's a tight range, if you go into something like a 15-minute chart, if you hit daily, go down to 15 minutes, 10 minutes, whatever, you're getting, some sort of scalpable activity there, even in a 25 pip range, right around, that U.S. market open, and then some, a little bit later, some quick moves to the euro's upside, but stabilizing for the most part. Nothing too crazy going on. New Zealand dollar mover overnight. That one, let's see. Yeah, that one, the biggest dollar strength there. And if you zoom out there, this starts to get interesting. Go back to a daily chart. We're looking at now coming off of highs. We're looking at 6 straight days of decline in this pair, positive for the U.S. dollar, and now filling that recent range from a quick uptick in the New Zealand dollar, but a lot more room to fall if you're looking at the previous couple months, looked like these Australasian pairs would really take off. Now stuttering and falling a bit. So if you're playing mean reversion, it's not often that you get 6 consecutive down days. It moves in any direction. So perhaps an opportunity to fade there. But also this time of year, harder to get as technical because you do get some of these recalibrating moves and some drift that might not hold up in full liquidity conditions.
I like it. Yeah, I've been just holding on to this long dollar position with the hope and assumption that eventually it will recover.
And in certain pairs,
It has.
in certain pairs, earning while that moves.
Yeah. Yeah, the dollar franc was positive, and the euro I think was too. But this one's a small position. I'm more concerned about the dollar franc position.
Yeah, that one got a little scary. We were looking at that 0.79 level as, it's bounced off of that numerous times in the past few months. Really, the past 6 months hasn't sustained any moves below it. And then that move pre-Christmas took it down, and it looked a little shaky there for you for a couple days. Now appearing to settle in a little bit better back into its recent range.
I think we'll get there.
All right. Just keep on keeping on.
And if not, I'll just continue to get little shekels day to day.
There you go. Speaking of shekels, I got some slides for you.
Cool.
Let's do it.
Look at that. 10 currencies that beat the dollar in 2025.
Whoa.
There you go. Very topical. Year end here as we wrap up 2025. Wanted to look at 10 currencies that beat the dollar. Beating the dollar was a very easy hurdle this year as we had a full, this list I looked at all 20 US dollar pairs offered by TastyFX. So by no means extensive of the entire world, but extensive of all major currencies to trade and available for trading here in the US. And the narrative, as everyone probably knows by now, US dollar, one of the worst years for it in recent memory by some metrics, looking at like the dollar basket. Its worst year since 2017. Specific pairs, even more extremes there. And it really shakes out to a lot of these fundamental drivers. The Trump administration on a thesis of de-dollarization. We're looking back at Liberation Day. If we're looking at equities and some of those risk-on assets, that was more of a shakeout in terms of, fear. And he walked back some of the tariffs, the magnitude, and even the duration. But U.S. dollar really didn't recover from that as we got some of this more sell America trade where we saw traditional, correlations start to unravel. We had stocks, bonds, and dollar all falling for the U.S. as global investors moved out of U.S. assets. That started to recover in some other asset classes, but definitely some irreversible damage so far to the U.S. dollar. Also had some narratives like Fed independence threats, that, more wishy-washy, less quantifiable. But political pressure on the central bank spooked some investors. And even if they haven't acted as such, as politically motivated as of yet, we do have a new Fed chair coming in that'll be appointed by President Trump. And some of those investors that were spooked not back into the U.S. dollar. Other things like the big beautiful bill, some fiscal concerns, growth starting to slow down, and a lot of these things that by themselves not huge drivers, or should I say not huge effects so far that we felt through the economy, but definitely enough to shake confidence and not get a bunch of these flows back, which has left the U.S. dollar hammered from also the end of 2024. We were very strong, and we'll see in some of these charts that we were at some pretty big extremes. So definitely an interesting year for US dollar and for FX trading. So want to get through 10 of these currencies that you might not keep on your radar, but talk through some of the nuances pretty quickly. If we can go to the next slide, we'll see number 10, Norwegian krone. So this one rebounded on the US dollar weakness. All of these graphs will look pretty similar to some extent, but this one among the European pairs, the weakest, because this one more historically correlated to oil prices and oil not having a good year itself. So even though this is still an 11% gain, rounded up to 12%, definitely an underperformer in terms of European pairs. Kicking it over to number 9 on the next slide.
Hold on. That's an interesting, Jim. So you're saying that thing is pretty, Norwegian krone is tied to oil?
Yeah, on exports. Yeah.
Is there a lot of oil exported from Norway or something? Or I really don't know.
Yeah.
Oh, okay.
I don't read too much into it, but we have seen the correlation there. Number 9, South African rand, like we were just talking about, gold strength, commodity strength, and eventually risk on flows. You see the little tick up, as we'll see in some of these emerging market currencies there in April, where the US dollar did gain on some of those scares of tariff talks and the threatened global tariffs. That all shaken out as risk on sentiment came back. Global equities across the board rising to double-digit numbers annually. And this has lifted this currency to make it, as well as some stabilization politically for South Africa, has made this an attractive emerging market play as people look away from more haven currencies and to risk on currencies like the rand. Kicking it over to number 8, we've got the Swiss franc, the one you know very well, Mr. Mike. This one, it gained definitely as some of those, the Sell America trade. This one definitely a benefactor, but as we'll see, to the tune less of an effect as the euro, as we did see. It wasn't a total risk off move throughout the year. Higher risk currencies gaining more than the Swiss franc, but European currencies across the board, as we'll see from this list, 5, 6, maybe even 7 on here, all European currencies. Getting over to number 7, we've got the Israeli shekel, almost 13% here. And this one, a big surprise, not on the tariff escalation, but the conflict that broke out in the Middle East, which some people might have expected to weaken the shekel dramatically. But the expectations and the fallout there was that this conflict was regionalized and didn't escalate, which that might have been way more priced in than the conflict outbreak in and of itself, localized, and shekel the benefactor there. Number 6, we've got the Polish zloty. Have you ever heard of that one?
No.
Nope.
So this one, a similar, more random European currency, but higher yields here and better growth has put this one higher than other pairs like the Norwegian krone. Number 5.
Zloty and pierogies. I need some zloty to buy some pierogies. Got it.
Glopki, zloty.
Number 13, our highest traded pair in the world, euro dollar, coming in at 13.4% gain on the year. Absolutely crazy for a relatively stable pair. This one, rising on multiple occasions on just that broad dollar selling, a most liquid place to go on some of those Sell America narratives, and as well as, their cutting cycle is over, it seems to be, while we're still going down. And then some other narratives like the promise of increased spending on issues like Ukraine. That's a bit ongoing. We'll see if that conversely shakes out of the euro in 2026 as some of those storylines hopefully come to a close, that Ukraine-Russia conflict. Coming in at number 4, we've got Mexican peso, also at 13%, 13.6. This one, we've got some carry with, a higher yielding interest rates, higher yielding currency, and trade resilience, as this one, much like the Canadian dollar we've seen, actually not as impacted by those tariffs. If I was to summarize it, I would say it was definitely a target for a lot of these tariffs, but the shakeout was that even though they were held to a 25% tariff, most of the goods fell under an old trade agreement that exempted a lot of those tariffs from things that would affect the Mexican economy. So interesting to see this one appreciate to a very high degree. Number 3, going back to Europe on the next slide, the Czech koruna, one of the krone variants. This one, solid fundamentals in Czech, but not as much of that carry dynamic, which we'll see in the next 2, but still 15%, pretty good. Number 2, kicking it over to the Swedish krona, almost 17%. And this one, we had some more sustainable inflation in Sweden, which then trickled down to the central bank decisions, keeping those rates higher, and helped Sweden outperform much of Europe. This one, a pretty consistent chart here, much like the euro, but not as much to the US dollar side really ever. No real upticks, even though the sustained move was in the first 3-4 months of the year. Really no love for the US dollar in this pair for the last 7 months, which is pretty interesting to see. And number 1, Hungarian forint. This one, some high yields in this currency, some carry inflows, but also just more stability and something like, that South African rand, where the risk sentiment not only brings it from the US dollar to perhaps the euro, but then further out on the curve to some of these more exotic emerging markets like Hungary. And if that was your investment at the beginning of the year, pretty good return.
Yeah,
especially if
I was thinking about the Hungarian forint when I started the year.
Almost pulled the trigger.
Yeah,
Just didn't.
Well, there you go. There are your top 10 performing currencies that were beating the US dollar, that beat the US dollar in 2025. We'll see if there's any mean reversion on the table, or if, in some of these emerging markets, we start to get further on the risk curve, then maybe some further strength for pairs like the South African rand or even the Hungarian forint.
Yeah. Well,
love it.
Thank you for
very interesting
placating my fun pairs.
Hey, thanks for coming on.
Yeah, man.
It's 11:30, just like that. That was perfect timing.
Thank you. I try.
Pizza today?
Pat's Pizza.
Turkey
Pat's
on top?
Pizza.
What?
Turkey pizza?
Yeah,
You
yeah.
wish.
Cheese.
You wish. Thank you again, Glenn. If you want to follow Glenn on Twitter, he is at Glenn Freibarger. You can give TastyFX a follow as well. I just have one more thing to say to you. See you next year.
Nice one.
Enjoy
Nailed
your party tonight. It'll be
Thank
fun.
you.
Yeah, man. Have fun.
Thank you. I'm going to have a GoPro, so watch
Yeah.
out.
You are.
Awesome.
Happy New
As
Year.
you should.
Happy New Year to you both as well.
Likewise.
Pretty fun year. Looking forward to the next one.
It's going to be great.
Absolutely.
It's going to be great. 2026?
It's my year. I can feel it.
I think
In my
so.
plums.
And on that note, yeah, we'll see you. We'll see you around. Enjoy your New Year's Eve party.
Yeah, man.
And enjoy tomorrow off. But yeah, there you have it. Top 10 currencies that beat the U.S. dollar in
Hungarian
2025.
forint. Who
Yeah.
knew?
Who would have thought?
Who knew?
Who would have thought?
Yeah.
Yeah, I don't have any other positions other than just long US dollar and then the long euro franc. So I will just sit and wait, continue to sit and wait. But this was like a $300 winner a couple days ago, coming in a lot better now, down $180. But again, this position's so small, I can just hold this into perpetuity. And that's what I plan to do.
Seems simple enough.
Yeah. I haven't done anything in this portfolio today. Looks like we got some active people here. Tony from Mexico. You got an SPX.
Yeah, I did one thing. I just was like, okay, we've had a couple of days down in a row here. And I just started thinking out in the timeline and different things coming up. We got, the jobs report, I think, next week, a CPI report. I don't know how much they matter anymore, though. It's really interesting. But and then the Fed meeting on the 28th. And that was the number one thing. I was like, how long could it take to get 100 points here, right? 100 plus points. Could be out to January expiration. And I was like, well, let's just push this to the end of the month. And did that call butterfly. So
nice.
The only thing.
So yeah, the 7,000, 70, 7100 for $500.
Yep.
Classic setup. I've got the same thing here. This downside butterfly, which actually is, I think I might actually just close this. It's up $120. The 6,800, 66, 6,700 into the sell-off here. I might just get rid of this.
Who knows, dude? I mean, that's so far out.
True.
And there's so many different things that could happen.
True.
I'd keep it if I were you. Why not?
Fine.
Who the hell knows? Like, seriously. I mean, from this point, we really don't know.
Yeah. I guess
you got so many other bullish things, I'm sure.
Yeah. This position's actually going to fall off today. So I have the 6,800, 6,790 put spread to finance the call spread for 25 cents. Everything's worthless. So this will expire worthless. And then I'll just have this lone butterfly to the downside I'll just leave it on because to your point, it'll hedge a lot of other things. But yeah, micro crude looking okay. As long as it stays above 57, we'll be good there.
Yeah.
MES year long strangle looking good. Trying to get more out of this premium though, just a little bit more. It's right in between the range, so there's nothing to do anyways. But yeah, I'm excited for that one. And then IBIT kind of just stuck in the mud, but we will continue this trade into next year as well.
All's been coming in though.
Oh yeah, I looked at this. So like last year when I started this trade, it was a 50-60. It was a 50-70 or a 60-70 strangle for $500. If you do the same thing now, a 45-55, just like at the expected move strangle, which is what I did last year, half the credit. So that's reflective of the lower implied volatility and lower price point in IBIT. But yeah, let's see. Where did I start this? Yeah, the 50-65 strangle for Feb, same cycle, 565. So less than half of the premium there. Crazy. But yeah, we'll keep rolling this thing. This will turn into a 2-year-long trade because I don't see myself getting out of this one anytime soon. Because even with lower IV, like it's still decent. 50% IV is still decent.
I'm in this too. I mean, I have a short straddle at the moment, the 55 straddle in Fab, and I've rolled it like a couple of times now. So
love it.
Yeah.
If you want to join us on the YouTube channel, we're streaming live there. Just pop over to Tasty Live. You'll see this video front and center. And you can throw in your trade ideas, questions along the right-hand side chat. I see some people in there already. But Happy New Year to those that are wishing us the Happy New Year's as well.
Yeah, I want to say Happy New Year to all you guys. You guys are great, man. You guys, make it easy for us to do what we do. So really appreciate you guys, specifically Grumpy Mike, Flower Power, Donald in there, Brandon, what's going on, man? Like, you guys are great. Stephen Bivens, good to see you guys all in there. Margin Walker, we really appreciate you guys. So thanks for showing up for us.
Yeah, absolutely. Especially on this day where, in theory, should be a lighter day.
Yeah, yeah.
I mean, the markets are kind of reflecting that, except for silver and platinum. But
It's been a week for those things, man. Holy cow.
Yeah.
Yeah, I mean, just to kind of put the week in context here, I mean, so far, the last couple of days that we've seen, I'm just looking at average true range. Average daily range over the last 9 days, 33 points in the S&P 500. Yeah, that's pretty low. 48 points. When you think back to October, well, I mean, God, I'm trying to remember the times where we had big moves, but for sure, during November, 100 plus points, 120 points. I mean, other times throughout the year, it's been, it was moving like almost 200 points a day in March and April. So this is definitely pretty low. You won't hear us too often say, don't force trades, but this is why. I mean, look how low volatility is right now. Unless you're picking a direction, which again, depends on how convicted you are. I mean, I don't know. I'm not that convicted in a lot of things these days.
Yeah, I'm kind of waiting for something to shift here because this premium is just not like even this micro mini position, which is coming in slightly. I would have expected it to come in a little bit more into this just lack of movement overall. And we have tomorrow off, trading on Friday, but still not much going on here in this market, and it's reflective of in the VIX,
I'm
VIX
tempted
futures.
to buy a VIX micro or mini. What do they call mini? I don't know why they call it mini. It's funny. They do the minis. CME does the micros, whatever.
Yeah.
I'm thinking about buying a
VXM?
Yeah, I was thinking about it. I mean, actually, I might just do a February. So I'd been thinking about it for the last couple of trading sessions. And then I was like, do I really want to buy January? Who knows if anything's going to happen? I mean, obviously, it's better if we really did get something. It's better to buy January, but maybe I'll probably buy. I will buy it. I will buy the G contract. That's the one to do. I think. I just to wait it out. But again, who knows? I mean, by the time it actually moves, it might drop down to 17, 16 before it actually really makes a move. But whatever.
Yeah, you'll have to hold it and deal with if it doesn't happen, there'll be just like a churn factor. But if there is a big volatility spike, you could definitely see it.
Put it out there for 1840.
There you go.
Yeah. I get hit.
Yeah. Yeah, I mean, if you have any trade ideas, let us know. Not much moving around here. We don't really have any earnings until later January. January 7th, Constellation, but you'll start to see some trickle in here. If we just look at like Apple, Jan 29th, late Jan, and a lot of those will be similar. If we look at the banks, they always kick off earnings middle of January, January 14th, before the market. I think there's some other ones that are the 15th, 13th for JP Morgan, Wells Fargo, 14th. So yeah, 13th, 14th, 15th, that's when the next earnings cycle will kick off. So a couple of weeks here, maybe we see some chop around these markets, but looking at SPX, implied move for the rest of the day, 12 points. That's hilarious. And then into Monday, only 32 points. Or sorry, into Friday, 32 points. 32-point range is very low. So not much is expected there. And then into Monday, even lower, only a 15-point differential between Friday and Monday. So these markets are basically projecting a snooze fest here. Of course, that can change, but just keep that in mind if you're taking risk or doing, neutral strategies. Like, it doesn't take much for you to be wrong in a super low volatility environment like this.
Nope, not at all. Like I said, average daily range over the last 9 days, 33 points, 34 points.
But it does kick up later into next month. So January 30th, 200-point range on either side. So that's more in line with what we should expect to see. But next couple of days here, really not too much expected to move. And we really haven't seen anything move other than silver, platinum, and gold here and there. But that's really been the story. Natty Gas having a big move today as well, down 5%. This has been volatile. But yeah, it's just a handful of products that have been moving. Let's see here. Predictions for 2026. Metals run, SPX 7500. Money rotates out of defensive stocks or something else. I think we definitely end next year above 7,000. I don't have any reason to believe that we would be below 7,000 given the current landscape of things. Interest rate cuts, VIX in the teens, not much on the horizon. Of course, anything can happen, and there will be years in the future where we are down 30%, 40%. It happens all the time. Not all the time, but it does happen. It's going to happen again. Just a matter of what is driving that sell-off. But until that happens, I feel like I have to believe that we will end higher as we have the last couple of years in this bullish run that we've had, especially with interest rate cuts, new Fed chair that will likely be more inclined to do more cuts. That's my take. Outside of that, I think Bitcoin, I feel like we would see a rally in Bitcoin. It would be weird to me if we ended below where we are now, since we're already at the lows. So I'm looking for a general market rally, nothing too crazy, but given the landscape and the inability for sell-offs to sustain in 2025 with so much craziness happening, I'm just going to expect the same. What about you?
Oh man, it's hard. It's really tough to say. I almost want to say we're going to have a similar year like this year, where something sort of maybe spooks the market for a little bit, and then we eventually slowly bounce. I don't expect I don't know. I expect things to slow down to some degree. Like I don't expect a 20 to 30% year like we've had the last couple of years. I expect more along the line, somewhere from 10 to 15. I think it'll move around a good bit. I think that's kind of the type of environment we've had this year, and I think we're going to expect more. Like I would expect another year of average VIX of like 18 to 19. Mm-hmm. As far as the metals, money, I mean, I think there's going to be somewhat of a rotation out of these. I don't know. Do I think there's going to be a rotation out of tech? I can't determine that. It's hard to say. I don't think when I say rotation, I think they're still going to move, but I don't think they're going to be to the multiple that they have been. I think they're going to slow down a little bit. I mean, I think, some of the prices have just been crazy. Like, again, we looked at Palantir, started 75 this year, gained $100. I think it's going to slow down a little bit. I think AI is still going to be a thing, but I don't think it's going to be a thing that's going to take the market down like a lot of people thought. I think we're going to learn to live with it. We're going to learn to adapt with it. As far as the metals, I think they're going to pull back. I think the metals are going to pull back. I really do. I don't think it's going to go I don't think they're just going to keep going at the pace that they've done. I don't think they're going to pull back like fall. Like I think silver at some point will find its area and it's going to be in the 60s. Like I don't know if it's going to be at 100 next year, but we'll see.
Yeah, I think the realized volatility in these metals will slow down for sure.
Has to.
They can't keep chopping around like this. But where they settle, good question. I agree with you. I think it'll be lower than where we are now. This feels very squeezy to me, especially platinum, like super squeezy. And we saw this happen in gold. Like we can look at gold as a barometer. You had this huge rally to the upside with no resistance, and then we chopped lower. And now we're trickling higher, but we're kind of settling around just underneath the highs that were realized the last time and under the highs we realized recently. So if you expect the same in platinum, maybe it's somewhere between 2,000 and 2,300, and silver somewhere, 60 to 70, I think is reasonable. Mm-hmm. But yeah, it's going to be very interesting because this could have a big ripple effect for a lot of tech companies and the cost of doing business, especially if they stay at these elevated price points for a longer period of time. Mm-hmm. But
only thing I can't determine is if silver's going to touch 100 before it goes back towards 60. It's hard to determine right now, given where we are. I mean, because we're not that far, but I don't know.
Yeah. And I think anything's possible. We saw these huge rallies and big realized volatility days. Platinum is a good example. Silver is a good example. Like this is a crazy intraday range from 82 to 70.
Yeah.
In one day. Like that's a huge range for huge, something that's supposed to be more stable. So
look, everything calms down eventually. Remember when Apple just used to go up every single day? I don't know if you guys remember. I remember a few years ago. It's always used to just go up, I mean, NVIDIA, obviously, remember when that was pretty crazy? That was pretty nuts. You thought for sure NVIDIA was going to be going to 3,000, 4,000, like the way it was moving. Calms down. Everything calms down eventually. It doesn't seem like it in the moment, but silver and this gold is going to calm down. Enjoy it while it's here. Have fun with it now because it will calm down. Again, I remember when this was going crazy, 2010, 2011, and it seemed like it was just going to go forever.
Yeah.
And it didn't.
Yeah, I think... when you zoom out and just look at the magnitude of this, like here's your 2011, and this is by far the biggest one-sided move we've seen in silver in 20 years. And
Bro,
same thing with GLD.
At that time in SLV, we were buying like 200, 300, 400 lots. You know what I mean? Of upside calls, getting paid. It was really fun to trade it at the time.
Oh, I'm
at
sure.
the firm. It was
this
awesome.
This is like this is
GLD.
insane. And
At AGQ, we were trading that heavy.
yeah, and
heavy.
this 25% IV, like this is where you get paid if you're buying calls. Like you're getting paid on the calls in gold versus silver. Silver has 3 times the amount of implied volatility, which means if you're buying these options, you're not getting paid as much on a multiple if you're right. Or gold, if you're buying a 20% IV product and it moves 30%, your multiples are huge.
The one
sense.
dude I've told you before, who I was one of the best traders I ever traded with, Neil. That dude was buying 1,000 lots, and again, it was like it was just we're pretty hedged, under hedged to some degree. And again, with stock, whether with options, it was actually nice to hedge with options in here because, like you said, it's pretty cheap. So you could go out and buy like 1,000 calls that are 30 delta, but then 500 puts that are like 40 delta and kind of be hedged nicely such that if it moves big in either way, you're able to sort of scalp with those options, man. I mean, that's why when you see all this volume, I know what the hell they're doing. They're trading the hell out of this thing right now. Trust me, there's been some big money in here more recently. That's the funny thing about this too, though. When it goes down like this, vol kind of comes in, right? Like it's different than an equity, and so that's the weird part too. If it goes down, but it doesn't go down huge, vol still kind of comes in. So a day like today is I don't know. Today like today in GLD, I don't it's if you're long options, this is not good for you today. You're actually losing money on GLD. SLV is probably fine, but GLD, you're probably losing money on a day like today because it's not really a big move in GLD.
Yeah. We can look at the net change here. Kind of unchanged on the put side, but big crush on the downside in the calls. SLV.
Yeah, look at that. Actually, go back to that. Oh, yeah, no, that was fine. That one?
Yeah, this is...
Yeah, you see that? Like how some of them are like on the put side, you see how some of them are kind of up money, but some are like not really. Like there's a couple that are like kind of flat. Whereas like at least on the calls are all down, right? Like on the puts, it's like they're kind of, some of them are kind of up, but not like as big. It just kind of shows you.
Yeah.
When it goes down and not that much, ball comes in.
Yep. And same thing here. Like this is a good example of why it's hard to get paid on downside moves. Like this, especially if we look at the IV 5-day change, like we're now looking at a vol crush here. 2 days ago, we had a big implied volatility increase, but this 6% down move in SLV, you would expect to get paid a lot more on these long options, the downside, if you bought these puts, but these calls are getting destroyed. Like these calls were twice as much yesterday, and these puts are only gaining $1. So it's hard to make money on downside puts because you're dealing with a compressing price point, which decreases extrinsic value all around the new price point. But also, if that's paired with a vol crush, you just get killed. This is why people were losing money. Like when AMC and GME were just mooning, they were buying out of the money puts to the downside, and GME and AMC would sell off, but volatility would crush 100%.
Yep.
And you would lose money net, even though the price went down. So it's all about everything working together. It's not always just about like directional, I'm going to make multiples. Like
so what's dope about SLV though is like these options are very liquid, and the in the money stuff is really not that crazy expensive. So if you want to even if you don't want to do it here, or if it goes up again, if you want to buy puts, you got to buy almost in the money puts. Like you can't buy out of the money puts with the hope of that they're going to explode to the downside. It doesn't really happen like that. You almost got to buy the in the money puts, and luckily you can kind of do it. You couldn't do that in GME when it was crazy high. It was impossible. Those puts are way too expensive.
Yeah.
You can actually do that in this. So that's probably one of the better ways. If you really feel like it's going to fall hard to the downside, you got to buy in the money puts. Buying out of the money, you don't really make as much money as you think.
Yeah, like these 5-point in the money puts are trading for $1,000, where the at the money options and out of the money options are trading for $500 with no intrinsic value. So that just goes to show like it's really hard to make multiples on out of the money downside puts when vol has already spiked and you expect vol to collapse into the sell-off. Will we entertain an Amazon crab trade? Sure.
Amazon crab. Yeah.
Amazon crab, Feb, March. 240, 260, 280. Let's see. 240, 260, 280. $5.
Like it.
20 points wide. So this is in the earnings cycle. So just keep an eye on that. But yeah, if you're looking for a pre-earnings pump, as you get closer to the earnings date, which is January-ish, right? Let's see.
Feb 5th.
Okay.
Apparently.
Early Feb. So it's in the Feb 6 cycle. So if we get close to that Feb 6 cycle on the analysis mode, your profit can still be fine. Like you're still looking good here. If we go to the end of January, if you get an upside move on this $5 debit, you can double it. You can make $400. But if you're trying to make a killing on this thing, you have to hold it through earnings and then get that move. But yeah, I like this trade.
Same Z's.
Where are we at year to date in this thing? Yeah, so you got some room to go to the upside. I'll throw it on. And this is in the earnings cycle, so we have adjustments we can make. Like if it sells off, you could just kill the crab portion and roll into a diagonal spread in earnings, something like that. Like you can do a lot with a $5 debit on a 20-point wide crab trade here. So yeah, let's get into it. Get a little upside gamma. Will I get filled at 593? There you go. 593.
The number?
That's the number. You might get 592 if you're lucky. Let's see.
No. 90 trace.
44-day ES Iron Condor. 2026 will be my year of no pattern day trading limits. Yeah, there's some changes coming on the horizon.
On the way.
Potentially here. Pretty soon. Keep your eyes peeled for that. But GLD Leap, 365 days out and sell a 45-day call against it. What do you think? Certainly could. I think you just got to make sure that you're not paying way over the width. So 365, let's just go Jan 2027. Let's just pick a random strike here. 45 days against it, it's Feb. Yeah, so like the Feb 420, like a 360 420, that is 60 points wide. You're paying under 60 points in debit. You have no risk to the upside. You're still reducing basis by 10% with that short option. So yeah, you could totally get into something like this if you're playing for more of a defined risk situation and you plan to just roll this perpetually. I'm fine with it. Let's see if we can get one more here. We talked silver and gold, AI bubble of sorts, 2026. Yeah. Nike rallying. Impossible.
It is.
Whoa.
It's been jumping the last, this trading session. I guess the CEO bought shares or something like that.
Hell yeah. Thank you, CEO. I have the 70 strike call.
As do I, leftover position.
But it's in Feb.
Yeah.
And it's only down 70 cents. Like if this continues, we'll be out.
From our earnings play.
Yeah. We'll be out next week if this continues. So please.
I mean, do you think it continues? I don't. They got a lot to overcome. That's the thing. I mean, they're still so heavily reliant upon China, and our administration doesn't seem to have the best relationship with China. That's really what it's about here. So if you believe that the China situation is going to get fixed, you should get long Nike.
Yeah.
Otherwise, you don't believe it, and you shouldn't. It's just literally that simple.
It is really interesting though that like after this gap down, it was just like, okay, this is done. But it's almost filled the entire gap in a week.
Yeah.
So I think that is more interesting. The fact that it is almost filled this earnings gap down in less than 6 trading days, that's really interesting to me because that to me signals like a shift maybe in sentiment because that's fast.
Yeah, no, that's pretty fast for sure. Again, it's all about their situation with China, and maybe that gets resolved. Maybe that gets fixed, and if so, get long it.
And it's still 30% IV, Still low for an equity.
Yeah, it's definitely low. That's the thing. Vol is low, so you won't get beat up too much on whatever you buy. But
well, that's it for us. Almost 12 o'clock here. We got to head out, but thanks for tuning in. Thanks for everything you've contributed and to Options Trading Concepts Live. We love communicating with you all in the YouTube chat, so keep it going in 2026.
Yep.
I'll definitely have a year-end review of the IBIT trade probably next week, so keep your eyes peeled for that. But if you want to reach out to us, you can find us on Twitter. I'm at Trader Mikey B. Jamal's at Jamal Chandler. And Glenn is at Glenn Freibarger. Give him a follow as well. Stay tuned. We got plenty more content coming your way the rest of the day on the YouTube channel as well as tastylive.com. We'll be off tomorrow, but we'll see you next week. And ultimately, that means we will see you next year. Peace.
Your crypto needs a wallet. And crypto is better when it's tasty. You can now do more with your digital currencies with the Tasty Crypto app. We're proud to offer a self-custody wallet for Bitcoin, Ethereum, and Polygon. Transfer your digital tokens directly in-app and access thousands of tokens available only on-chain. Your wallet is your key to decentralized finance. Download the Tasty Crypto app and get started today.
Ready to take your trading skills to the next level? Dive into the world of stocks, options, and futures with tastytrade courses. Whether you're a beginner or more advanced trader, our courses can empower you with the knowledge to succeed. Watch as our team in Chicago shows you how to use the tastytrade platform and go over the basics of trading. Perhaps you'll learn about a new strategy or a potential product for your portfolio. To find our courses, go to the Manage section of our web platform or head to courses.tastytrade.com. Start taking control of your financial future. Visit our courses today.
Tasty Trade's Money Match event. Unlock 30 days commission-free trading. Plus a 1% cash match on all qualifying deposits to jumpstart your trading when you open and fund a new Tasty Trade account. Level up your trading experience with active trader mode, smart order tracking, risk analysis tools, dynamic watch lists, and more. The Money Match event starts now, exclusive to new Tasty Trade customers.
Look who's back testing. Tasty Trade now has options back testing for free. Test your trades with over 10 years of data for the most popular symbols. See how your trades would have performed in the past. Look back at profit and loss and take the guess out of guesswork. Oh, did we mention that it's free? Get back testing at Tasty Trade.
Tasty Trade has crypto, and you can trade with zero commissions. Bitcoin, Ethereum, Litecoin, and more. Diversify in one place. Crypto, we got it, we get it.
We just living it up, yo, that's real life. Wake up, sun grinning through my window. Text my crew like, what's the plan, let's go. Shirts, wrinkled jokes, twisted, nothing too official. The outside flexing on my bike, out the bell with the whistle. Corner store, pick up chips, 2 shoulders. My board in the slides, trying to dump on the stroller. Kids running loose, auntie sipping lemonade. Every front porch got a beat, yeah, it's homemade. No drama, to see waves of laughter. If we got problems, could we solve them after? Grilling on the curb, grill marks on the shirt. Somebody brought the tools, man, let that Luke word. Fun on the block all day, all night. Laughing with my people, yeah, we feeling alright. Fun on the block all day, all night. Good vibes only, yeah, that's real life. Fun on the block all day, all night. Hands in the air, no stress, no fight. Fun on the block all day, all night. We just living it up, yo, that's real life. A's at the table, crowd tilted sideways. Grandpa talking trash, man, he wild for his age. Kids on the hydrant, street gets wavy. Auntie hit the double dutch, yo, she still crazy. Ice cream truck roll out, yeah, we all chasing. Pockets on lead, but the vibe still blazing. Cops roll slow just to see what's good. They know the drill, it's a party in the hood. We laugh, we boast, we live, we boast. It's all fam out here, raise a glass, make a toast. Sidewalk royalty, king of my block. Every place got a story, every joke hits the spot. Fun on the block all day, all night. I feel with my people, yeah, we feeling
Everybody, happy New Year and welcome back to Risk and Reward. It's a good New Year's Eve here. We got markets. We got all kinds of things happening. Markets are closed tomorrow, so interesting to see what happens into the end of the day. I'm joined as always by my wonderful host Errol. Errol, what's going on?
Doing pretty well, brother. Good to be here. If anybody missed yesterday, Gus had surprisingly got us some colorblind glasses, so we're on the second stream for today. We're whipping these bad boys out. So I forgot I had them again, and I was at the desk, whipped them out. I was like, yo, quick dopamine spike. I was letting Gus know because I forgot that I had them again. So, no, with that being said, things are a little bit volatile. Last day of the year, how are we feeling?
Yeah, I'm feeling good. I got things moving in the right way for me finally. It's been a few days in a row here where like the bottom end of my portfolio just barely outweighs the top end, and so I've had a couple churning red days in a row here. But today that has finally flipped. We're moving green, so I'm a happy camper.
No, I love that. I mean, I can't believe this year has really flown by. I know we touched on some of the metals yesterday, but didn't have the metals parabolicing to its highs on my radar, but we were able to get a little bit of opportunity from that. I know yesterday before we had closed, we were touching on some of the metals, got some short delta on some of the metals, and then we've seen a little bit more downside action into the afternoon and while we were sleeping today. So I guess we'll go over all of that, but that's what's been a little bit more exciting for the day. But other than that, it's been really slow. I feel like it's been quiet. You know, if it wasn't for the metals, I think I might be asleep, honestly.
Yeah.
It wasn't for them.
Yeah, absolutely. Yeah, we're gonna talk some January trends. Stay thematic with the New Year's Eve today, and then we'll talk a little bit of metals. You said you made some money on gold while you were sleeping last night,
a little bit.
Always a good thing.
A little bit. The metals are a weird one. We'll get into it though.
They certainly are.
Yeah.
We can jump straight into the slides, I suppose. Just a little tidbit on January trends we got lined up here. We're gonna talk first day, first week, and first month of the year. So, as we all know, the Santa Claus rally extends into the second trading day of the new year, which is going to be January. It's actually weird this year because the second is a Friday, so 3, 4. It'll be the second and the fifth are technically the last 2 days of the Santa Claus rally. But what happens after that? Let's dive right in.
Let's get it.
The first trading day of the year, almost entirely unpredictable. And I think I'd actually be interested to see what year or what day of the year has the best returns historically. But they're all going to be right here in this, 49 to 51% sort of range. The first trading day of the year is negative 51% of the time and positive 49% of the time. But it is a plus 0.2% day on average. So those positive days tend to be larger than the negative days. Is what we can glean from that. First trading week of the year, however, has a much clearer trend. It's positive about 2/3 of the time, negative about 1/3 of the time for plus 0.3% on average. So the first day and the first week actually have close to the same average returns despite how much more often the first week is green in aggregate. And that's zooming out. Obviously, that makes sense because the Santa Claus rally is going to be, conflated into that first week. And we know those first 2 days tend to skew green as well.
So it seems like the sentiment for the first week it leans a little bit positive after the first day, at least. I mean,
everybody's a little excited. New Year's resolutions. Right. Maybe people opening portfolios for the first time and just doing some buying.
Very true.
These kind of things.
Yeah. Maybe that reflects the sentiment in a way that I don't think I really thought about it. But that is kind of funny to see. And what comment stands out here? Stefan says, all my short positions. It's the last day of the trading year. All my short positions are green and in this zone. This feels like a trap. That's what we call trauma. No, I'm just kidding. That's your nervous system recognizing something familiar. No, I'm just kidding. That's funny. But no, we'll see how, the first week of the year is going to be. I think we pulled back a little bit. So maybe we get another little bit of some positive sentiment into next week. But cool to see. Always cool to see the data on paper.
Yeah, absolutely. And then, zooming out into the first month is our next slide here. There's some more interesting trends to look at here. So first month of the year is very similar to the first week, positive 61%, negative 39% of the time for over 1% returns on average. The second bullet point, though, is what's much more fascinating. In years where January is a positive month, average annual returns are way higher, 7 times higher at that.
Okay.
So if January goes green, and this is a binary thing, January could be 0.001% green or 0.001% red. But in years where January is green, there is a 15.5% average annual return. This is all in the S&P 500, by the way, if I didn't mention that already. And if January goes red, there is an average 2.2% annual return. So huge difference. And, again, that makes sense because some conflation begins to come into the picture. If January goes red, especially if it goes deeply red, say you have a, negative 4% January, obviously it's going to be much harder to dig out of that hole. But I was just fascinated to see how different these are. January is very indicative of what we might see for the rest of the year.
I mean, that's nowhere near. I mean, what was the first data point we saw? It was like 49%, 51% off the first day of the trading year. We saw a little bit more of a skew into the first week. And then seeing the 15.5% and then seeing the 2%, that's a pretty big discrepancy. So it's not as close to each other as I would have thought. So never would have thought, January would have had such an effect on the overall outlook for the rest of the year.
Yeah, and I wanted to get more granular and say, okay, well, in years where the first week is green, how often is January green? So that we could extrapolate this whole thing out. Couldn't find any great data on that, so we're laying off. But yes, January, very indicative of the rest of the year. So everybody mark your calendars February 1st and make sure to check and see what happened in January because it should illuminate what could potentially transpire the rest of the year. Of course, nothing is ever certain in the markets.
Nothing at all. And I mean, with that being said, Ranch says he's got a little bit more powder for one more trade. How are we feeling about that, Gus? He's got one bullet left in the chamber, and we got some data that we're working with headed into the new year. I don't know if I had to throw something out there. I'm not in this position right now, but it's got to be metals again. I would say maybe some metals. I don't know how I'm not in the metals right now, so I don't feel comfortable entering long or short right now. But metals is top of my mind.
Yeah, it depends. It depends how long dated you want to get. To me, but if we're talking like a macro 2026 sort of opinion, my top 3 stocks, I think I would say in no particular order would be kind of crypto as a whole. Crypto's been beaten down. I don't think it can stay down for very long. Pick your poison. iBit. You can even get some MicroStrategy if you so desire. I also really like Novo Nordisk into 2026. They've had a terrible year, but they're still a giant player in the pharmaceutical space. They're looking to branch into these GLP-1s and semaglutides a little bit more. And now they're figuring out that while Novo Nordisk has not really successfully been able to venture into the weight loss drugs yet, that their stuff could potentially have implications for Alzheimer's. And they're looking at all that right now. So some positive test results in that regard could do big things for Novo Nordisk. And then United Health, it would be the last one, UNH. I've been long UNH for a long time. As has Warren Buffett, I suppose. It has not really been giving me the move that I expected to get. I was thinking it was very reasonable that we could be back at 400 by the end of this year. That obviously has not transpired. But UNH, giant company, way too big to fail, still the biggest player in their space. And I see no reason that they won't begin to recover as they begin to shed some of the negative press that they've had in recent. Well, in the last 2 years.
I actually almost forgot about UNH. It made me really curious about it. I don't think we've had any other news come out as of recently. I think I had seen, what was his name again? The killer?
Oh, Luigi Mangione.
Luigi. I think I had seen his face on some social media, I think, over the last 7 days. I don't know if any new or important information has come out, but you're bringing it to my attention and I'm going to need to have it on the radar for early 2026.
Yeah, the prosecution is doing a really bad job is what I keep seeing on social media.
Okay. Maybe that's what I've seen.
Yeah, it seems like, and this is all conjecture that I've read on literally Instagram, so take everything I'm about to say with a grain of salt. But my understanding of the situation is that the prosecution seemed to think they would never actually have to go to trial.
Okay.
Now that they do, they've done a bunch of stuff wrong and there's evidence that can't be admitted and it's looking slightly better for his case.
Okay. I think
this is not a moral endorsement.
No, I think
I'm stating the facts.
I think that's 100% ringing the bell. I think that's what the headlines were over from what I think I've seen on X over the last week or two.
So making fun of my pronunciation, semaglutide. I'm pretty sure that's how you say it. I've looked this up before. I think I'm right. I used to say semaglutide, but I think it's semaglutide. I think UNH traumatized me hard. Me too. But I got plenty left. I haven't exited any of my UNH, and every good trader knows it's not a loss until you exit. Albeit I'm down like 90% on one of those contracts. But yeah, and then Novo Nordisk is one that I've been long as well. Actually, the very worst position in my portfolio by a wide margin. But I have 380 days left. So as long as we can get it's January 15th, 27th. So as long as I can get a good 2026 out of Novo Nordisk, that's certainly still recoverable. What's going on, Luis Ranch? I like NVO, especially after their new pill approved for weight loss. Indeed. Novo sounds like something there. Thanks, guys. Appreciate the corroboration. My P&L for UNH this year is about 12K. Oh, 12K positive is what I assume that means. That's awesome. Good looks. Yeah, I was able to exit some contracts that I got at the very bottom, like I think like 271 was my cost average on some of those contracts, and I have gotten out of a few of those, but still have some long ones that are bleeding me. And I also picked up some shares of UNHG, which is leverage UNH, because we can just make leverage products at will.
We do whatever we want.
Yes.
Phenom said, incompetence from this Department of Justice?
No.
Don't even get me started on this topic right now. Don't get my wheels turning, Phenom. We'll circle back around to that one.
You have any top of mind things that you think could be good performers in 26?
For 26?
Putting you on the spot here.
Man, no, it's all good, for 26, man, I would probably go to my old faithfuls. Apple, Meta. I still believe in Apple. I think Apple's going to need a
I like Meta
change.
a lot. I like Meta a lot.
Really like Meta. I did get some Meta glasses recently, so I like them a little bit more.
Oh, sweet.
I was gonna say, we gotta watch yourself.
Yeah.
Fire, right?
You've been enjoying those?
I have. I've only used them a couple times just to really set it up and transfer some of the files to the phone. But we're gonna have some fun with it. We'll test it out, see how you look from my perspective, and we'll have fun with it.
Yeah, I had a bartender one time that made me put some on, and I was pretty fascinated with them. Like she was wearing them, and I was like, oh, I've never seen those before. But they're pretty cool.
Yeah, very interesting.
The audio is really good. That was
it'll catch you off guard.
Yeah,
I think you get really creative with the format of it. So I think we'll have some fun with it. We'll have some fun. We got the colorblind glasses, Meta glasses. We got all the glasses. That's why when I seen that
start stacking glasses on top of each other.
Imagine the colorblind glasses on top of, because those are clear. Anyways, we got some agreements on NVO. And we can go ahead, jump into the Tasty platform, just kind of see what other tickers we can be looking at. I know we'd seen VIX mentioned in the chat as well. And I know they're probably referencing you, Gus, I know you had put on some VIX positions.
Oh, VIX?
Smack Lovin, love the name. He said, Happy New Year's, Tasty Nation. Saw a trade that caught my attention and wanted to ask your thoughts. Buy the VIX February 1850 calls, sell the 1850 puts for a net credit of 8 cents, playing for a vol spike. So trying to get a little bit of long delta. So maybe he's a little bit bearish on the overall market headed into the new year.
Yeah, I mean, if you believe that a vol spike will come before February, then I think that's absolutely a great way to attack it. Obviously, there's precedent there, yeah. But but I mean, I agree. I mean, in this, especially in in this market, it
vol has collapsed for sure.
Yes. Oh yeah, has gotten crushed. But especially with how crushed vol is right now, and the fact that in this market, I mean, things change all the time. It feels like once every 3 to 5 months we have some kind of large volatility event. Mm-hmm. So yeah, I like it.
All right, you take it easy, brother.
Yeah. Good. Cyber names to make a comeback. ZS. Oh yeah. Is that a Zscaler? Zscaler constantly preventing me from using the internet at work.
I know, literally. That
but it's a good service. It's really good security. But and then what's the other one? Is that Pan? What is it? Pan
W.
I'll know it when I see it. Oh yeah, Palo Alto Networks. That's right.
The OG. Very light volume traded on the day. But we'll keep a look at some of these cyber names as well. To point out, I will say gold did treat us very nicely over the last 12 hours. But otherwise, other than gold in the portfolio, we have the Netflix position on. It's a $5 wide put spread, just looking to take advantage of some of the volatility with the Warner Bros. Sale, and then SPY. Not moving too much. 30 days left to expiration. We'll manage by next week, maybe the first week of the year. And just be patient through there. But again, I would say kind of not getting too aggressive into the end of the year. What else are we looking at for the new year? I know we got Meta, we got Apple. I've seen CoreWeave, and some other names.
Yeah, CoreWeave. I'm long CoreWeave as well. Just barely green on that position. It basically hasn't moved whatsoever. But I do think CoreWeave is primed for a recovery.
MSOS. We got some Nike over here.
Recovery, new highs.
Some new highs.
However you choose to interpret these things.
Half glass full. And we can jump to the Trading View platform with some of the time that we have left. Look at some of these metals. Look at crypto. To the point that you made earlier, crypto is really getting beaten down. I mean, right now we're looks like we're trading at the bottom of the range, but it's been quiet over there. And I got to say, just the sentiment on crypto and just the community of crypto, it doesn't seem to have too much chatter going on. So I want to say we've had too much of a Santa rally in Bitcoin and too much of a Santa sell-off. We really haven't done anything when we zoom out.
Yeah, and this is just one, like I said earlier, I just don't know how long crypto can stay down for, and I don't think that this move is unsubstantiated or anything. I mean, I've said a bunch of times, it's not like Bitcoin can just 5x or 10x every year, like that you can't just expect that. So yeah, I think a breathing period is actually probably pretty healthy for the broader crypto space, but I think we can only go so long before we have to retest 100K again.
All right, guys, it's either 100K or 60K. You might be headed to either one or the other, but it's looking like after that initial sell-off, to Gus's point, we haven't moved anywhere yet. But I mean, if we're going to get long to 100, we're having some nice risk to reward at these points.
Yeah, this whole thing is fascinating to me because this is the first year of what seems to be the most crypto-friendly administration in American history. I mean, it's Trump loves crypto. I mean, he's done all kinds of things in this regard.
Sell the news?
Yeah, and
maybe to sell the news.
Perhaps it is to sell the news. I mean, I always think with crypto too, especially in little drawdowns like this, like how many people are, obviously it's people taking profits, but how many people are taking profits from like crazy low levels too? Right. You never know. Like if there might be some holders from 20K that are just happy to get out with their 5X, or I mean, there's still people that got Bitcoin from $5 and stuff, around. So. Yeah, there's a lot of opportunity, I think.
We got big deal with the half glass full.
Ah, I see.
And the glasses.
Half glass full glasses.
If you think the fear is overdone around the previously hyped Neo cloud sector, I'd like NBIS. It's been sideways lately. Q4 earnings something in mid-late February. Let's see. NBIS. Let's take a quick look at that. We'll take a look at some of the metals. Let's see. NBIS is looking like the metals right now. So we're on the daily chart. Looks like we ripped to its highs at around, end of October? Middle of October. Tried to pull back from there. Trading about $85 a share now. So that's another one we
I
can keep on
definitely
the
remember
radar.
Nebius on the run-up. That was one of those ones. I mean, yeah, the run that we had in cloud, in quantum, in AI there for from pretty much like the bottom in April straight up to the highs in October was incredible, and now it just feels like everything is breathing a little bit, and perhaps we got a little overextended on some of those, which happens. I've gotten too excited before too.
Yeah, it happens. Happens to the best of us. Taking a look at some of the metals here, it's looking that silver is making lower lows now, and it's making you kind of wish you sat in some of those metal shorts a little bit longer, but I know we talked about this one over the last couple of days. We had some opportunities here. We saw the first crack come over here on Sunday when the futures market opened up. We had a little bit of a dead cat bounce. This is where we wanted to take an initial short, but the silver product is so large, it was tough to do it on silver. So we were kind of looking at gold for kind of like a sympathy play, since silver ended up being the leader of the move. So it's like, okay, if silver's cracking, showing a lot of weakness, maybe gold has a better chance to follow suit. And it's also an easier contract to keep control of, especially when it comes down to your risk. But this is what we had done overnight. We got on this short position right before we got off yesterday. And then we were able to add to the position at night. And then we woke up in the morning and instantly I'm like, what is the metals doing? And just took it off immediately, right? But it's like, it would have been nice to take it off at these lows, but we were dead in our sleep. Like, not much we can do about that. But
well,
at least
with the benefit of hindsight now too. I mean, you got a good exit. Holistically, it's not perfect, but we're above it now.
No, 100%. So I will say it was nice to get involved in some of the metals, especially without shying away too much sometimes, because it's like the opportunity's there, but it's such a tough product to trade just with silver. But honestly, the risk was really tight on something like this. So whenever we rallied all the way back up here, although we added another contract, the stop was like barely above the highs. So with how fast these metals can move, it was still kind of risk was number one, no doubt. And then this one was earlier this week. So I will say it is funny enough, coming into the end of the year, you don't really plan on taking too many aggressive trades, and then you end up getting some decent opportunities when you're, not too antsy to put on a position. So I'll take it into the end of the year. I'll take it. We'll take it.
Yeah,
see
absolutely.
what we get.
Big deal. Conspiring. Here they're pushing it down so the big guys can get in the crypto. Interesting. You know what? I think here's a hot take. All right, everybody. It's just blatant public knowledge at this point that Congress is insider trading like crazy, right? That's not an insane statement.
Oh yeah.
Everybody's like, Congress shouldn't be able to trade stocks at all. I totally respect that viewpoint. I say let's go the other way. I say let Congress trade as much as they want, but they have to report. They have to report like before they enter. Like the report has to hit whatever Washington. I don't know how it all works. I just have websites where I get it, but they have to report before they enter, or perhaps like immediately after. But we need to be able to get the information same day. That's what I want, because that would be the great equalizer. I don't care if they insider trade if I can insider trade with them. Right. But the screwy part is that they get a 30-day period, and they usually don't report to like 25 to 28 days after they've already put the position on, and oftentimes it's moved 15% by then, and so then it really is money for thee and not for the money for me, not for thee. But yeah, if they just make them report it within 24 hours, get it on my screen, and let's just all insider trade together. I don't care.
I got something for you. What about the people, in Congress that are getting tips, giving it to their family members or friends of friends, that their transactions that aren't even being documented, right? Because they don't have to. So, and then they can get that money back to them, right? I mean, we can really go down the rabbit hole. I mean, I'm sure that's going on.
And this is a bipartisan issue for sure. This is not partial to one party in any capacity.
And we're all negatively affected by it.
Yes.
So
yes, right. As it stands right now, and yes, giving out stuff. There would be no way to ever really prevent that. Even if you prohibited Congress from trading stocks, there would be no way to really prevent that. But at the same time, I mean, how deep does that rabbit hole go? What about insiders at the companies? What about when they know how their earnings?
Well, I was going to say, I think, half the transactions that are I don't even think I think the insider trading that's actually going on is like 10x, 100x, 500x of what is even being reported, like legally. I know they have to report, but I guarantee there's 50 million other trades going through, 10 times the size. Anyways, it's so nice that we have access to these markets, but at the same time,
how about we force them to live in a military barracks and monitor all of their communications? There we go, Jeremy. That's a good idea. I'm with it. Get the petition. I'll sign that. Congress should have to trade live on YouTube. They should. I like it. I have a hard time believing that Nancy Pelosi is an options trading genius. Whoa now, Stephen. Okay. Nancy Pelosi is the greatest trader of all time. All right. There's nothing shady going on there whatsoever. She is 2 times better than Warren Buffett.
Put some respect on it.
How dare you disrespect the greatest options trader in the history of options trade?
In the history.
It's so crazy. The way that she trades too is insane, because she buys stuff like crazy deep in the money. Like she'd buy Apple. Like if she was bullish Apple right now, she'd buy Apple 50.
I need to speak with Nancy, and I just want to be like, yo, Nancy, this is the only test we got right now. I just want to sit her in here and just be like, just log into the platform. You can't do it.
We got the Nancy Pelosi guest spot.
just log into the platform, and that will prove everything. That I'm good to know. I don't even think she can log into the platform.
If a kid can follow Elon Musk's private plane on Flight Radar, we should set up an app that follows documented and undocumented trades from Congress. That's a good idea.
Yeah.
I just don't know how you would. I don't know. There'd be some privacy violations there, because the other side of that coin is like, what if you're just the kid of a congressperson and you genuinely are just like a person in society and you're not getting insider tips, but then all of a sudden you got to have all your trades monitored too?
Yeah. I think that whenever you're in Congress or certain positions of power, I think you just have to have certain incentive. I think in certain positions of power, because I know it's going to seem unfair, but I just think that corruption is just too easy to slide in some positions of power, so that I think you can't have the same incentives as everybody else. I think you have to sacrifice some incentives to be in a certain position. And I know that's going to be the argument. It's like you should still be able to have 100% the same exact rights as everybody else. But I think it can get a little shaky with the corruption, because it's tough. It's in people's nature. I don't know. It's tough.
If you want to get psychological about it, it is. It's human nature that the power is what does the corruption.
Yes.
I think that 95% of people, when they get into Congress, are just people that want to better their state, country, whatever.
Yeah.
But then the power is what does the corruption over time.
Right.
But anyway.
Yeah.
Pretty much out of time. You got any closing remarks?
Last trading day of...
We put targets on our heads?
No, I should have had these on while I said that. No, last trading day of the year. It was a really good year. It was a really great year. We started streaming together this year. It's been a really great time too. It's been really fun. Yeah. Have some colorblind glasses. So shout out to the boy Gus. We'll manage our positions into the new year. Happy New Year's Eve. Happy New Year's. And that's it from my end.
Yeah, absolutely. Yeah, much love to all of you. You guys have been incredibly supportive throughout the year. We seriously never take it for granted. You guys are amazing. You keep us as entertained as I hope we keep you. Hope everybody has a fun and safe new year. Just get an Uber, guys. That's I'll leave off with that.
Call me, bro. I'll pick you up.
Just get an Uber. Yeah.
Gus and I are gonna be out. Me and Gus just in the car, just whip. Anybody in the Tasty community, just hit us up. We pick you up. Pick you up.
Absolutely. All righty. Happy New Year to all. We will be back same time, same place, not tomorrow, but Friday, 12 o'clock p.m. Central Standard Time. Be sure to come hang out with us in the new year, and we will see you guys next time.
tastytrade's active trader interface makes futures markets your arena. Built for the bold, not the bored. Trade CME futures with a single click, from micro contracts to major ideas. And go even further with futures options. tastytrade lays out multiple ladders and charts for total visibility. Plus, hundreds of built-in indicators for traders who want a broader view. tastytrade, pro-level tools, intuitive design, total control.
tastytrade has crypto, and you can trade with zero commissions. Bitcoin, Ethereum, Litecoin, and more. Diversify in one place. Crypto, we got it, we get it.
tastytrade's Money Match event. Unlock 30 days commission-free trading. Plus a 1% cash match on all qualifying deposits to jumpstart your trading when you open and fund a new tastytrade account. Level up your trading experience with active trader mode, smart order tracking, risk analysis tools, dynamic watch lists, and more. The Money Match event starts now, exclusive to new tastytrade customers.
Global markets never sleep. Explore them with Forex, now available on tastytrade. Get in on over 80 Forex pairs, 24 hours a day, 5 days a week, with the Forex platform that adapts to your style and speed. FX marks the spot. Trade it on tastytrade.
Ready to take your trading skills to the next level? Dive into the world of stocks, options, and futures with tastytrade courses. Whether you're a beginner or more advanced trader, our courses can empower you with the knowledge to succeed. Watch as our team in Chicago shows you how to use the tastytrade platform and go over the basics of trading. Perhaps you'll learn about a new strategy or a potential product for your portfolio. To find our courses, go to the Manage section of our web platform or head to courses.tastytrade.com. Start taking control of your financial future. Visit our courses today.
Diversify your portfolio with stocks, options, futures, crypto, and more. Focus on the markets that matter to you. See the odds before you trade using curve analysis, IV rank, and more tools. tastytrade. Download today.
back. It's still Wednesday, December 31st, 2025. Happy New Year's. This is Futures Power Hour, sponsored by CME Group. I'm your host, Chris Vecchio. He's Thomas Westwater. Thomas, we're getting ready to lock the door on 2025 and unlock that deadbolt on 2026.
Yeah, it's exciting times. 11 and a half hours for Chicago. So, you're a little closer there in the future, but
it's true. I will arrive in the new year before you. Yeah, well, the New Year celebrations are kicking off all around the world, certainly not in the metals market today. Our lovely program sponsor here, CME, decided to raise those margins again on the metals as volatility expands and the conditions warrant such efforts. Not great for you and me, Thomas. It's been a roller coaster week here, certainly when we think about what's been going on in the metals, and can't say that we'd be surprised if that continued into next year. But I want to focus the first portion of the show doing something that I like to do every year, which is talk about the risks that could occur going into next. Technically, these aren't called black swans because black swans are unknown unknowns that appear out of nowhere that really no one sees coming. Gray swans, however, those are the events that we can identify ahead of time, and we can more or less assign probabilities to them. There are 10 themes, perhaps, that I'd be keeping an eye on for next year for the casual market observer. If we hear these things pop up in the news, they're probably something that's going to stick and move markets for a little while here. The first one to me, Thomas, is non-recessionary earnings slowdown. You don't need a recession to have equity market pain. If margins compress because labor costs stay sticky, pricing power fades, and financing costs remain higher for longer because the Fed doesn't give us the cuts we want, earnings growth can stall even while GDP stays positive, and that could be a problem for multiples. Which I suppose, secondly, we see that there's a risk that the Fed ends up cutting rates while inflation stays above target. That's not a bullish pivot. It creates somewhat of a credibility problem, and that would be a bad thing to have as we hand off the reins from a Fed Chair Powell to someone who should be announced in the coming weeks by President Trump. If cuts are being driven by economic recession fears or financial stress rather than, well, inflation coming back in, the market has to rethink what this easier policy means. And Thomas, as you know, we like to share those stats on how equity markets treat cuts, if they're recessionary, if they're maintenance, if they are emergency. The market does not want emergency or recessionary cuts. Another thing to keep an eye on here, I'd probably be watching the treasury market, not a debt crisis, not even a default, but maybe a liquidity event. Could there be weaker foreign demands around a potential geopolitical issue revolving, say, around Taiwan or what's happening in Venezuela? There are balance sheet constraints. And Thomas, we've seen how perhaps one of the reasons why treasury market demand hasn't picked back up in the second half of the year is because there's been so much paper coming on thanks to this AI debt build out right now. Corporate debt issuance could prove to be one of the things that keeps treasury yields pointing to the upside, believe it or not. I'm also thinking about energy shocks because we have horrible infrastructure here in the US. Transmission lines are not up to par. We don't have enough energy as is to build out the AI, arms race, if you will, without pushing up costs for consumers and businesses alike. And as we know, affordability is a major problem this particular political cycle going into the midterms next year. And so utilities, while they were a hot trade in the first half of the year, maybe they come back. And I certainly have a list of utility names that I like to keep an eye on as they do maintain their significant pricing power within that particular subsection of the market. And then, we have to consider what happens if the AI build out is just overcooked. And I know that's a thing that Ilya likes to go on about, in part because history tells us we've seen the railroads built out over capacity. We've seen the internet, telecom built out over capacity. The technologies ultimately stick around, but that doesn't mean that everyone survives on the other side of that build out. So, if we see a CAPEX cycle that overshoots, if the returns take longer to show up, if we see companies start to pull back, we've had these fears in recent weeks, Thomas, right? If they're turning to the debt markets and the debt markets are saying, no, this doesn't look great, well, then how can you keep promising the CAPEX that you are going for? There's also a few more things here, Thomas. Before I get into them, though, among these five, which do you think is the biggest risk for next year? Is it earnings? Is it the Fed losing credibility? Maybe treasury market event? Would we call it an energy shock or AI CAPEX failure? Pick one of the five.
I mean, all are, plausible happening. The AI capex overhang, I think that's something that could definitely take enthusiasm out of the market. I think the market has been running on some of the enthusiasm from that. So I see that as a big risk for, if you're speculating to the long side. I don't see it as a risk if you're trying to trade volatility or anything. I think it would be good, but the Fed losing credibility, inflation coming back up, and I believe even if inflation did start going back up next year, I think they would still cut. Not necessarily losing all credibility, but the credibility coming into question in the bond market, kind of disjointing from that credibility, I think is a risk.
There's another set of issues here, Thomas, when we go into the back half of these 10 risks for next year, potentially. There's the dollar, of course. Central banks, they don't announce their regime shifts. They just change how they stockpile their flows, and continued FX reserve diversification could help weaken the dollar marginally. I'd also point out that it's not just dollar diversification. It's really away from other Western fiat currencies as well. Recent years, we've seen that the pound and the euro have likewise lower percentages of global FX reserves. And Thomas, I'm of the belief that if the American security umbrella and economic regime that it sits atop of are changing, then implicitly by there being more friction between the US and those other fiat reserve type currencies, it actually puts the yen and the pound and the euro on weaker footing than the dollar necessarily up front. And so what have we seen in recent years? The euro has actually seen a steeper decline in terms of global FX reserves than any other currency. And it's basically being replaced by gold right now. So the FX reserve story, the central bank shift, Ilya had a macro money on it yesterday. It's, to me, is a major theme. The dollar can continue to stay on this rough path as it's been on for all of 2025, even without a recession. There are a few more things here, right? We could have demographic-driven labor tightness. We could have shift to a different volatility regime without a big market event that triggers it. I'm thinking about 2017, when everyone was coming into this year screaming about how, Trump's first term, it's going to be a disaster. Paul Krugman's telling us to sell all of our stocks. And then 2017, 2018, Thomas, where was the vol for the 12, 18 months until you get into the back half of 2018? Just non-existent. And so a lot of people were off sides for much of that window. We could talk about, rising political risk premium, midterm elections, maybe even something like China, which China is able to stabilize. Why does that seem like a risk? Muddling through is something the market doesn't like. It'd much rather have a clearer picture that China's rebounding and growing quicker, or it's requiring stimulus. But this idea where it doesn't need stimulus, yet it's still not growing, lot of demand being left on the table for the global economy. Thomas, these 10 points here, I have an article that's going up on the website later today. Not only do I talk about these in a little bit more detail, I likewise outline some trade implications. So if we go into a volatility regime shift without a crash, for example, what happens? You probably want to be doing calendar call spreads, for example. Those would most likely outperform short vol in a low volatility regime environment. You'd want to sell wings. You'd want to avoid selling at the money premium blindly because of how the market could change and evolve so quickly. Lots of long vol expressions, for example. So I have a little toolkit here that I've put together over the past week, what I think the big risks are for next year, what the trade implications are for next year. We don't have time to go through all of them here on this episode of Futures Power Hour, which is why there will be an addendum article published to the tastylive blog news and insights tab on the website. I'd encourage everyone to go look at that later on this afternoon when you're looking for something to read tomorrow while you're nursing your imbibing from the night before. Thomas, among these five, as we round this out, which one concerns you the most? FX diversification, a U.S. labor market that proves too strong, volatility regime shift, China stabilizing, or the midterms?
I think the XF reserve diversification is something that is going to continue to impact markets a lot. It's made a hard market for me this year with FX to trade it, but these central banks, they're going to do what they do, getting away from dollars, getting away from euros. That's one of the reasons why I'm staying long gold, long silver, and then geopolitical risk premium. One thing that might be coming sooner rather than later now is Taiwan. They're stepping up drills. It looks like their intentions are at least to take Taiwan, but we'll have to see. That's going to be a really interesting one to watch if it happens. I mean, I expect a market reaction to the downside, but ultimately war is it doesn't really drive markets into protracted bear markets.
It has. I mean, you see the onset of the Russia-Ukraine war, February through September, Thomas. You get like a 6-month window, 7-month window of equity market weakness before things start to stabilize. Taiwan is obviously a different entity than Ukraine and has much more significant implications for at least the AI trade. Ukraine, obviously, Russia, big energy players, big in the ag space. We saw what happened with crude, with natural gas, with wheat, corn, all that back in 2022. So upfront, probably a large scale disruption, which brings us to one of the portions of the show where I find myself being frustrated on this Wednesday as we close out the year. S&P 500 69.28 right now, ESH6 contract. It's been a nothing session again here. If volumes were low yesterday, folks, today they're even lower. Yesterday on the show, we were at 505,000 contracts traded by the time we got to our stocks portion of the program. Today, we're at 464,000 contracts traded. Not sure if that's a surprise because it is, of course, New Year's Eve, and most people are off last week and this week, given the way the calendar falls. You can get a lot of bang for your buck taking off Fridays each of the past 2 weeks, Thomas. And you know what? Might as well throw in the Monday, Tuesday, and Wednesdays as well. So these 2 weeks, we haven't seen the volume here. It's been a market that's been meandering. Remiss to say that the $7,000 call that I have sitting on the table here for today that expires, that I've been playing, was looking to get to, perhaps should have cashed out of that on Christmas, right after Christmas last week, likely going to expire worthless. So I'm going to eat a small loss there. The MES position, however, I do want to hold on to. I do still think that this is a market that in low volume and low volatility, it's difficult to make a significant bear case. I'm not loving the setup heading into next year, but there's not enough here for me to say, you know what, time to abandon ship on the best laid plans of bulls and men.
Yeah, I had MES call spread that I put on earlier this week. I took it off with a loss. It only had 1 day left yesterday, but it just the market wasn't moving the way I thought it would be. Right now, I'm pretty much deleveraged. Going through this holiday season. Next week, I'll put back a bit more, but really, I'm only using about 6% of the buying power in my portfolio. The good news is I've made so much money trading this year that I don't have to work until next year.
Thomas, stocks here at 69.30.5. The S&P's rolling quarterly return right now is a paltry 2.4%. It's not like this is a market that's been screaming to the upside here, although it's clocking around a 16% gain for 2025 when we take a look at the S&P 500. Are you surprised at how the market was able to rebound from early April, the resiliency that it showed all year long, even through summer months, which typically have produced somewhat of a drawdown? August, September, we just kept moving higher.
Since April and the whole Liberation Day and everything. I'm not too surprised, honestly. The AI narrative was really strong earlier this year. It remained pretty strong. It drove the market, especially through mid-year. A lot of these tech stocks just did a lot of lifting. I think that enthusiasm, it's still there. It's not as prevalent right now, but I think it could come back in some way, some form in 2026. I think there's going to be definitely some things that happen with the AI trade where it gives us some more warning signs. some pullbacks in spending where there's market reactions, but ultimately I think it's going to drive us, pretty strongly, probably through the first half of the year. 17%, that's not a bad year for the S&P 500.
No, not a bad year at all, and still above its post-World War II average, which is just sitting right near just under 9%. The NASDAQ, likewise, strong year, up 20.6%. You mentioned the discrepancy between the AI trade and everything else right now. The NASDAQ has not been able to get close to its October highs for whatever rhyme or reason, unlike the S&P or even the Russell, which had extended to fresh yearly highs not too long ago. This is a really interesting setup heading into next year, though. We're sitting at a line in the sand of sorts, 25,650. It's a level that we've been marking off all week, in part because at the start of December, it becomes support, resistance starting from December 12th through December 21st, and then flips back over and is support again. Today, after breaking down through it, we tried to rally back above. The first attempt was rejected. We are now staging a little bit of a recovery here. Low volume, low volatility persists in the second half of the day. And so maybe the NASDAQ just needs 25 more points to find a little bit of a better situation, as it were. The volatility, though, Thomas, going into next year, I know that some of these IVRs, like NASDAQ IVR is 17.1, but I look at the VIX, I look at what's going on in the volatility futures, both in the F and the G contracts here. And I continue to see that traders are not worried about what's going to transpire over the next few weeks, at least in the short term. It just doesn't look like this is a market where people are gearing up for fear. Do you find the lack of volatility as we wind down this year, is that a bit of a surprise given what I see to be a whole bunch of risk going into next year, right? Like next week, couldn't Trump announce the Fed chair decision? Wouldn't that inject a good deal of volatility in the market? Why is that being overlooked as a potential catalyst? Lack of participation? Good question. But vol being down and volumes being down, that's just a bull's market that you can't ignore. And unless the bears give you a catalyst, then I'm still of the let's look long variety.
Yeah, I think there's really... I think that's what you have to go with is going long when volatility is creeping lower like this. The worst risk are those that you can't see. But if you're trading around something, an unknown coming, that's going to paralyze you. So after this week, I'm going to probably position myself a little bit longer, look for a strong start to the year. But also, I think a market like this also shows some degree of complacency. So I think you do have to be ready to take advantage of any big spikes in vol when you do get them. Some people might see this as a sign to load up or something, and you got to leave some powder dry. Because when that does happen, if volatility is really high, especially the way we trade, you really have to just give yourself ammunition for when that happens. So complacency or end of year, a lot of people are away from the desk, something like that. But I'm going to get back into the more long delta side of things for equities starting next week.
Yesterday, we talked about how Fed rate cut odds continue to come back in, and that's the same situation we find ourselves in today. Not that they've moved all that much, but still a 15% chance, 14.9% now of a 25 basis point rate cut in January. That's below the 16.6% we saw yesterday. It's basically the same level we saw last week, a little bit lower than where we were on Christmas Eve, lower than where we were a month ago at 23%. And there is that urge. I know many people feel that if the Fed's not going to cut, you can't be optimistic on stocks. For the Russell in particular, given all the floating rate debt that those companies hold, these are the stocks that probably need the rate cuts more. So over the past week or two, Thomas, really since the Fed meeting, as those cut odds have deteriorated, the Russell's been slacking off. But an 8.8 IVR, it's, you're not really getting paid here substantially to fade this right now. And so I see 2506 as a low that we had here in the middle of the month on the 17th, Thomas. We have our 50-day moving average coming in at 25.03. Russell's currently 25.08. A little bit more weakness from here, and all of a sudden, that low volatility looks appealing to potentially size up maybe some short delta trades. If I'm going to be trading the NASDAQ or the S&P on the upside, maybe the Russell becomes something that I want to look a little bit lower if this divergence keeps playing out. There are reasonable ways to structure, in my view, a bearish perspective right now. I don't think selling vol to the upside, selling a call spread is going to be the best way to do it. Although you could do it. It just might not give you that great risk to reward that you're seeking. So a number of ways to crack this mystery, Thomas. But for now, we have to see how this late day recovery goes. I'm sure Tony and I will cover it, of course, during the last call today. Will the S&P stay above 69.50? We'll get back there. Will the NASDAQ stay above 25,650? I mean, those are the lingering questions as we go into next week, because Santa Claus has not delivered thus far.
Yeah, no, he might be dead somewhere in a ditch,
Jeez.
But this is what I was doing for the first 20 days of December. I had far out of the money long put spreads on the Russell, and those never paid out. But the diverging weakness between the S&P 500 and the Russell is the reason why I put those on, because I said the market doesn't like something, especially with rate cut odds, which we've been moving on a lot. I thought the Russell would take a big dive. So that was kind of my hedge against my long equity positions. And I think this one looks good to put back on, because you could buy these puts for pretty cheap. And at 8.8 IV rank, technically it looks like, if it drops a little bit lower, we could go back and test those November lows, maybe potentially lower. So this is something I'm probably going to put back on. And I don't really want to put any trades back on, the day before a market holiday. So maybe I'll do this Friday, but I think that's a smart idea, is to seek out maybe some protection or hedging in the Russell.
If this triangle breaks to the upside, Thomas, I mean, what more do we want out of our NASDAQ? It's a symmetrical triangle after an uptrend. The S&P 500, similar-ish setup right now. Could these be topping patterns? Sure. Could they be continuation? Absolutely, given the preponderance of evidence ahead of us. If the economy is still growing and the Fed's cutting rates and deficits are going up, why would next year not be another year of acid inflation, of which stocks were a prime beneficiary this year? It's still part of that same playbook. It may not make sense. It may not feel right. I don't know how to put it. Sometimes the market just continues to have a way. The nice thing about today's action in stocks, granted, that bounce off of that 1 month moving average. We hit a low of 6913.75 today. The 1 month is 6909.93 here in ESH6. So first blush, attempted breakout. We pull back a little bit. We get back to the 1 month. Maybe this is footing to rally. So I'm going to stick with MES. I agree with you. I'm not thrilled. I'm not crazy about putting on new trades the day before market holiday, especially because I'm not going to be trading on Friday. So I'll stick with my more limited S&P exposure heading into the new year, even though the current 7,000 call spread is going to expire worthless. Treasuries remain directionless, Mr. Westwater, but vol is starting to reappear. Vol is up in notes. Oh, it's come back down. Well, it was at 18 today. IVR has since collapsed back down to 11.8. How dare I put these slides together before the show? 10.4 IVR here in ZB. I am still holding on to my long put spread here in ZB because we have yet to see a close north of 116. And just the past 3 sessions, we've run into our 50-day moving average here in ZB, and it capped us off right at 116. So I really hate this trade. I do not like when I buy something, right? Selling the vol, one thing. This would have been working out fine if I expressed my bearish view by selling a call spread. But by being long a put spread, I need the market to move. I need it to move in my favor, and it's just not doing that. So bonds, 20-something days to expiration. I'm going to hold it. but I can't say I'm happy here. I can't say I'm happy in notes, which I think you're in a similar position. Being frustrated by what's been going on at the long end of the curve. I need this thing to get away from 112, and 112 has been a magnet and a half. Hopefully at some point over the next, 51 days, we can get a little bit more directionality, probably the other side of the holiday, to do anything like that. But Thomas, I said yesterday on the show, the bond market for me feels like it's been maybe an area of drag for me this year. The weekend around New Year's, I always spend a few hours reviewing my trades, looking at what products work well, bucketing out by time frame, right? Seeing what worked and what didn't, and try to do less of what didn't work and try to do more of what worked. I just have this nagging suspicion that bonds are going to be something that I basically just, for every dollar I put into the market, I got $1 back. It was neither good nor bad. So I'm going to have to re-examine how I approach this market next year.
Yeah, bonds have not been my friend the past couple months. I have a working order right now to get out of my long call spread position on ZB. I had it at 118, 119. So, that hasn't been working for me the past couple weeks. It's down to 23 days out, so I just got to take it off and move on. I don't even want to try rolling it or anything like that. Besides for that, I've been out as the end for 2 weeks. I'll come back into these in the new year with hopefully what is a fresh set of eyes and try to start trading them maybe a little different this time. I'm not sure if I'm too convinced as I was a few months ago on the potential for a lot of upside from here. I think that might be still the case, but more gradual and maybe not. It still looks like we have a range ahead of us, and until we break out in there, I'm going to play it more neutral, I think.
This market. When do we have more auctions? When can we find something that will move this market? I'm going to sneeze, so give me Okay. Love having a cat in the house. Next auction's coming up here, Thomas. The 3-year notes are Monday, January 12th. 10-year notes are Monday, January 12th. 30-year bonds, Tuesday, January 13th. On the other side of that CPI report, we will have 20-year bonds on Wednesday, January 21st. So next week for treasuries, it's really going to be about non-farm payrolls on Friday. There are some minor data releases that will be coming up in the run-up to non-farm payrolls, Thomas. We'll see an ISM manufacturing. I think we would get a JOLTS report, but I don't see it on the calendar here. We do, actually. On the 7th, on that Wednesday, we get a JOLTS report. We get ADP. So we'll have a few different jobs items that could help influence the bond market directionality in the run-up to NFP next Friday. But outside of that, you're really thinking that it's going to be Friday the 9th and then Tuesday the 13th in that little, what's really a 3-day trading window, the 9th, the 12th, the 13th. You're going to have several treasury auctions, several big data releases, potentially some meaningful movement in Fed cut odds one way or the other. So if I'm looking for vol expansion, right, I'm not really thinking it's something that occurs in the next 2 or even maybe 9 days, but I'd be looking for a little bit more out there past January 16th, I suppose. At least January 16th if I'm playing for some sort of volatility expansion here at the long end of the curve.
Yeah, I mean, it's going to be an interesting year to see how the bond market reacts to this evolving Fed and the new Fed chair when the official announcement does come, and to see what he does, especially that first meeting. That's going to be exciting to watch and see how the market reacts to someone besides Powell, who's been leading for quite a while now.
We can make our way over to the manic part of the market, which is the metals. Metals were mashed again by margin hikes. CME Group said yesterday that the decision was made, quote, as per the normal review of market volatility to ensure adequate collateral coverage. So what was up yesterday is now down today. Gold prices, they're off a healthy 1.15%, now 43.34. Silver prices, what goes up comes down, $71.07, an 8.8% loss. So it was feeling great yesterday about silver bouncing back, now not so much. The level that I'm still watching here, Thomas, as the potential tap out point on the current long entry that I have, which is still very deep in the money at this juncture, 70 basically. We got a swing low here coming in on 70.16 back on the 24th, Christmas Eve. If we break below there, we've broken the low that we've had on the 29th at the start of this week. We've broken then the overnight lows that we had in the Asian session last night. It would also be a break of the uptrend, like the uptrend that has carried us this surge over the past several months from 50 to 80, right? That 60% rally uptrend, that starts here on November 21st, and maybe, just maybe, it's starting to end. I'm very constructive on silver, Thomas. Asset inflation's here, is it not? We just talked about that earlier for equities. But the timing of this could mean a deeper pullback. And in 2011, when the CME hiked margins several times over the span of like a week and a half, it was 5 or 6 times over the span of a week and a half, it helped stop the rally, right? Sprinkling the S&B, putting in the Euro Swiss floor, you got a stew going. But it was a stew that was enough for silver, for gold to have their uptrends broken. There are differences now. Fundamentally, the fact that when you look at the margin levels coming into this week, you were basically at max 6x silver for top margins or for top leverage. That's not like where we were in 2011. When the CME started tightening margins in 2011, you had 26 times leverage. So the amount of speculators in this market, lower level, is it driving the price? Yeah. But squeezing out the weak hands it's not the same as it could have been over a decade ago. So below 70, see in a little bit. Maybe we head back down towards 65. I'll pick up some more near 65. But as long as 70 holds, the uptrend's in place. And as a bull, that's what you got to hang your hat on for the time being.
Yeah, silver's had a great year. The best year, I think, from what I'm seeing, since 1979, somewhere around there. So, 45 plus years now. Silver on track for 142% gain from the start of the year. And, that's the 4th gain in a year, but the past 3 years, it's dwarfed in comparison to what we've done this year. If you told me at the start of the year that silver was going to be, closing above 70 or even getting to 70, that'd be a pretty, it'd be a very enthusiastic outlook on it. So, I think you're right, though. I think this might need a bigger pullback in the margins. That's one of the first things I saw this morning on the news that I look at is the increased margins. And that is definitely not good news if you're bullish. I'm in a long call spread. And, I should have just got out yesterday with a nice little profit, a really quick profit from taking the trade on the day before. And now I'm in this product where there's a lot more uncertainty than there was when I put on the trade. And, this is a part where I'm at a very small loss right now. I don't want to take it off, though, but I just see a potential for, a bottom to give out here and this to move lower. I think the margin story, like you highlighted, it doesn't end up leading to good things right away. So I don't know. Gold, I'm also long gold, so not a good day to close out the year for me.
No, it's not a great day to close out the year either for me because of what's happening in gold and silver. Although gold is up over 60% year to date, silver's up 140 something percent year to date, as you just noted. It's their best years ever since 1979. I mean, I'm not mad at how we traded gold and silver this year. Wish we went out with a little bit more of a bang. But gold and silver gilded, I think, what was a really strong performance in 2025 for myself personally, hopefully for you as well, Thomas. So listen, 70 holds, I'm game. If it breaks, I'm out. The CME could continue to raise margins. They've done it before. And if volatility continues to stay elevated, which it is, right? We go back to where we were on December 24th. December 24th at 11 a.m., we closed at $70.73. Or at $70.85. IVRs are in the same ballpark, mid-80s. So, Has silver done anything in a week? No. If silver didn't do anything for the past week, would we have been apocalyptic? No, but we would be saying, hey, the uptrend may be dying here because we've moved sideways, and now the uptrend from the late November low is in question. So if we lose 70, maybe it's time to cash in these chips. Not going to get distracted by the noise here in thin liquidity conditions that have been exacerbated by margin changes.
Yeah, I still think there's probably a lot of longs that have to get out of these positions. I think cracking below 70 is going to be enough to do it for a lot of people.
And then it's potentially an elevator ride down, which that would not be fun. It would definitely get our 2026 off to a bad start. So it's not just silver and gold today. You've seen all the metals come in. Copper's off 1.3%. We can go over to platinum, which is down 9.9% itself after an explosive day yesterday. Our vested interest, of course, is in copper at 570. It's doing exactly what we hoped it would do when we put on the long out of the money call spread at 5.758 a few weeks ago. We've started to move up into that area. And at 26 DTE, is this something that needs to be cashed soon? Yes, because we're getting close to 21. I would point out that, again, like so many of these metals, the rally that's been in place since November 21st, still intact. And if we want to consider the recent consolidation here, Thomas, I would posit that this looks like a bit of a triangle that's starting to come together here. So triangles after bottom left to top right in your chart, typically continuation patterns. Yes, it may be getting more expensive to trade the metals, but these patterns haven't broken yet. And until they break, the technicals demand, if that's the type of trader you are, that you stick with what's been working.
Yeah, I still like copper for 2026. The fundamentals, they look good. We've done over 40% year to date on copper. Last time I checked, at least it was around there. And I think it'll keep going up with it doesn't move lockstep with gold and silver, but I think the narrative around metals generally overall with what's happening with fiscal and monetary policies, pretty good outlook. So I'm going to keep looking long. I did get out of copper the day before we had, when was it? I got out a few days ago sometime. Good position. If I can load here. Yeah, I got out Friday last week. I was going to get back in. Then we had that, we came back into the market. Big drop on Monday. I want to get long again. So, copper volatility 70, if you look at CPER. Yes. So that's not bad at all. I'll probably do the short put spreads again on it. I would put it on today if we weren't closed tomorrow, but I just don't want to be putting on positions before a holiday.
Not putting positions on before a holiday. I'm very much with you there. We can stick around with metals for a little bit, Thomas, but I would prefer to go into energy and then just spend a brief little bit of time in the ag space because we haven't done that in a little while, and I think that deserves a look considering those are futures products after all. Energy powers down today. It's, buy the rumor, sell the news, dare I say, Thomas? We got confirmation yesterday that the U.S. had officially begun to strike Venezuelan infrastructure. The CIA conducted a drone strike. Markets fell from that headline. We also are falling back today, and just being completely ticker agnostic, news flow agnostic here, technically speaking, this is now a bearish engulfing bar or a key reversal up against the 50-day moving average. So the fact that we're seeing the 50-day moving average, which for the past several months, really since late September onwards, it's been the stopping point on rallies. This is a short-term signal that maybe the market has overreacted and has fully priced in whatever would be transpiring with Venezuela. Hear me out. if it's not a full invasion, Thomas, and again, they have 1 million barrels a day that go into the global market. It's 1% of global supply. And getting the current Venezuelan oil out of the ground and into the global market supply, I know they have 300 billion barrels of reserves. Realistically, having looked at the research on this from other industry experts, I wouldn't call myself an energy infrastructure expert by any stretch of the imagination. But doing some research into this, it appears that you wouldn't be able to get to 3 or 4 million barrels per day at the very high end for at least 3 or 4 years, maybe 2 if the transition went swimmingly well to a new regime, if a new regime comes in. But if we're not invading and we're just kind of prodding and containing and ring fencing, where do we go here next? What's more interesting to me, forget Venezuela for a quick second, and we've seen volatility come off the board. It's a 16.5. We were in the 30s just or high 20s a few sessions ago. Trump has been talking about another Iranian strike. I tweeted this out a few months ago that given the timing of what they said about restoring operations to Fordow and other Iranian nuclear facilities, we should be looking for oil to potentially get a little bit more active after November. That was wrong, obviously. The timing-wise, it was wrong. But sentiment-wise, given what we've heard in the past 24 hours, I think it's close enough where we should just have in our back pocket. There could be another situation like what we had in June. And I'm much more interested in fading off a geopolitical rally, induced rally in oil because of something Middle East related than one that's South American related. So yeah, Thomas, 58, 59, we could work with this level actually going into the new year because we have this 50-day moving average consistently proving itself as resistance. We have our engulfing bar here. We have another engulfing bar with today's candle. So we could operate around both of these and say, you know what, as long as we hold below 59.60, we're golden. It actually might be a decent trade. At 48 days, 33. Not much liquidity here right now, Thomas. So there is that problem. Finding the right mix for position is probably going to be difficult right now, but 60-61 with a 66% probability of profit, risking 3 to make 1 interest you. That's kind of standard practice for what we like to do around here, tasty wise. There are ways to express this, is my point. But the technicals, ticker agnostic, it looks like we've topped out.
Yeah, I got a iron condor on between 57 and 62.5 for crude. We're getting close to the put side, but I'm still comfortable with, where it's at in the price action as it relates to the chart. We had EIA numbers come out today. Crude oil stocks, they fell more than expected, but the gasoline and distillate stocks, those rose, and they rose a lot. I had the numbers somewhere here, but I want to say distillates rose somewhere around 5 million barrels, or gasoline rose 5.8 million barrels, and then distillates rose 5 million barrels. So that's a strong increase for both of those products. And crack spreads have responded by, really dropping. 3-2-1 crack spread is down to $20 now. That's about the lowest since June. And those crack spreads are the refining margins, theoretical for refiners. So when those drop a lot and they drop below certain levels, you start getting refiners pulling back. It's a sign that demand isn't there. And I think the narrative for the crude oil market going into next year, it's one of building inventories across the globe, especially these products, and that's what we're seeing. So, oil through Q1 at least, I see it staying below really this 62, 61 level, trading anywhere, from the low 50s up to there, I think is probably the base case scenario for me.
So 106 days. If we wanted to put on the oil is not going to trade above 60-61 trade. That's right in the wheelhouse. 65% probability of profit, risking 3 to make 1. That's not bad work, Thomas. I mean, it's going to have to hold it for 3 months, 106 days. If you wanted to wait until March 31st, it's going to be, 90 days effectively, right on the nose. But there is a way to articulate that view and execute it in the market at a reasonable risk to reward.
Yeah, and I feel the same. I think Venezuela, the fact that we've seen a CIA operation targeting port, even though it wasn't a major strike, the failure for the oil market to react in a big way. You see this a lot more in the Middle East, but in the Middle East, there's a lot more potential for disruptions. You've choke points for shipping lanes down there and things like that, and a lot of proxy groups for different countries. And there's a lot of you could get into like a very muddied situation very quickly in the Middle East, whereas Venezuela, I feel like it's newer in terms of what's happened in the past, at least recently, but it's a little more clear cut. If major U.S. strike goes, then this percent of supply falls off the global market, and that's that. It's easier to predict maybe the outcomes for energy from it.
Natural gas, you're down 7% again. Natural gas is so fun to trade. 84.5 IVR, can't look away. Thomas, the weather that's coming up around the corner, it's been so weird here across the country. It looks like some of the heat is starting to recede. The 14 day temperature outlook, it's no longer a gigantic, deep dark red dome over Texas and the entire plains. Instead, it's just starting to look a little bit more normal. Nevertheless, overhang, of course. Also overhang, of course, Thomas, we talked about it earlier in the GDP context. How come the economy was able to rebound and stay strong through the third quarter and the fourth quarter without the government shutdown impairing things substantially? We didn't have any hurricanes. No major economic disruption. Also, no major supply disruption for the energy markets this year. And that is something that could, traders in the start of the summer, it's hurricane season coming up. That didn't work out. And that is a trade that can work out in bits and spurts over time. So, energy, it's certainly a function of what's going on weather-wise right now. And with those warm temperatures sticking around, what is there to do but see natural gas go lower? I'm still in a position that is, we could get out of it today. We're at 27 DTE, and this has been a just very frustrating trade. Do I want to take it out for 150, 140 loss? No, there's still time. Maybe I should have taken it off yesterday above 4.2, but it's not done with its expiration cycle yet. So I'm going to have to ride this out. If we can get a dollar, if we can get a 10-cent bounce, I'm just so close to the expiration window that I probably will take it off early.
Yeah, the weather is not frightful, but looking at my position is short put spread 3.4, 3.5. 55 days out, though. So, I have faith that the weather is going to shift and come in and save this position for me. I'm not ready to take it off and eat the loss here. Even though, in hindsight, I would have loved to buy down here and not, where I did. Anyways, there's not much more to say in natural gas. It's going to do what it does based on the weather right now.
We turn our attention to FX before we head over to ag real quick. We're seeing that the dollar is firming up across the board today, and it's another session where it's a very modest gain. We haven't seen any sort of Rubicon crossed yet, although we are at the Rubicon. I point that out because the downtrend from the high, November 21st. Oh, Thomas, we don't believe in coincidences here. Just as gold and silver may be threatening to break their uptrends that started on November 21st, the dollar is on the precipice of breaking its downtrend in place since November 21st. At a time when we go back to the bond market here, we go over to ZB real quick. It looks like bonds were just rejected at 116, so yields are starting to tick back up. The 10-year yield, just to make the point, Still holding on. Can't quite crack through 4.2, but then again, we can't break down below 4.1. So yields are still here. Okay, so the dollar may have something going for it right now. It's a 25.8 IVR in the euro. We're starting to see that its uptrend off the recent lows is breaking. It's finding support against its 1 month moving average today, as the dollar index is finding resistance against its 1 month moving average today. So again, not a coincidence there. The euro is 57.6% of DXY. But this could be a wrinkle, a curveball going into next year, at least for the first few weeks. The dollar all of a sudden is trading to the upside, Thomas. Silver breaks below 70. I mean, I feel like those are going to be stories that go hand in hand. If silver's breaking below 70, you probably have more headroom for a dollar rebound. If gold is losing its uptrend, it's down below 4,300, right? You're probably seeing the dollar have a little bit of a rebound here. But there are those pieces all together. November 21st onwards, silver, gold spiking, the dollar coming down, bonds not able to make much of anything. I can't see that they're not interconnected given how FX and rates typically trade together. Among the major currencies, what is the most interesting one, how it's positioned, the volatility reading? What do you have your attention on as we get ready for next year?
Technically, yeah, I do agree. It does look like a dollar rebound could take a foot. I mean, I kind of like the short Canadian dollar position if you're looking for a long dollar. That one's been, it's been lifting up a lot. It's been staying above its 1 week EMA. I think that has some room on the downside. Usually when I trade the euro just because there's a lot of optionality in how you can trade that.
Yes.
Yeah, I think short the pound maybe. The pound bounced nicely off of its 21-day EMA. It's done that a couple times since the start of December. So, I'm not too convinced, but if we see a better technical move for these, I think I will get some exposure, long dollar via short pound, maybe euro, or the Canadian dollar. Just it depends really what I'm finding when I'm trying to trade these positions. And when I trade currencies, it's usually not a view so much on the currency I'm trading. It's really how am I trading it against the dollar.
Sure. We think about these various currency products we have here. There's, of course, 6A, 6B, 6C, 6E, 6J, Australian dollar, British pound, Canadian dollar, euro, yen, respectively. There are also some micro versions. We do have M6A, M6B, MCD for Canadian dollar, M6E. For the Canadian dollar in particular, MCD is a $1 tick value, whereas 6C, the big product, that's a $5 tick value. There's also a bunch of new currency futures on the platform that were added over the course of 2025. While they may not have listed options for them, you can trade the futures outright. There is 6M for the Mexican peso. There's 6N for the New Zealand dollar. And there's also 6S for the Swiss franc. So while we don't have, again, the listed options here, if you're looking to trade currency futures, we do have those peso, New Zealand dollar, Swiss franc likewise available. And of course, Thomas, people could go and it's not a futures product, but you could always go over to tastyfx and get spot FX trading enabled on your platform. And you don't just get the majors, the dollar majors, but you also likewise get all of the currency crosses, the euro yens, the pound Aussies of the world that people may find to be products they'd like to get into their wheelhouse, into their quiver, so to speak, for 2026. I did mention that we're going to briefly hop on over to the ags here because there has been a dramatic change over the past few weeks in the ags. I recall talking with you around Thanksgiving, shortly after I came back from paternity leave, and we were looking at wheat with an IVR close to 100. We're now sitting near session lows, yearly lows, and we're looking at IVR of 3.3. We can head over to corn. That volatility is sticking around at 76. And then in the beans, well, this one's back to 9.1. Why is there such a chasm, Thomas? And give me a minute here Why is there such a chasm in volatility readings, this big divergence between the corn, the wheat, and the soy right now?
I mean, I think, for beans, for soybeans, what we're looking at, China was supposed to come in, there was some hope, about a month ago, 2 months ago that they would, and they just haven't. So, Brooke Rollins, she made, pretty grand, saying China's going to buy 12 or 13 million metric tons by the end of the year. And then she started saying other things and walking back on that a lot. China hasn't come in a measurable way. And beans have just been, they've given all of that hope back from, the start of October. And it's just been kind of a bloodbath over the past few weeks for them. Corn had a supply problem for most of the year. It was being driven down on it. And then, the harvest season actually came. We have all this corn, prices were depressed. And then you kind of got maximum bearishness kind of priced in there. And then the USDA, they came in with the WASDE last month. It looked a little more optimistic for a few of these. And then wheat's been having a lot of the swinging volatility on what's happening in the Black Sea. Ports get struck, military action, things like that. Supply chains get cut off. So there's been volatility driving that. But overall, we got another WASDE coming up in a couple weeks here, and it's the winter, so the harvest is in for most of these crops. It's all about what China is going to do for soybeans in the next few months. Can the U.S. make a deal?
What's next on the calendar for the rest of this week? Tomorrow, nothing. But we go over to, of course, what's happening on Friday. There's some data from abroad. If you were trading any of the currency futures or spot effects, might want to keep an eye on them. But they're not substantially important pieces of information. Instead, of course, we turn our attention to next week when trading really resumes on January 5th. And that will be when Futures Power Hour is back in the new year, January 5th. So for all of our viewers and listeners here in 2025, Thomas, I want to say thanks for coming on to this journey. Hopefully you're able to make some good trades along the way. Hopefully you're able to learn about futures trading along the way. We have much more learning to do in the future, though, and we have much more trading to do in the future. So be sure to tune in for Futures Power Hour 2026, 1:30 Eastern, 12:30 Central Times, Monday through Friday here on tastylive. With that, Happy New Year. See everyone on Last Call with Tony as we do our year-end prediction announcement. Thomas, hope you have a nice evening with the family. And of course, everyone, stick around. There's more Tasty Live coming up next with Dr. Jim Schultz from Theory to Practice.
Your crypto needs a wallet. And crypto is better when it's tasty. You can now do more with your digital currencies with the Tasty Crypto app. We're proud to offer a self-custody wallet for Bitcoin, Ethereum, and Polygon. Transfer your digital tokens directly in-app and access thousands of tokens available only on-chain. Your wallet is your key to decentralized finance. Download the Tasty Crypto app and get started today.
Grow a strong community with Tasty Trade's referral program. When your friend joins Tasty Trade, you'll both receive $100. As your community grows, you get more bonuses. The referral program runs through December 31st, only at Tasty Trade.
Okay, cowboy, here's an earnings event. Keep an eye out for them when you open your trade. They're fast, they're loose, and they can take you for a wild ride. But that's no reason to steer clear, because you can be your own personal earnings event if you take the bull by the horns. What makes earnings events so special? Before the event, people will start guessing how the stock will move once the earnings report is released. That, in turn, makes the options IV rank higher. Like way, way higher. The nearer the event, the more the speculation, the higher the IV rank. Then right after the event, IVR goes the way of the buffalo. If you sell high premium options right before the event, when IVR is really high, you can take advantage of inflated prices and lock your profits when volatility disappears. Only if, and this is a big if, the stock doesn't move against you. If it does, well, sometimes you eat the bear and sometimes the bear eats you. Earnings events can hit you hard. They can also pay off big and fast if you play your cards right. Pretty simple.
I'm Jim Schultz, and this is From Theory to Practice. Welcome to the show today. Welcome to the broadcast. Man, welcome to the final trading day of 2025 edition of what it is that we are trying to do. You made it. I made it. This is an exciting time in both of our days. So thank you guys so much for being here and being a part of the network and being a part of my show, because it is only because of you all that we can do what we do. So thank you guys so much. If you guys are watching over on the Tasty Live network, that's a good move. But a better move would be to pop on over to YouTube, because if it is real time, December 31st, 2025, right around 2:30 Eastern time, you can pop in the chat and you can communicate with our brethren who are also watching the show. Man, doesn't even matter. You're a bull, you're a bear, you're a metals bear, you're a metals bull. It doesn't even matter. Everybody is celebrating today because it is indeed New Year's Eve. And of course, we all want to celebrate, especially when it comes to pumping the algo. So get in that chat. If you have a question for me, drop it in there. If you have a story for me, drop it in there. If you got a joke or a comment, drop them all in there. I love it. The algo loves it. Everybody loves it. So Ryan, go ahead and bring us into the market. So today's going to be super fun. So I foreshadowed this a couple days ago. So a couple things. Number one, we're going to go through a little market commentary, which, is it going to help you? Are you going to become a better trader? Almost certainly not. But is it on par with anything you would find elsewhere? It most certainly is. We are going to recap my predictions from last year. So if you go back into the archives, I was watching the show. I'm like, man, market's moving, things change. Like the hair was short. It even looked a little done up for that show. I'm like, man, was I feeling okay that day? I'm like, man, that's some crazy stuff. We obviously went with the magenta shirt for December 31st, 2025. So that's no surprise, or 2024, I should say. But I went back in and I looked at my predictions. And as I'm going through like my reasoning and my rationale, like I'm watching myself from 12 months ago to the day, I'm just shaking my head, man. I'm like, man, could you be worse at this? Like, could you be any worse than you currently are when it comes to predictions? I don't think so. And you guys are going to see that with your own two eyes right here and right now. So we're going to go through my predictions from 2025 based on what I laid out there on December 31st, 2024. And then I'm going to give you my predictions for this upcoming year. So you're going to want to make note of these, write them down, put them in, the notes function or the notes app on your phone, because you need something to fade 12 months out of the year. I got you covered. So, okay, let's look at the market though. Market's been pretty quiet for most of the day. I mean, the equity market, that is. I mean, the metals market is absolutely bananas. Absolutely banana daiquiris. Look at this thing, man. You've got EMI S&Ps down 28. You've got the risk-free instrument, also known as the NASDAQ futures, extremely high risk, not really risk-free in today, down 131. You've got the boomers down 197. And you've got the Russell 2000 futures index down 13 on the day, man. You got bonds down. You got notes down. You got oil down. You got UB40s even down. On a day like December 31st, UB40 down? I mean, that's like some red wine type of stuff. I'm like, man, I don't think that makes any sense at all. Gold down 59, man. The Shifty is not celebrating today. You've got silver down $7.50, threatening to pierce below the 70 level. And of course, all the bears will come out of the woodwork. If this thing falls below 70, all the bears that were selling it at 33, 35, kind of like your boy was doing, they will all come out of the woodwork this weekend, and they will let you know that we called it, man. We 100% called it. Short at 35, topped out at 82, down below 70. Let's take some victory laps. And so, yeah, lots of red on the screen, market commentary-wise. Volatility might be up a little bit, just a smidge. Hey, volatility futures are down a little bit. And then spot volatility is up a little bit, 36 cents. Okay. But I don't really care about that. You don't really care about that, right? You guys want to know, how did I do last year, or this year, I should say. Okay, so we're going to do this. I've got all my notes down here. I've got all my predictions. I've got all the stats and all the numbers. We're going to do this Final Jeopardy style, because it's the only way that you can do it, right? So here's your underlying. So there's going to be the stock. We're going to go beginning of the year, a little BOY action. We're going to go my prediction. So what was my prediction? And again, this is all on tape. You can go back and check it for yourself. I have not doctored the tapes. I have not changed things, that's on me. That's on me. Because if you go back and watch the show, you see me kind of say, all right, if this doesn't work out, I'm doctoring these tapes. And I never did it. And I most certainly should have. But end of year. And then the question becomes, did I miss right? Like for now, let's keep it kind of open-ended. Like it could possibly be a question mark. Like, did I miss or did I actually nail it? Okay, so we did five. We did five. And I want to know your predictions, by the way. And the algo would love to know your predictions. So put them in the chat right now. We'll try to get to as many as we can right around the second half of the show or thereabouts. And so let's go ahead. Let's see. The underlyings that we covered last year were SPY. Oh, hold on. SPY. So SPY, QQQ, DIA, TLT, and GLD. I like doing it this way as opposed to doing slides because I like to be able to see the market while I'm doing this. This is how we did it last year. And so I've done it with slides in the past. I like kind of being in the market while this is happening because if something crazy happens on the final day, I kind of want to know. And so SPY, QQQ, DIA, TLT, and GLD. You would never know any of that by looking at my penmanship, but just verbally follow me forward through the forest. And so if you're accessing the audio only version of the show today, you're actually the true winner because that's all you've got to go on is a sultry voice taking you forward down the pathway through the forest. Okay. So beginning of the year. Now, these are not exact numbers. I just grabbed kind of the numbers that were on the screen when I was actually doing the analysis at the end of 2024. And so if you go back and you check like, end of year closes and candles and things like that, this may be off by a little bit, but it's not going to be that big of a deal. And besides, this is not intended to be, so granular that we're, nailing these things to the 100th%. But the beginning of the year, SPY was 592. So I've got 592. Let me grab a different. Let's grab like yellow. 592. So beginning of the year for SPY was 592. My prediction. So right now, right, SPY, let's actually bring up SPY. I mean, I already wrote this down because I was looking at this earlier. So this may be a little bit different from obviously where SPY is right this second, but the markets are moving and things are changing. So I had to lock something down at some point. But SPY right now is 686, give or take, right? So what was my prediction? Let's grab magenta for my prediction. So my prediction, 495. So that was my prediction, 495. So I think we missed it a little bit. Like I think we were just a touch off on the old prediction there. So the miss was, I predicted it go down by 16%. We're going to break out all the colors today. And it actually went up by 16%. Can you get worse than that? So can you be worse than that? It literally did the exact opposite of what I thought it would do. This has been our calling card, people. This has been what I've been telling you guys to do from day one. From day number one, you should be doing the exact opposite of what I'm doing. Not just a little bit of the opposite, not like some elements of the opposite. You should be doing the exact opposite. I present to you Exhibit Double B. I predicted 16% drop on SPY. It was actually a 16% winner. Okay, so what about QQQ? So QQQ started at 519. The end of the year was I got 618 as of a little while ago. It might be a little bit lower now because the market is dropping. It's kind of in free fall. I mean, the NASDAQ is almost down 0.5%. That's crazy stuff. 618. My prediction, let's grab magenta. My prediction on QQQ was 440. 440. So how far was I off? Well, I predicted a drop of minus 15%. And there was actually a gain of plus 19%. And so we missed the mark on that one a little bit too. Again, almost perfectly feng shui in terms of we thought it would do X. It literally did the opposite of X. Okay, so DIA, we're kind of running out of room here a little bit. I'll have to scrunch down my numbers even smaller to make them literally impossible to see. But it'll be okay. We'll make it through. 427. The end of the year, diamonds. Look at the boomers go, man. 482. 482. Ooh, that's bad. But that's 482, I promise. My prediction for the boomers was 420. We actually predicted kind of an unch year on the boomers. And so I predicted that the boomers would go down by about 2%. So -2. They actually went up by 13%. So plus 13. I'm trying to save some real estate so we can do TLT and GLD. Okay, what about TLT? So TLT, we predicted, or it started the year, I should say, 87. It ended the year at 87, right? So there was your UNS prediction. I predicted a massively bullish year in bonds. I predicted they would go up to 111. And so I predicted a rally of 28% plus 28, and it was actually 0. And then lastly, GLD, if we could just scrunch this guy in. I was a little bit too fast and loose with the space up here, but it's okay. We're making it through. GLD, we started. This was the only one I got the direction correct. But look how badly I still missed. GLD, 243. The end of the year, 397. My prediction on the year, grab the magenta really quick, 265. So I actually predicted a 9%, a plus 9% year. Ooh, man, this is bad. And it was actually plus 63%. So that's not very good. Like, I don't know how you would score this at home personally, but I would say that's pretty bad when it comes to predictions. So when it comes to my forecast for last year, man, we really, really missed the mark. And I see you guys trolling me in the chat, which is good. That's what you should be doing. And I see Death Sneeze is trolling the penmanship, which you should do, of course. And I see Mikos is even talking about TLT 111. I know, if only it went to 111. And sorry, so these were the predictions from last year. Okay, one other thing I do want to point out, though. Well, actually, we'll get to that. We'll get to that in just a minute. Let's talk about my predictions for this year. Okay, so I'm going to do the same 5 instruments, but we're also going to add silver, obviously, because silver is fun. It's exciting. It's the shiny new object, right? So we got to have a take on silver. So let's go to SPY. So this year, so I think that so let's go to December 31st, 2026. Okay, the expected move on SPY is $96, $96 to $97. So that means, you've got SPY right now at 684 and some change. That means that we're going all the way down to, that would be, down to 585 on the downside, or all the way up to 780 on the upside. So basically 580 to 780. Man, that's crazy. SPY 780, that would be some really, really wild stuff. So I think 2 things are going to happen this year for SPY. And again, use last year's predictions as your guide to how much stock you should put in whatever comes next for the next 8 to 9 minutes. Spoiler alert, it's exactly 0. I think we are going to touch both of those sides of the expected move. So I think at some point, I don't know which one's going to come first. I think we're going to touch 585. I think we're also going to touch 780. I actually do think this year we are going to end basically unchanged. So I see this being a massively, massively unched year in the S&P 500. Let's say slightly higher, just so that we can say that we couldn't beat them, so we joined them. So I'm going to say SPY 688. So SPY 688 unchanged on the year. That is my S&P 500 prediction. But I do think that we touch both ends of the expected move. QQQ. I predict similar levels of volatility. I predict that, they don't have a December 31st? Oh, there it is. I predict we touch both sides of the expected move, very similar to SPY. I think the NASDAQ, though, has a slightly weaker year than the S&P 500, but I still think it's going to be very, very close to UNC. So NASDAQ expected move is plus or minus, 103. And so that would put us all the way down to about 510, 512 on the downside. On the upside, you're talking about 720 with a 616, QQQ today. Man, that's some wild stuff. I think you've got QQQ at 616, and let's call it 600. Let's call it 600. And let's go 599.78. They've got the janky strike right there for us. Let's go ahead and take, the low-hanging fruit right there. So I'm going to say 599.78 on QQQ. So slightly lower, but basically unched. So I think unched S&P 500. I think unched QQQ. Let's go to the boomers. So I actually think the boomers are going to surprise a lot of people, man. I really, really do. Just like they've been doing their whole careers. Like, you think that they're done? You think that you can count them out when they're 60, when they're 70, when they're 80, when they're 94? Like, nah, man, they're still going to be out there getting it done. They're going to be out there producing results. And it's going to be the same thing this year. You've got, if we go to January, if I go to December 18th, 2026, that's the closest I have to, New Year's Eve. The expected move is plus or minus 58. I think the Boomers have a very, very strong year. Now, I say very, very strong. I'm thinking maybe 8-9%, which, I mean, if I'm correct on my predictions, which history is not necessarily a good, indication that it will be even close to my predictions. But, if the Boomers, were able to peel off 8-9% to the upside, while S&P 500 was unchanged or NASDAQ was unchanged or slightly lower, that would be a big victory, in my opinion. So I see the Boomers going 482 and let's say 515. That looks like it's about 7 to 8%. So let's say it's 515 on the upside for DIA. So those are my diamond predictions. Let's go to TLT. So this year, I actually think, you've got the rate cutting cycle that has commenced and you've got everybody excited about lower rates. I actually think bonds are going to surprise us this year. I actually see rates going higher. Maybe not the rates that the Fed is cutting, but in terms of like the market rates, like 10-year rates, 30-year rates, I see the longer end of the curve potentially going higher in a somewhat significant way. So I could see TLT going lower. So I'm going to say TLT, we go to, December 18th, 2026, you've got an expected move of plus or minus $7. Man, wow, that's really, really brutal. Man, like, wow, like don't even get me out of bed. Like, I'm not putting pants on for that. Are you putting pants on for that? For an $8 plus or minus expected move on TLT? Like, no, thank you, man. But anyway, TLT at 87. I think TLT is going to finish the year about 79. Let's go right outside the expected move to the downside. I'm going to say 79 on TLT. Okay, now the real fun ones, GLD and SLV. Okay. GLD up 60-something%, which we just went over. SLV is up 1,000,000%, which we didn't necessarily go over yet, but we all know that it's up about 1,000,000%. So GLD, if I look at my expected move for December 31st, it looks like, let me see here. Wow, it's so weird. I don't have a December 2026. The closest I have is January 15th, 2027. So I'm going to choose that. The expected move for gold for GLD, this is not the miners, this is not the futures, this is obviously GLD, right? The gold ETF, plus or minus $66. So that would mean you're going all the way up to 460 on the top side, or all the way down to 330 on the bottom side. I think that gold is going to have another strong year. I think that gold is going to have another very, very strong year. So I'm going to put it right at the expected move to the upside. Let's use the math. Let's use the stats to our advantage. Let's not assume that we know anything the market doesn't already know. Let's not assume that we can beat the market. Let's not assume that we can predict things that can't necessarily be predicted. And so let's take the easy way out. Let's take the lazy man's route and just go ahead and pin it right at the upside of the expected move there. So I'm going to say 462 for gold on the upside. Now, lastly, silver, man, look at silver today. Did it break under? Hold on. Did it get on? Wow, look at that, down $5, SLV. Did the futures get under 70? Look at that. Well, I'll be 69.80. Isn't that something? Isn't that something? Okay. All right. So silver is at 64. The expected move, and the IV rank for silver has been pinned at basically 100 for the last couple of months. So going all the way out to January of 2027, right? Because that's the closest one that we have. The expected move for silver is plus or minus $22 to $23. So that means you're going up to 85, 86, or you're going down to 40, 41. Man, it's going to be a wild ride for silver and possibly gold. And then you've got platinum and copper and all the other guys. But man, so I think silver is going to outperform again. So I see silver actually going outside the expected move. I think it's going to outperform. I think it's going to overperform what gold does. And so I see silver at 88 is going to be my prediction. So if I go down on the screen here, just to show you, it's just a little bit outside the expected move. Nothing too crazy. Not a super heroic call here, but I'm going to 88 for SLV. So there you go. We're basically unched on the overall market. We're bullish on the boomers because how can you not be? TLT, we're a little bit bearish. And then the metals, we are bullish. And so those are my predictions for 2026. And then the last thing I want to make sure I show today, because I've gotten lots of questions about this, and I told you guys, I will show you guys this whenever you guys ask. And so how did I actually do this year? Now, keep in mind, this show is intended for educational purposes only. I'm only trading on the show. I'm not doing market opens. I'm not doing economic numbers. And so I'm missing out on a lot of opportunities, obviously, for better or worse. That doesn't mean the numbers would necessarily be better. They could easily be worse. But I'm just saying, I try to do all my live trading on the show. We try to focus exclusively on instruction, going through a lot of things. Like yesterday, we spent 19 minutes going through the cost basis for Starbucks. And you probably felt like, man, this is the worst 19 minutes that I've invested this entire week. And I kind of felt that way too. But still, I'm like, man, if I was trying to figure this out for the first time, this could be helpful for somebody out there that's trying to figure out how to do a basis, kind of from scratch. And so, take it for what it's worth, but we've had a good year. We've had a really, really solid year. We ended up, that's what? That's 30, almost 30% on the year. That's pretty solid. Starting with about a $30,000 account. So I ain't mad at it, right? I ain't mad at it. I ain't mad at you. Like, I'm mad at nobody. Like, it's pretty solid. Now, again, next year when we get gorilla smacked, don't rake me over the coals, man. Like, don't rake me over the coals because, again, that's not the intent of this show. But if you guys ask, I will show you, from time to time along the way. But I don't like to keep it up because it's not the focal point. It's not the focal point of what we're doing. But, this is also, by the way, so this is actually a great example of something we should all remember. When you sell options, when you sell premium, you don't need to be directionally right to make money. Exhibit A, my predictions from this last year. I couldn't have been more wrong. I don't think I could have been more wrong if I tried. And so still, we were able to kind of move forward here with the portfolio, short premium, positive theta, all the different strategic things we talk about all the time. And so there you go. And so that's how we did for the year. It might change a little bit going into the close here, but it probably won't change too drastically. And so, yeah, so onwards and upwards to next year, and we'll see what happens. So, all right. So those are my predictions, and let's see how we're doing here. So let's go to let's go to you guys. Where are you guys at, man? I see you guys in the chat. Man, Margin Walker's here. Brian Dowdy's here. Right, Troy D in the house. Man, look at Troy. I'm going to surprise and delight my man, Troy D. Troy D's my man. Troy D saying, I'm buying every prediction. This is Jim's year. That's what I'm saying. Troy D, thank you, my brother. Thank you so much. I'm going to send you that cash that we agreed upon before the show for your planting that comment in the stream at this very time. So it's coming. I wouldn't necessarily wait by the mailbox, but it is on its way. So thank you there, Troy D. Man, we're going to do it this year. We are going to do it. We're going to get a couple predictions, at least close. I don't even need to be right. I would just like to not be so far off that it's embarrassing. Like every year, it's the same thing. If you go back and you watch like the end of the year shows for like the last, I don't know. I guess it's probably been about 10 years now. I don't know if I did it in the very beginning. I probably did, but go all the way back and you'll see. I don't think I've ever been right. And so anyway, I appreciate you guys. I appreciate you guys so much. All right, so let's go to where are we at, man? I see you guys. And DTM Lau's in the house. Man, Darren Munson in the house. Man, look at you guys so much. I appreciate you guys so much. Let's go to the beginning. I'm going to try to get to as many as I can today. Let's try to be a wee little bit efficient. Or Daniel, hello, Dr. Jim. Hope you have a happy new year filled with more gimmies than gotchas. Enjoy your time off with the fam. Yes, thank you, my friend. And again, if you're brand new to the show, welcome aboard. I'm glad that you're here. Lots of fun and exciting things are coming on down the chutes for 2026. But I am going to be, we're off tomorrow anyway because it's New Year's and stuff, but I'm gone all next week. So I'm gone all next week. I'm going to be in South Carolina and it's going to be awesome. And then my daughter turns 11, Penelope. It's Penelope, Eli, and Amelia. She turns 11 on January 10th. So we come back on January 9th, and then her birthday party is the next day, and that's going to be super fun. Like, I can't wait. And then I'll be back with you all on January 12th. So try to keep it above 0 while I'm gone. So hopefully we still have a little something to do when I get back. But thank you there, Daniel. I appreciate you. And I'll try to get more gimmies and gotchas, but you know what? They tend to be equally yoked. Like they tend to be, it's a 1-for-1 pairs trade. Like sometimes you may stumble into like a ratio spread, like a 1x2 or maybe a 2x3, but you're not getting too many 1x3s. You're not even getting too many 2x5s. Like it's pretty much a kind of a 1-for-1 deal with the occasional maybe a 1-for-2. But Sam L's in the house. What's going on there, Sam L? Doc, what better way to end the year than watching you not place a trade and still explain why it was the right move? Well, I didn't do that exactly, but we did spend some time, going over the really, really awful predictions from the last year. But it's fun. It's fun. And then Sam L says, Doc, let's pour some banana daiquiris for our fallen tickers of 25 CMG. That's right. BBY. That's right. Wolf, which is obviously not in business anymore, so that's right. And our eternal nemesis, Oracle. Cheers to 2026. What could possibly go wrong? Man, my thoughts exactly. Where is Oracle? 195? What a piece of garbage stock. Like, look at this thing, man. Look at this thing, right? It took us all the way up to, was it 300 something? Hang on a second. 195. What a laughing stock. What an absolute laughing stock. Look at this. Look at this. This thing took us up to 340. And now it's going to close the year under the Mendoza line? Wow, that's crazy, man. What a ride. And I'll tell you when this happened, like we all lived it. I got crushed. I think I lost, like we had a solid year. That's including, what did we drop on the Oracle trade? Like $30? 28. It was something crazy. It was some crazy, like huge loss in Oracle. I can't remember. I don't even want to relive it. So we're not going to check the tapes. We're going to burn those tapes in the backyard. But you guys were there. You can go back and watch the show around this Oracle earnings. Again, this is one of the benefits of only trading live on the show. This is one of the benefits of, making the concessions throughout the day, whatever. It allows us, there's no broken links in the chain. Like, if there's a trade that was made by me that you see on the follow page, like you can watch that day's show and you will see me go through, all the trade entries for sure. And then 97 to 99% of the trade exits. But man, this guy, look at this guy, man. That was crazy. I can't believe it. I really can't believe it. I mean, I couldn't believe it at the time, but now it's even less believable because it's 195. It's like, man, they just round tripped us, man. They just round tripped us from start to finish. Absolutely brutal. But I appreciate you, Samuel. I appreciate you so much. Tomas in the house. Best show on the day. Good to see you doing good, Doc. Man, I appreciate you there, Tomas. Thank you very much, my friend, for being here. Stephen Bivens in the house. What's going on there, Stephen Bivens? Henry Strait, great year. Thank you for being bullish on all of us. I appreciate you, man. I appreciate you. And I appreciate you appreciating me. And so thank you very, very much. Man, I couldn't be more bullish on you guys. That was the trade last year. And I couldn't, it was right in front of my face, right? Go back, check the tapes. You'll see it for yourself. The trade last year was long you guys and long the flow. Long the lettuce, man. Go back and look at the December 31st tapes, 2024, and it's neat. It's kept. It's like, all right, he's actually trying, right? But man, we should have went long lettuce and long you guys, and that was the pairs trade. That was the best pairs trade on the board. But I appreciate you there, Stephen Bivens. Thank you, my friend. Samuel says, Doc, 25 will go down in history as Liberation Day, when the risk-free instrument casually dropped 2,000 points, and the children were definitely scared. Oh yeah, I remember. And then like a few days later, right, like Trump like tweeted out like now's a good time to buy stocks, and then it ripped 2,000 points like 45 minutes after that. And so then, man, the fact that they're gonna write about this year in the history books, man. Like, if there are still history books, and the robots don't completely take over and rewrite history. But let's assume that there's some semblance of history that we've all come to know and love. They're going to write about this year for millennia to come. Like millennia to come. This was definitely one for the books in terms of all the different things that happened. But maybe we say that about every year. Like, I don't know. Maybe that's just something that we say, and we find ourselves saying it more often as we get older and older. But BDH in the house. Oh, Daniel, that's a great New Year's wish. May there be more gimmies than gotchas in your year. Yes, I hope so for you too, or Daniel, BDH, and the rest of you. But again, I have a sneaking suspicion they're going to be equally yoked. And so I would be on the lookout for any gotchas waiting around the corner for any gimmies you might find. Miko's in the house. Dr. Jim, today is Warren Buffett's last day at Berkshire Hathaway. Cheers to the GOAT on a happy retirement. I agree. I mean, he's the best to ever do it, man. Investing wise, I don't know that you could find somebody better than him. I mean, yeah, active traders. You got Drunken Miller, you got, Jim Simons, you got Man, let me think. Who are the other guys? I mean, Bill Ackman, I think, is pretty solid, but I don't know his track record like I might know. Like Simons was like, I mean, he was like, I think it's Simons. I don't think it's Simmons. I think it's Simons. Simons was like something nuts, like 40, 50% annualized or something crazy. And then Drunkenmiller was like 30% annualized. That's some crazy stuff, man. Those are some crazy, crazy stuff. I mean, I did that this year, like one time. You think I'm going to do that again next year? I would not hold my breath at all. And so, yeah, these guys have been doing it year in and year out. That's pretty impressive. And so, let's see. Wolf Wolf and Dr. Jim, my 18-year-old twin daughters have been going to Outback a lot lately. Do you have an Outback power move? Happy New Year and enjoy your week off with the family. You know, I haven't been to Outback in a while. Even I have to draw the line somewhere. But no, I love Outback. Outback's amazing. If I had to make a move, I mean, I'm all in on Bonefish. How could I not love Outback, obviously? Honestly, the Bloomin' Onion is the go-to. I know it's the public play. I know it's what you see on all the commercials. I know that it's whatever it is, but it's solid, man. It's just solid. Like that Bloomin' Onion with that like Raging Cajun or whatever they give you that comes alongside of it. It's probably just Thousand Island, but I call it Raging Cajun. It's amazing. It's absolutely amazing. So I would just go Bloomin' Onion, start to finish. Don't try to reinvent the wheel. It's like, man, it's like short strangles work because they're short strangles. Bloomin' Onions work because they're Bloomin' Onions. Like you don't have to reinvent the thing and start doing 2x5s and, you know, unbalanced butterflies and things like that. Like, nah, man, just have them go with the Bloomin' Onion. And I think they'll be very, very happy. So Margie Walker, hello, Dr. Jim. Last chance to light some stacks of cash on fire in 2025. Let's YOLO. Like there's no Mo Row. That's pretty good. That's pretty good, man. Row. Talk about the forgotten Greek. We got to do some segments on Row. Maybe I'll come back and do a skinny on options, abstract applications on Row. And, you know, the oft forgotten Greek. Like obviously Delta gets all the limelight, Theta gets all the you know the headlines, and even Gamma obviously is, you know, it's in the news. Vega gets an honorable mention, but nobody's talking about Rho, man. Nobody. RHO. And I feel like, yeah, we got to show Rho some love next year. And so maybe instead of doing our one token Rho segment per year, maybe we'll double it. Maybe we'll go to 2 next year. And we'll front load it. Maybe we'll do like a 2-part series to kick off the year. I have a feeling we're going to lose a lot of viewers if we do that. So I may think about that over the break. But yeah, thank you there, Martin Walker. I'm not lighting any stacks of cash on fire. We're just going to sit tight. I feel good about everything. And because I'm going to be out next week and stuff, it's like, hey, I'm just going to take what I have with me and carry it forward into the new year. And so let's see. Samuel, where is iPod Touch? We need his 2026 doomsday agenda. I know. I agree. But like every good victory lap taker like myself, he shows up when it's time to show up. Like he shows up when the rearview mirror is looking really, really good. I do it myself. Now, I sort of have to show up for you guys, but I skirt things under the rug and I say, hey, don't look over there, look over here. Like I do all the same things that all the internet gurus do. And so iPod Touch, he knows what he's doing. Like he 100% knows what he's doing. And he could be lurking in the shadows right now, right? But you can't expect him to call for the event horizon every day, right? You don't get a 30 to 40 point drop in the NASDAQ every single day. And so you got to give him a chance. You got to give him time to kind of bide his time. And so, yeah. And so, but thank you there, Samuel. Let's see, Christoph in the house. Hey, Dr. Jim and Tasty Nation. I appreciate you there, Christoph. Thank you for being here and being a part of the show. I don't recall you having been in the chat before, so maybe you have and I didn't see it. But either way, thank you, my friend. And if I can ever help you in any way, please let me know. I'm happy to do it. Silver is about to drop below 69. They're doing it, guys. They're doing it. With 2 hours to go, is this thing going to drop $10 on one day? That would really be something. But let's see. DTM Lau in the house. Hey, Dr. Jim, happy New Year's Eve. If you had to build a retirement portfolio for 2026, would you go long SPY shares as a core position, use leaps, or have something else in mind? Okay. So I have a lot to say on this. And in fact, there's actually a crash course on the YouTube channel. You know, I think it's titled like From Stocks to Options or something like that. Well, we did something a little bit different. We kind of modeled after this guy that was going to be retiring in some amount of years. And he was like maybe in his like early 50s or mid 50s. And we kind of talked about like kind of making the jump and then transition from stocks to options and sort of like what that looks like. So I think, so obviously it goes without saying, but I'll go ahead and make sure that we're all on the same page. I think there's tremendous opportunity and potential with an active approach to your portfolio. That goes without saying, that goes, without question, but I just want to make sure we're all clear about that. I think there's a lot more potential in doing the active side than there is doing the passive side, just because you have so many additional strategic levers that you can pull on any given day or even any given Sunday for my Willie Beeman fans that might be watching. That being said, however, do I think that you should completely dismiss and, you know, discard some chunk of assets that's passively long, the market for the long term? No, I think that's a mistake. Because again, if you look historically, average returns in the S&P 500, 9, 10, 11%, depending on when you start, and those kinds of things, it's like that's pretty strong. Do I think that's going to be radically different moving on to the future? I think it could be a little bit lower for the next, let's say 10 to 12 years, just because the last 4, 5, 6 have been so hot. That's not likely to continue if history is any guide. So maybe we're only averaging 6, 7, 8 for, the next 10, 12 years. But then maybe it picks up steam again. I still think that, 8, 9, 10%, somewhere around there is probably, a good reference point if history is any guide. But so when it comes to like divvying up my assets for retirement, I mean, this is essentially what I do myself, right? And so I think having a chunk of assets that is long the market, that is just, pegged to, overall market and indexes and whatever is totally fine. And then having a chunk of assets that's actively managed. I think that's going to be the best of both worlds for most people. Now, how you divvy that up. So like long SPY shares would be a great way to start. You could go long IWM if you want to take on a bit more risk and maybe you have a longer time horizon. How you divvy that up, though, that's going to largely be in the eye of the beholder. That depends on a lot of things: how old you are, how young you are, what type of skills or interests you have on the active side, those kinds of things. So you could go 50-50, you could go 75 passive, 25% active, you could go 25% passive, 75% active. Generally speaking, 100% active, probably not going to be the best fit for most people. This is just my humble professional opinion. Take it or leave it. I think having some amount of assets earmarked for the long term just makes a lot of sense. And then you decide how actively you want to be with the other assets. But there's a number of ways that you could slice it up. And so Jason Rockhold helping the algo. Man, I appreciate you there, Jason. Thank you, my friend. Thank you very, very much. Danish Dynamite, Happy New Year, Dr. Jim, and to everyone watching. Cheers to a profitable 2026. Man, I could not agree more. Man, 2026 is going to be crazy. Like if this silver ride continues, I mean, these last couple days, I mean, look at this, man. Let me bring up look at these bars. So the last like 4 daily bars, right? There's a $7 range. There's a $12 range. There's a $7 range, and then today has a $7 range. So 7, 12, 7, 7, right? It's like, man, that sounds like a Powerball combination if I've ever seen one. And so, yeah, let's see. California's in the house. What's going on there, California? Hey, Jim, I was curious about selling covered calls 45 days out where earnings is somewhere in between those 45 days. Should I, in general, avoid those if I'm not trying to make an earnings trade? Well, yeah, I mean, if you're trying to avoid earnings, then I would probably not do that, because if you're not trying to make an earnings trade, that is going to be kind of de facto making an earnings trade. But I'll actually encourage you on another front too. And I talk about this all the time when we talk about covered calls. And like that little case study we did yesterday with Starbucks, going back and calculating the basis, that was an investment style covered call, and it was intended to be an investment style covered call. When you have an investment style covered call, I think it makes a lot of sense to kind of maintain a longer term focus, right? You're not necessarily in a 45-hour 21 anymore. You're not necessarily trying to avoid earnings calls anymore. You're really thinking about this longer term, and you're thinking about another avenue to potentially be profitable and open up profits on a stock that might sit, it might chop around, it might go down a little bit. Now you're giving up upside because, again, for every gimme, there must be a gotcha. But, if you're an active trader, you might like the higher probabilities, you might like that trade-off and things like that. So if it's an investment, California, I would not necessarily use earnings coming up, or upcoming earnings, I should say, as something that's going to dissuade you from putting those short calls on. I would just do it. Honestly. Like, you get a strike that you like, the volatility looks decent, whatever. I would just do it if it's an investment. Now, if it's a trade where you're like, all right, I'm looking to get in and out, like this is supposed to be kind of like an in and out type deal, more of a smash and grab type of thing. Yeah, that's going to be different, obviously. Now you maybe don't want to trade around earnings because it's going to have potentially a very meaningful impact on the results of that one specific trade. Whereas when you have an investment style covered call, I'm not really thinking about the next 45 days. I care about them, of course, but I'm thinking about the next, 3 quarters. I'm thinking about the next 18 months, or I'm thinking even about the next 4, 5, 6 years. And so when you expand the time horizon like that, I think it obviously warrants a different strategic approach. And so hopefully that helps a little bit. As he Samuel POV, YouTube algo knows you better than you know yourself. That's correct. Of course. That's so correct. You know what's funny too? Oh, this is so funny. So we were at church on Sunday, And after church, like we go outside in the little courtyard, and like the community that we have in our church is amazing. Well, anyway, we're friends with a lot of people that have kids around the same ages as our kids. So they're all friends. We're all friends. Like it's really, really terrific. I mean, the Lord has blessed us abundantly with that community. Anyway, the kids are running around and whatever. And one of the friends, I'm not really good friends with him. Like I know him a little bit, but not really like that well. He came up to me, and I know he's not in finance. He's not in finance. He's not in trading. He's not in any of those kinds of things. He comes up to me and he's like, hey, I was on YouTube the other day and I was just cruising. I was minding my own business. And you know what happened? You popped up on my feed. He was like, you showed up on my feed. And I was like, I know that guy. I was like, why is he coming up on my feed? I'm like, they know that we're friends. They know that we're having this conversation right now. So be ready to get hit with 3 or 4 more videos today. So that was pretty funny that I happened to infiltrate my man's feed when he doesn't want anything to do with trading or finance. And so anyway, I digress. The final digression of 2025. Saying it so. Emmett Morrison in the house. Happy New Year's Eve, Dr. Jim. Thank you for all you do. You definitely are one of the brightest shining stars in my year. Man, here's to a fantastic and profitable 2026. Man, I appreciate you. Emmett Morrison, man, I appreciate you so much, my friend. Thank you so much for saying that. Thank you for being a part of the show, being a part of the core position. Again, I'm going to send you that cash. Right? I think I'm still behind a couple payments, but it's all coming. It's all coming in 2026. Don't worry about that. Again, don't wait by the mailbox, but it's en route. And so thank you, Emmett Morrison. I appreciate you very, very much. And then Troy D, I see you again. Death Sneeze in the house. Brian Dowdy in the house, man. Look at you guys. Mikos, Greg Lutton in the house. I'm just about out of time, but I see you guys, man. I see you guys in the house. Darren Munson, man, look at you guys, man. Griffin Jones. Oh, the Preston snuck in at the end. Rodrigo's in the house. Man, Joe YQ even in the house. Look at this. Flower Power snuck in. Look at RX right at the very end there. Man, that's some good stuff. I appreciate you guys so much. Guys, I got to go. I got to run. I got to get you guys over to Tim Knight. I appreciate you guys. Man, you guys give my job so much purpose. Thank you so much for being here and being a part of what we do and being a part of my show. It really, truly means the absolute world to me. You guys don't know how much it means to me. And so if I can ever help you guys in any way, please shoot me an email. I'm jschultz at tastylive.com, or we can connect on Twitter. I am at jschultzf3. I would love to hear from you guys on there as well. But stay tuned. We do have Tim Knight coming up next with Trading the Charts. In the meantime, guys, trade them small, trade them heavy, and stay generous. And I will see you guys next year on January 12th. We'll see you then.
Your crypto needs a wallet. And crypto is better when it's tasty. You can now do more with your digital currencies with the Tasty Crypto app. We're proud to offer a self-custody wallet for Bitcoin, Ethereum, and Polygon. Transfer your digital tokens directly in-app and access thousands of tokens available only on-chain. Your wallet is your key to decentralized finance. Download the Tasty Crypto app and get started today.
Grow a strong community with Tasty Trade's referral program. When your friend joins Tasty Trade, you'll both receive $100. As your community grows, you get more bonuses. The referral program runs through December 31st. Only at Tasty Trade.
Okay, cowboy, here's an earnings event. Keep an eye out for them when you open your trade. They're fast, they're loose, and they can take you for a wild ride. But that's no reason to steer clear, because you can be your own personal earnings event if you take the bull by the horns. What makes earnings events so special? Before the event, people will start guessing how the stock will move once the earnings report is released. That, in turn, makes the options IV rank higher. Like way, way higher. The nearer the event, the more the speculation, the higher the IV rank. Then right after the event, IVR goes the way of the buffalo. If you sell high premium options right before the event, when IVR is really high, you can take advantage of inflated prices and lock your profits when volatility disappears. Only if, and this is a big if, the stock doesn't move against you. If it does, well, sometimes you eat the bear and sometimes the bear eats you. Earnings events can hit you hard. They can also pay off big and fast if you play your cards right. Pretty simple.
Well, hello. Happy New Year. Tim Knight here. It is, we're down to the final minutes of trading in 2025. We're ending on a good note. It's just red all over the place. Everything I talked about yesterday, I think you'll agree is transpired. Anybody rushing in metals yesterday has regretted it. And equities are kind of tagging along with the weakness. Chart's looking really good. I have continued to push forward with my bearish positions. I'm losing track. I'm 41 right now, something like that. And I've got one and only one long, which is Rivian. And it may just be because I'm seeing them everywhere these days here in mountain country. But yeah, coming into 2026, very bearish. And if I have one hope and wish for the forthcoming year, it's for the truth to come back into style, honesty to come back into style, because we live in an age in which criminals, charlatans, hucksters are celebrated and embraced. And it's not a good thing for anybody except the hucksters who've had a great year. But yeah, that's maybe it's naive on my part, but everything moves in cycles. And as people get disenchanted with the crooks and the criminals and the charlatans, things will turn against them. And yeah, so that's my 2026 wish. So I raise my virtual champagne glass to that. Let's get started with the charts. We're having a very cool day, as I said, and everything we talked about yesterday is progressing nicely. Here's the spider. A couple of cool things. One, the breakout from a few days ago, I guess on Boxing Day, complete dud. And 2 days ago, that we had a failed bullish breakout. It affirmed it yesterday, and today really affirms it. The next question is, can it break this trend line? That is the thin reed holding things up for our bullish friends right now. Fingers crossed. That'd be more gravy for the goose. You know, it's a little odd to me that we're getting so much selling today, because, you know, why? Some of the strongest stocks are being sold off hard. Do you want to pay taxes that soon? But in any case, I'll take it. Red's always good. Here's the cubes. They are, once they load, down also. And, you know the story here. Here's the gap. Gap wasn't filled. Lower high, weakening. The trend line here is much more shallow, and therefore it would take a lot more to bust it. Let's just toss it there. Although these things do move sometimes. So yeah, there's that. It would take more to break that, but that'd be cool if it did break. But unlike the spider, it would take a heck of a lot more selling. Good heavens, did I mistype that? I think I must have. I meant to type NVIDIA. Let's just punch that up. No position in NVIDIA. Somehow my 41 positions missed it. But I do think and I didn't intend to short it. And I'm not short. It's just very important to keep an eye on this, because if there's one thing that will blow some wind into bearish sales, it would be the diminishment of NVIDIA. The train wreck of crypto has helped because people don't trust it the way they used to. And I do think 2026 will be another bad year for crypto. I could go on for an hour about why, but just trust me, that's how I feel. NVIDIA, its own kind of line in the sand is right here, this orange line that I've drawn. If we can not only stay below that, but sink below the kinds of lows we've witnessed here, that would really help in terms of tech weakness. And of course, in only a few weeks, we start to get those Q4 reports coming in. But as far as SMH goes, which until not too long ago was having just an amazing year, this looks akin to the cubes, except in as much as their own lifetime high was more recent. It did beat the former high here, sank and pushed higher, and failed here. So this is our first lower high in that instance, but that is weakening away. As far as the small caps go, these have been the most consistently weak lately. Here, zooming in, it was only a couple of weeks back we had our lifetime high. And we fell, pushed higher, did not get back there, got a lower high here. And then from then, and I'll just do it again like I did yesterday. So here's this low, lower low, lower low, lower low, lower low, lower low, lower low. And so we are cutting nicely lower here. And if we put a line right around there, that's the next support zone, which I'd like to see broken. And so we're getting there. And it's, as I said yesterday, the last trading day of the year and the first trading day of the year are a little bit quirky. So don't read too much into what happens on Friday. Next Monday, the 5th, is kind of the first. Is it the 5th? Yeah, I guess so. Is our first real trading day of the year. But yeah, today's just kind of glancing around my screens here, looking really good. I made mention yesterday also of getting into FXI China, and that worked out. This is down nicely, over 1%. And importantly, it's getting within the vicinity of completing this pattern. Maybe a little more conservative. Let's draw that lower. So there's the pattern I'm speaking of, and that is held as support for months. And that's a right triangle pattern. Also, I haven't drawn it, but there's just kind of an imaginary line right up there. So we're looking for right triangle failure on that one as well. Now, I won't obsess over precious metals to the degree I did the past couple of days, but they certainly warrant a conversation. So my point yesterday was that I could only suppose yesterday that the rationale for folks getting into precious was because they were on sale. And that is a seductive and destructive tendency. And as I suspected / hoped, didn't last. So here we have gold GLD down over $60. The huge plunge, of course, was here on Sunday into Monday. But we're sinking quite nicely on this. And I don't really have any sense as to how low it's going to go or when it's going to finish sinking. I've got a strong feeling about palladium in that respect. But there was a staggering amount of optimism, record optimism, record high RSIs with gold and silver especially. And it's got a lot to burn off. Got to break a lot of hearts to get it to be a bargain again. GLD is also sinking, nothing dramatic, a little more than 0.5%, but this is a failed bullish breakout. And you get the Robert Cray, what was the rich dad, poor dad dude, like he top ticked the whole thing. Like at the moment it reaches peak, it's like going to $200 or whatever. And when sort of the pop stars of finance finally get into the game, that's not a good sign. And so, yeah, that's failed bullish breakout. Cool stuff. Silver was super strong yesterday. And boy, did that not last. Look at this craziness. Look at this. So beforehand, this was smooth. Just, some ups, some downs, but smooth, nice, kind of regular ranges day to day. Then it went berserk. So you get a huge up day, a huge down day, a huge up day, a huge down day. We've been banging around this giant range for the whole week. And a lot of people getting ground in a hamburger with this. But I think silver's got a long ways to go before it settles down. And of course, with SLV, the ETF, same deal, obviously, down really hard. And the lifetime high on here continues to be right here, this bar, Boxing Day. And so we've basically returned, and let's not get too dramatic about it. We're at prices not seen since Christmas Eve. I mean, we're only talking a few trading days ago, but I do think there's a lot more to go on the downside. Let me be clear. I'm the sort who I'll short anything with a ticker symbol just about, but I ain't touching this on the short side. It's nuts. So, but as I said, as far as palladium goes, which is where my fixation is, It is down, not nearly as much as silver is getting blown up, but it's continuing to work its way down toward what might be a nice foundation of support. I'm going to give it literally weeks to prove itself before I do anything about it. I'm continuing to hold. This is an asterisk next to what I just said about not touching the short side. I am still short XME, which I consider give me a pass on that because it's not a pure precious position. It's partly precious. But this is more of a general mining ETF. And you've seen my XME GDX ratio chart umpteen times. And it makes a strong statement about just how much weaker XME is going to be compared to GDX. So I'm comfortable with this. And so keeping it. The one ray of bullish sunshine, as I said earlier, is I'm long one and only one item, which is Rivian, the electric truck maker. And I've got a pretty liberal loose stop on this, down I think 18 and a quarter if memory serves. But I do like the long-term look of this. And if it behaves itself, I'll add more. But I'm just putting my toe in the bullish water with this one. Let's swiftly go through, some of the aforementioned short positions that I'm especially fond of. This is a new one, MIDD, which is the Middleby Group. This is down about 1.5% today, and I have not embellished these charts with my markups and such, but so it's a little hard to understand why I'm short this stuff, but I am, and I try to be rational about it. MNRO. This is not very heavily traded, but this is Monroe. And this one's down about 1.5%. And I've shown this one before. It has just this staggeringly large top going back years and years. There's too much data to show, but that's a real favorite. I'm kind of getting some obscure ones here. These are more thinly traded. No one's really ever heard of them. These are not your Nvidias and Netflix. This is weirder stuff, but I like to look at charts and I dig deep. Once again, Oscar, keep on keeping on. OSCR. This is Oscar Health, far and away my best percentage performer. All the shorts down again over 2%, and a rare instance of a good, consistent bleed out here, just almost day after day after day. STX, this is a little better known, more of a high flyer, Seagate technology. This was one of the big beneficiaries of the AI mania this year. Very, very richly valued. And it's turning tail. You can see how after this just explosive move higher, it's starting to kind of curl lower. And a compatriot of it, or competitor more accurately, is WDC, which is Western Digital. And the charts are very, very similar in terms of not only the tremendous up move they made, but also the kind of withering away of that momentum. Couple more. BDN, you've seen this one before. This is Brandywine Realty, and it's a cheap stock. It's $2.90, but we're down over 2% more today. And I've got, as I say, could well be a penny stock into the next year. And one last one, HIMS, HIMS. This is HIMS and HERS, which itself is down well more than 2%. So just a really good Whitman sampler of shorts. It's been a terrible year for crypto. Not a terrible year, a terrible quarter for crypto. It's been a bad year for crypto because Bitcoin's down like, 5-6%. Nothing disastrous, but this quarter, I saw Eric Trump almost exactly 3 months ago saying Q4 is going to be, what was the word? Unbelievable. Unbelievable. Well, okay. Check. It is. Wipe out hundreds of billions of dollars across the crypto board, blown up. BTC just become a bore fest lately. Thanksgiving kind of marked the end of the slaughter. But Michael Saylor's strategy should be ending the year on a low note with about a 50% loss for the year. And I well expect this to be a double-digit stock next year. How are we doing on time? Oh, we're out of time. Well, that's typical, isn't it? Well, I'll just, I'll just say goodbye and thank you. Appreciate all your time and attention this year. I've been with Tasty from the beginning. I don't even remember the year. I want to say it's been 14 or 15 years or so. But this show, this segment is a high point of every weekday for me. I enjoy talking to you, enjoy preparing for the show and looking at charts. I'm weird that way. Never get tired of it. So thanks for being a part. And we'll be dark for the rest of the week, but I'll see you on Monday. And look forward to more graph spectaculars in 2026. So happy New Year and be safe. Bye-bye.
Tasty Trade's Money Match event. Unlock 30 days commission-free trading. Plus a 1% cash match on all qualifying deposits to jumpstart your trading when you open and fund a new Tasty Trade account. Level up your trading experience with active trader mode, smart order tracking, risk analysis tools, dynamic watch lists, and more. The Money Match event starts now, exclusive to new Tasty Trade customers.
Look who's back testing. Tasty Trade now has options back testing for free. Test your trades with over 10 years of data for the most popular symbols. See how your trades would have performed in the past. Look back at profit and loss and take the guess out of guesswork. Oh, did we mention that it's free? Get back testing at Tasty Trade.
Grow a strong community with Tasty Trade's referral program. When your friend joins Tasty Trade, you'll both receive $100. As your community grows, you get more bonuses. The referral program runs through December 31st, only at Tasty Trade.
Ready to take your trading skills to the next level? Dive into the world of stocks, options, and futures with Tasty Trade courses. Whether you're a beginner or more advanced trader, our courses can empower you with the knowledge to succeed. Watch as our team in Chicago shows you how to use the Tasty Trade platform and go over the basics of trading. Perhaps you'll learn about a new strategy or a potential product for your portfolio. To find our courses, go to the Manage section of our web platform or head to courses.tastytrade.com. Start taking control of your financial future. Visit our courses today.
Tasty Trade's active trader interface makes futures markets your arena. Built for the bold, not the board. Trade CME futures with a single click. From micro contracts to major ideas. And go even further with futures options. Tasty Trade lays out multiple ladders and charts for total visibility. Plus, hundreds of built-in indicators for traders who want a broader view. Tasty Trade, pro-level tools, intuitive design, total control.
In the world of investing, a beast lurks between the numbers, ready to pounce. Some traders hide from it, some ride it. If that's you, join us on Tasty Trade. Genius loves company.
Ring the alarm, hey, ring the alarm, boys. Turn up the charm. Listen up, y'all. Get out the damn stall. It's the last call. Hey, the last call. The last call. The last call.
Chris, my friend, that music can mean only one thing. It's time for the last call of 2025. How are you, my friend?
I'm mixed, Tony. I'm really conflicted here today. On one hand, my 7,000 ES call spread that I put on a few weeks ago is obviously going to expire worthless today.
I think I told you that one time when we were on the show together. 7,000 was out of the question.
I should have cashed it in last Friday. But on the other hand, Tony, we do have our Guess the Market scoreboard, and I think I'm going to win the Tasty Live tournament.
Before we'll finish on a high note, which I think you are going to be the winner. It was a tighter race than I would have expected, not knowing everybody's picks, but we'll get to that in a minute.
What happened to the Santa Claus rally? Even the S&Ps down almost 40 handles, sitting near their lows on a very light volume day, which has been light volume all week. But what happened to the rally here for going into the end of the year? You look at it, the last 4 days have all been down on the even the S&Ps, the NASDAQ down 170 and change, the Russell down 18. They're all down around 0.5 to 0.75%, Dow down 200 and change. And I think the most surprising thing of 2025 was the lack of volatility and where volatility is going to close at the end of the year. But I'll let you take that first. What happened to the Santa Claus rally? I know it's not a sure thing. I didn't even know truly when the Santa Claus rally was, and I think we still have a few days left to the Santa Claus rally, but you'll correct me. And then what did you think about volatility this year? I was completely fooled by it and surprised with the different administration, different guidelines, tariffs, all the other crap. I never would have thought volatility would be on the lows of its move. I never thought it was going to get under 17 this month, but it certainly has. Back to you.
I think volatility is probably the most surprising part of the Santa Claus rally not working out so far. A quick reminder, final 5 days of a year, first 2 of a new one. That is the Santa Claus rally window. And we say it's a surprise the S&P is not up. It's because since 1950, it's a 1.3% gain on average. Tony, if you told me that during the month of December, VIX would open up near 17, 18 and close below 15, I would have told you that the Santa Claus rally would have almost been a sure thing.
I would have agreed with you.
I find that perhaps to be the most interesting facet of the market as we're going into this new year. It's not just the VIX, but when you look at the F or the G expirations for VIX futures, for volatility futures, you're seeing that these are closing the year out also at their contract cycle lows. So maybe this is a sign for things better to come next week. Not really Friday when the market opens, but really next week, January 5th, that you have a little bit of, you have this tailwind at our back. Low vol, low volume, technical structure is not decimated. Maybe we get some buying interest at the start of the year. So it's really those two things are in conflict, right? If you told me the Santa Claus rally didn't happen, I would have said, oh, volatility probably went higher, right?
Sure.
So I would have been 0 for 2 on both accounts in hindsight.
And I think the most interesting that actually that made the market, meaning the equity market, even the S&Ps, NASDAQ, Russell, and Dow, take a little bit of a back seat in the last half of 2025. Not bonds, because bonds didn't do much of anything, but metals, gold, for 6 months has gone from around 3,400, flirted with 4,500. It's going to close down a little 1.25% down to 43.31. And then maybe even more surprising than gold was the silver move. Silver starting the last 6 months closer to 35 and worked its way up to into the 80s. What do you think about the surprise in metals? And the most volatility across the board for the last 6 months has been in metals.
Absolutely. And you said, first off, bonds are dead. ZB added 1.2% this year. So
bonds are dead.
Bonds, volatility is ticking up a little bit. Like IVRs, I think in notes was up at 18, but now it's back down to 11 or 12. But if you traded bonds directionally neutral, particularly in the final 3 or 4 months of this year, you made out like a bandit.
Sure.
You say gold and silver. Gold is up 64% year to date. Silver up closer to 140% year to date. The bulk of those gains really feel like they're coming over the past few weeks, late November onwards. I can't say it surprises me a great deal. I think viewers at this point in time on Futures Power Hour Overtime know that gold and silver have been my little, bugaboos for the past 12 months, maybe even longer than that. It kind of makes sense. And I say it makes sense not because I was on the long side and they went up a lot, but we had a world where interest rates are coming down. We're spending as much money as we did during COVID, right? And, we're potentially taking the dollar's role of the global economy. It's shifting, it's changing, it's evolving. So what else are you going to buy? I mean, that's Tony, we've seen this for how many years? If the Fed's cutting and the government's spending a lot of money, there's asset inflation. And that's basically the story of 2025. There was a lot of asset inflation, a lot of foreign equities. The U.S. stock market was the worst performing stock market in the world, believe it or not, among developed stock markets. So this was all about picking up things that may gain more value because the dollar is going down in value. And sure enough, dollar, 9.4% loss. Worst year that I have on record since it started free floating.
Okay, so let's talk a little bit about 2026 coming, if that's what you're going to do. And I'm going to be out of my my element here, and you're going to slice me up a little bit here, but let me just give you some things here, because you just talked about assets and what else was going to go higher. So you got mortgage rates falling. Agree?
Yeah.
Okay, so you got mortgage rates falling. You got inflation sitting under 3%, like 2.7.
Yeah.
Okay, and you got GDP 4%, 4.5%.
Yeah, 3.5, 4. I mean, in real terms, nominally, it was over 8% last quarter.
Okay, so all good so far for 2026 in a macro world, right? I think.
Sure.
Okay. You got tax refunds coming. I mean, maybe, right?
Yeah, I mean, SALT deductions up, and as a New Yorker, Tony, as an Illinoisan, Tony, you and I are going to be seeing some more coming down the pipeline our ways.
Okay, trade deficit shrinking,
but government deficit's higher.
Okay, and tariff revenues have been a boom. I mean, it hasn't hurt the market.
Hasn't hurt the market. That is a curveball we have to look forward in January. The Supreme Court's going to rule on whether or not the tariffs can remain in place, and if they're not, do they need to be refunded wholesale? That will be an interesting curveball. Yeah,
sure. And it seems like volatility is saying no, right? I mean, so how does 2026 look to you after having a record year? What did the even the S&Ps approximately? What has the market returned this year, or the S&Ps, or whatever you have handy there?
16%, we'll call it.
16%, and what about for the Nasdaq?
20%
for the Nasdaq, and what about for the Russell?
11 and change, and then the Dow is almost 13%.
Okay, so double-digit gains on all four, even the S&Ps, which I think, and Nasdaq is probably the two where most people are weighted, right?
Yeah.
I mean, banner years. I just gave you some great numbers for 2026. When does the shoe drop?
I don't know if the shoe drops, Tony. I've been sharing a cheeky chart for the past several months. I first shared it with you in July in our research chat here internally about the S&P following a track similar to what happened in 1998, 1999.
Mm-hmm.
And we are still following that track for what it's worth these, 6 months later as we turn into 2026. So maybe the concerns about AI capex aren't realized. The biggest concern for me moving forward from an equity market standpoint would be margin compression. We have these really high PE ratios once more, and a lot of folks are looking at the valuation and saying this is too high, too fast. If we have an economy that's continuing to grow and margins continue to expand, right? Like we have proof that AI is showing up. Companies can do more with less, have higher revenues and lower overhead costs. Then the stock market can keep going. But if we run into a wall where GDP is slowing and all of a sudden the Fed's cutting for wrong reasons and AI capex looks shaky.
Cutting for the wrong reasons is subjective, right? I mean, or the market will tell you whether that was for the right reason or the wrong reason, right?
Like if the market goes, so right now there's a 15% chance of a Fed cut next month. Let's say we have non-farm payrolls next Friday and it's minus 1 million jobs. Just total hip. Right. So if the rate cut odds then jump to 100% for January, do we think the market's going to like the fact that we're getting a rate cut because the economy just lost 1 million jobs? I would argue no, and stocks would probably take it on the chin. But we're going to have to see something. This idea that like the market's too expensive until a catalyst arrives that makes people think that it's too expensive. Why not continue to float up in low vol and low volume?
Let me go a little further. Corn, wheat, soybeans, all on their lows, and oil, which I think is, for most people, is equally as important, if not more important than corn, wheat, and soybeans. Oil on its butt also going to close near its lows of the years. It seems like everything is perfect, and that's what gets me worried. Like
complacency.
And volatility on its lows. Like I'm not bearish, but I'm certainly cautiously optimistic because the first crack is going to be the deepest. Like, and I don't know where it's going to come from. I'm not pessimistic. I'm optimistic. Everything is absolutely perfect, but I wake up every morning watching everything to see it be perfect. And that in itself is a little scary. Now that's when the market usually continues to climb, but I think we're getting a little long in the tooth here.
Possible. I mean, I'm sticking with although this ES call spread is going to go by the wayside, I am sticking with on the follow page a long MES position through the holiday. I don't see a reason to give that up yet. If we get on the other side of the holiday and the market's weaker and the VIX is back at 17 or 18, then we'll reassess. But right now, until the market gives you a reason to stop rallying to the upside or to stop playing on the long side, maybe we've been conditioned to buy every dip. Dip buyers were rewarded this year, especially in the month of April, when we had those two really big back-to-back down days where the market showed like 5% each day. Retail was piling in at the April lows. You could argue that retail did a better job buying the dip this year and staying positioned on the long side than a lot of institutional investors who were the ones selling out and throwing in the towel that first week of April.
No argument there. I mean, we've had pretty much a V bottom since April. So, passive investors are gonna win. I mean, any type of hedge fund or anything that hedged any type of positions couldn't keep up with a 16% or 20% move in the market, even the S&Ps and NASDAQ, as you said. Hey, John, let's put up, or Ryan, please, let's put up slide 1, if we could, the SPX guest distribution here, where the arrow is pointing across there. That's the Wall Street median S&P end of the year target, which is just above 6,600, and SPX right now is 6,860. As you could see, SPX currently, that little dotted line there. And that was our distribution for Q1 was in purple, and then Q2 in green, Q3, and then Q4. If you look at how everything went, Tasty Nation rode the wave early on in January about this market being higher. Would you, at least from this distribution curve, it looks like Tasty Nation, the majority of the people, 75% from just eyeballing it, got the guesses in the right area.
Yeah, and it was actually really impressive because when I was looking at the distribution of the guesses, there were a lot of folks clustered around basically where the prices are right now. And when we say this could come down to 1/10 of a point for who is the most accurate, it really is in that ballpark. It was really interesting. Coming into this year, I recall we were having a conversation almost a year ago to the day about how analysts were more optimistic about 2025 than they had ever been in history. Typically, the average analyst is looking for something around 8 or 9% if they're a bull. I believe, if I recall correctly, and I'm probably off by 1% or so, the estimate for coming into this year was for stocks to rally in the neighborhood of like 11 or 12%. And we had never seen an estimate that high. So I think reflexively, some folks said, well, if everyone's so bullish, then I've got to be bearish. There were a handful who said, well, maybe the Wall Street analyst is wrong. Maybe they don't see what's really happening with the AI revolution. And this is going to be even better, which is difficult to even comprehend considering we've had 3 years in a row of 20% gains in the NASDAQ or more. Yeah. And yet here we are again. So the optimists, they carry the day.
They certainly did. Let's go to the second slide there, Ryan, please. This is the Tasty Trade host and co-host. You got myself there at 68.05, and you got Nick at 65.38. He's going to be out of the running. Mikey was a little too optimistic at 69.69. Katie looked like was going to be the winner today at 68.88. Liz was the lone bear at 63 and change. Jenny was trying to support her at 65. Same thing with Nick. If 6,500 could be a bearish call, I don't really think it is. But then there you are, Chris Vecchioli puts you last, but you should be first. 68.50 with the SPX at 68.56.5. You're 6.5 points off. Great guess by you.
10 basis points for our guess a year ago between friends. And I'm not even the most accurate person here on our spreadsheet, Tony. There were Tasty Nation listeners who might get this down to the penny, quite frankly, as we go into the close. The market kind of followed the path that I thought it would this year, where you'd get a little bit of strength in the first quarter, weakness in the second quarter, then rebound into the end of the year. All that weakness in the second quarter was front-loaded, of course. Mm-hmm. But that's kind of how year one of a presidential term has worked out historically, which would then bring me to what happens in 2026. Year two of a presidential term, midterms, has catered to a lot more chop. And so while we're going into 2026 at 68.50, if let's say by May, when the new Fed chair is installed, we're sitting near 68.50, I would not be shocked whatsoever.
So you're looking for a little bit of sideways choppy action for the first quarter.
First 2 quarters would be ideal. Third quarter pullback, fourth quarter rally, less than a 10% gain in stocks, but we still finish positive for the year.
Well, you know what I'm going to do? I'm going to wait to see how Tasty Nation votes for 2026, since they seem to be a lot more accurate than everybody else. And I'm going to go with what they do. So I'm going to see what the masses at Tasty Live and Tasty Trade, all our customers, how they vote, and I'm going to stick with them. Hey Ryan, let's put slide 8 up here, so maybe some of the viewers that are watching can take a look at this. Even the S&Ps are 68.55 right now. That would put California on the board, San Francisco and Stevenson Ranch, California, just about in the middle. You're going to pronounce these names for me, or are you going to make me butcher them?
Weiss, you get the other one.
Jalud?
Jalade?
Okay, I'll go with the other one. Jay.
It's a winner.
Say again?
So it's a winner either way, no matter how we're butchering it.
Either way. So we're right at 68.53.90 right now. They're 90 cents off. That gives Elise a little shot in Philadelphia too. If we continue a little bit lower here, even the S&Ps down 44.75, just about 2 handles off of their lows. So Elise needs a new low in the even the S&Ps close. And then Douglas would be in there. If not, we're going to go with Weiss and our friends from Stevenson Ranch, California at 68.53, where we are right now. Kind of crazy, right on the number.
You know, it's not just Tasty Nation. The wisdom of the crowd, I think, is underrated. In fact, I'm looking for it right now, and unfortunately, I'm having trouble pulling it up. But someone recently shared the retrospective of what happened on Wall Street Bets, the top 10 tickers that Wall Street Bets aggregated going into 2025. Sure. And every single one of them beat the S&P 500 this year, right? And so it feels like, and maybe this is a post-COVID thing, but it feels like the retail trader, with all of the information that they have at their fingertips, they have access to, the trading tools, the charting, the options change, everything that we have here on the platform, it's allowed them to get an edge and operate in a little bit more of a nimble manner that maybe institutional investors, they are constrained by, folks who can only rebalance monthly or quarterly. And I really do think the best example of that is what happened in April, when you have all these folks who are selling out at the end of Q1, and then April happens, they feel vindicated for a few days, and you get this face ripper through the end of June, and a lot of folks are caught offside and have to chase the market higher for the second half of the year. So hat tip to the retail folks who are, getting the education, getting the experience, and operating swiftly in what have been very, very difficult markets for a lot of professional traders.
Sure, I agree. I agree with you. I always said, and I've said it in really some old videos that we would do, that you can count on them. It didn't amaze me when a customer order would come in and it would be a sophisticated order. Like, people learned how to trade, who wanted to learn how to trade in an intelligent manner very easily. The public, they would always talk about the public being stupid money and stuff like that. The public was always, I don't want to say right, because that's not accurate, but the public was always, I don't know the adjective I'm looking for, but they were spot on. Their issue was that they didn't have tight markets. There was too much slippage, and the cost to entry was so expensive, and it put them behind the 8 ball with commissions and everything else like that. Now, over the last decade and more, that everything's been commoditized. Commissions are basically a fraction, or is almost zero if you're even trading stock, and options at $1 have become basically zero. I wouldn't be surprised if in the coming years that becomes zero. I mean, the price of entry is so cheap for the retail investor, and they're so good, they're so smart, that there's no reason why they shouldn't be competitive, if not outperform a money manager or a fund that has to stay in its charter, meaning like, if they're a gold fund, they have to trade just gold. If they're a bond fund this year, there was no way for them to compete or even show any type of returns. As a matter of fact, if you're a retail investor and you went with the, your age minus 100, that's what you should have in the market and bonds, you underperform the market by 50% because I'm just making you 50 years old. You're going to have 50% in each one. It was a horrible way to allocate. It's always been a horrible way to allocate. But to learn how to trade the market and learn how to use your buying power, make 25,000 act like 50 or 100,000, that's the way to learn how to trade. And the public's always had it. They just didn't have the cost of carry and the entry that professional traders had back in the day. Anyway, that's my soapbox. Let's take a quick look at the market. If we could take this down for just a quick second, we'll get right to it. SPX is hanging out at 68.56. Hasn't moved too much as of late. It's moved about $3 in the last 5 minutes or so. Even the S&Ps are down 42, made a little bit of a new low at 96.50. We're a little over 6,900, 69.02. All week long, or actually all month for the month of December, if you were to draw a line from if you take out the top and the bottom, you'd say 68.50 was probably the middle. We're just about 50 handles off of our mean. Again, just eyeballing it. NASDAQ up 180. NASDAQ's actually kind of, even though it's up the most, it's been the weakest since late October. Would you agree?
Oddly enough, right? And that's one of the things that has been concerning me. What happened at the end of October that silver bottomed, gold bottomed, treasuries topped, Bitcoin topped, the NASDAQ topped? That all seems very coincidental. But you really go back to mid to late October, that's when all of these assets more or less made their big turns.
Yeah. I don't know, but I don't know. I don't have the answer. If you were asking
your son Nick has been spot on. I feel like he's been trolling me. He's been sending me like, we're stuck at 68.50. He's sent me that almost every single day this entire month of December. And that's we're gonna close out with a market that just grinds sideways. So
we did just grind sideways. It was a great month for premium selling, even though it didn't look like it on paper. Starting the month. I mean, if you look at the month of December, I think we were in the 18 handle when we started the month. I think we were 19 handle. Sorry. I thought we were 18 and a half. We were almost 19 when we started the month. So it didn't look like 19 vol would be the highs, but it certainly ended up being the highs. Are you worried about how we're ending the year?
No. Yes and no.
I mean, chopping around. Let's throw out the really tight view of today. We're down, 0.5%, 0.75%, and just say we've been chopping around that 68.50. We chopped around and went a little bit higher. What are you concerned? Are you okay? Is this good for the market?
I'm okay. I mean, there's I'm going through all my seasonality stuff right now. Like, what do we do if the first 5 days of January? What does it mean for the January effect? There is a reason to think, right? If the month of January is positive, for example, and if it exceeds a 2% gain, it averages a 12% gain, but more than that for the rest of the year, something like 85% of the time. But when January is negative, the market averages only a 2.2% gain for the final 11 months, rallying only 60% of the time, right? So I'm curious to see how this January shakes up, because if you don't get a good Santa Claus rally window, the January effect seems to be a little bit more limited in nature. There's also the other side of like the second year of a president's term, because the second year of a president's term isn't good. The sixth year of a president's term has tended to be good. Now, I don't know if we would consider this Trump's sixth year, because they've been non-continuous, and usually like we're thinking George Bush, Bill Clinton, Barack Obama, right? Like year sixes, they've been reelected. If you're going by the year six rule, year six, the market's averaged a 21% return, 100% of the time higher when you have back-to-back 6 years in that second term. So, I mean, pick your poison. I want to see how January turns out. If we get a green January, I'm going to revise my S&P 500 targets to much higher for year end.
What's the 10th year usually return?
I don't. That's a one data point from FDR, which I don't have on my screen right now.
I'm just kidding you. I'm setting the world on fire. Third term of Trump. I'm just teasing.
You were having a nice show, Tony. Don't do that, Tony.
We were just having fun. We're gonna get the closing. We're gonna get the closing bell here. We got, remember, SPX. Let's put up. I'll put up my screen. SPX 6846. Please take down my screen and put back up slide number 8 again. 6846.73 right now, and we're looking at 6847 right now. We're getting a little bit of a rally. 6845. Let me give we got Donna in Barrington, Illinois, hometown favorite, 45.54. We're 45.23. She's 20 some odd cents, 30 some odd cents off.
It's incredible.
And you've got Vera there too in Chicago. It's going to be a Chicago win here, believe it or not. 68.45.54, Barrington, Illinois. Have you ever been to Barrington, Illinois?
I haven't. You'll have to take me there when I'm out in Chicago next year.
Big houses out there, big houses. Donna looks like she's going to be the winner. 68.45.54. SPX has not moved. Even the S&Ps are down 49. They made a new low about 5 handles ago. 68.45.50. We just had a 3-cent downtick, which is okay for Donna. I think we can crown Donna in Barrington, Illinois. A sneaky little win out of nowhere. Comes from the back of the pack to win here. 68.45.50. No movement. You usually get another minute or so when they get all the closing prices here.
Listen, if it wants to jump up by like 4.5 points, that guy Christopher in Katona, New York, looks pretty good.
I'm going to give you your props too. $4.50 off. It's better than I'll ever be. How about that?
Yeah, better be lucky than good. Not going to happen again.
100%. Well, Donna, I'm gonna officially crown you the unofficial winner until we get the official close of SPX. But it looks pretty good to me right now. Down in Barrington, Illinois, clap. Absolutely. Good job out of you. All right, Chris, I'm going to wish you and everybody else a very happy, healthy, merry, prosperous 2026. I think only good times. You have to look at it as a half full world, and you have to look at everything as being optimistic. So let's have a great 2026. Sound good to you?
Cheers, sir. See you next year.
Thank you. Happy New Year, everybody. Stay safe out there. Peace.
In the world of investing, a beast lurks between the numbers. Some watch from the safety of the sidelines, but others saddle up and ride that 1-ton rowdy ribeye for all he's got. If that's you, join us on tastytrade, named best online broker for options trading. Genius loves company.
Global markets never sleep. Explore them with Forex, now available on tastytrade. Get in on over 80 Forex pairs, 24 hours a day, 5 days a week, with the Forex platform that adapts to your style and speed. FX marks the spot. Trade it on tastytrade.
Why do you want high IV rank when you sell options? Because you get more money when you open your trade. People get all tweaky when they don't know how a stock is going to act. They'll pay more for guarantees that are written into options contracts. And if they're getting super scared about it, they'll pay a lot more for the options. If you're selling those options, that means there's more credit you might keep at the end of the trade. Since IV rank measures today's IV against where it's been in the past, high IV rank tells you if people want to throw more money at you now. So look for high IV rank when you sell options. Pretty simple.
Got trader's block?
We've got the cure. Get data-driven trade ideas with Cherry Picks, our weekly newsletter that gives you insights into the market. Sign up at tastylive.com/newsletters.
Tasty Trade's Money Match event. Unlock 30 days commission-free trading. Plus a 1% cash match on all qualifying deposits to jumpstart your trading when you open and fund a new Tasty Trade account. Level up your trading experience with active trader mode, smart order tracking, risk analysis tools, dynamic watch lists, and more. The Money Match event starts now, exclusive to new Tasty Trade customers.
Grow a strong community with Tasty Trade's referral program. When your friend joins Tasty Trade, you'll both receive $100. As your community grows, you get more bonuses. The referral program runs through December 31st, only at Tasty Trade.
That's a wrap on the year. It's Wednesday, December 31st, 2025. This is Overtime. I'm your host, Chris Vecchio in New York, Ilya Spivak's in San Francisco. We're here to take you through the rest of this half an hour as we wind down the trading day, the trading month, the trading year here on Tasty Live. Went out with a whimper, as it were. Stocks falling a little bit here into the close. S&P down by 0.7%. Similar performance for the NASDAQ, off by 0.85. Your Russell also off by about 0.75%. The CME raised margins again in the precious metal space, which leads to another leg of deleveraging, led, of course, by silver, down 9.7% here, and erasing all of the gains that we've seen since Christmas Eve, I guess. In any event, though, gold, silver, copper, platinum all take big legs lower. Platinum itself was off by around 9% or so. Was up near $2,600 earlier
What
this week.
What a sell-off in platinum.
$2,000 here, $2,044. We have another week of, we'll call it back and forth in oil, which quite frankly has not done much of anything for recent weeks or months, staying below 60 and moreover, finishing the year with close to a 20%. I have a minus 19.9% loss here on my little scribbling out here on this pad I did for Tony earlier. So down 19.9% for the year, down 0.93% today. And the dollar, it does stage a bit of a rebound. The dollar index is able to finish out the year on stronger footing, rallying for the past 5 days, but it still rounds out to about a 9.5% loss for 2025. Ilya, there's nothing really to write home about with today's price action, although I don't get to punch the ticket on those $7,000 calls. I should have sold them a few days ago. Bad timing, bad hindsight, or bad decision-making in hindsight. But we find ourselves looking at a market where there was exceedingly light volumes, less than 900,000 contracts traded today in ES. We also see that there is exceedingly low volatility. The VIX is closing out the year effectively at 15 on the nose, right at 15.02. Mm-hmm. What surprises you more about 2025? Is it the fact that the S&P 500 is finishing the year near 6850 if you're looking at SPX? Or is it the fact that the VIX is closing the year barely back above 15?
I think both of those things are surprising for those of us that have a macro disposition and we're looking for the start of the year, which began with the erasing of all of 2024 over the course of about 2.5 months. I think those of us that were looking at it were expecting more in that direction and underestimated the extent of AI hopium that was going to power markets, because it really was that. And it's an interesting dichotomy that emerged, because you seem to have two separate speculative narratives, one in stocks, one in the metals in particular. Because if you look at really what's performed over the past year, I mean, the metals have absolutely crushed everything. It's not even close. Gold is on pace for a 65% year. And the idea that this was somehow related to de-dollarization is just plain wrong, because the data doesn't support it. we went over this in our macro money session yesterday, but the dollar's holdings in reserves haven't decreased in years. The share of dollars in reserves has declined a little bit, and really only because those reserves have been diversified into other currencies. The Canadian dollar, the Australian dollar, they've started to make a name for themselves a little bit. The Chinese yuan. Gold, of course, has moved up in its share of reserves generally, but last year was kind of a slowdown in terms of central bank buying relative to 2023 and 2024. So you seemingly had a story where all of the angst around what we saw in the beginning of the year, mainly in the first quarter going into April, that violent response to the incoming tariff regime and all of those things. It seemed to go into metals, all of that concern. Meanwhile, stocks, and we saw it in metals as decoupled from the dollar for the most part, certainly not any kind of consistent relationship with the dollar, decoupled from yields for the most part, certainly nothing like the move in yield. I mean, yields were down a little on the year. We're probably talking about something like a 10-ish% decline on the year for 10-year yields, a little bit more for the front end because, of course, the Fed was cutting, but nothing like the 65-ish%, almost 66 move in gold. So it seemed to be its own speculative narrative. And I think what we set up for next year is some sort of a resolution. Which one here is wrong? Is it gold that's wrong because it's worried about all of these things? Or is it stocks that are wrong because they're not? And I think that's going to be a main story for 2026. As usual, macro is always way off on the timing and usually way too early. So perhaps next year is where we get the reckoning that stocks didn't have this year, especially considering how internationalized the AI supply chain is and how vulnerable to all of the concerns that gold seems to care about.
What's a bigger concern for you next year? Non-recessionary earnings slowdown triggering multiples compression, or the Federal Reserve losing credibility over its path of rates because it continues to cut while inflation is north of 2%?
I don't think the Federal Reserve faces nearly the credibility gap that some people might worry about, because the Federal Reserve is not a one-man, one-vote kind of a thing, nor is it a institution where the Fed chair can basically dictate policy. Obviously, the concern around Fed credibility is that the White House is going to stack the Fed with allies that are going to do things not because the economy warrants them, but because the president will have said so. And I don't think that's the likely thing. I certainly think the president has made it clear that he wants loyalists on the Fed board. The presence of Stephen Meehan there is certainly telling. This is somebody who literally is on leave from the White House, still technically has a White House role. So how much of a wall is there then between fiscal and monetary policy? Less of one. And that's certainly not helpful as far as Fed credibility. But even if the president were to name a completely compliant Fed chair, let's say you don't get Stephen Warsh, who's probably more independent-minded. Let's say you get Kevin Hassett, which is more likely to do the president's bidding full stop. Yeah. So if you get that, then you start getting the Fed chair being outvoted in meetings. And that would probably burnish the Fed's credibility, because it would show that one person, even the chair, cannot sway it out of consensus. And I don't think that's the biggest threat. I think the larger threat comes from worries about the sustainability of AI earnings. As we see, there's a lot more volatility concern around everything that's going on with the trading environment. The US and China are in this on again, off again kind of cold economic war. And I think you already see global trade declined last year. It declined by the most that it's declined in year-on-year terms since the 08-09 financial crisis. Not even COVID saw a decline like this in global trade volumes. And so you're looking at a situation where an AI structure where the supply chain is almost evenly spread. North America is, of course, the biggest because that's where all the models are, but it's only 38% of the whole. Asia is about 26, Europe is about 24, and then you have a smattering elsewhere. But it's almost an even spread. You get a break in any of this because the global trading environment is getting fussy. And so for whatever reason, there's a break in Japan because China and Japan don't get along. Or China and Korea don't get along. Or China and Taiwan have some sort of escalation. Any kind of a rupture in this supply chain, and the whole thing breaks apart because it's so internationalized and so dependent on seamless movement. So I think that's the much bigger risk, that all of this extrapolation of AI earnings until the end of time is overdone.
Oil was down 20% this year. Do we think that oil has a chance of staging a significant bounce back in 2026? If we have so many geopolitical issues going on right now, what if Russia-Ukraine is resolved? What if the U.S. doesn't go into Venezuela more than it has? There's a ton of supply in the market. We've seen rig counts fall in the U.S. all year long. I think rig counts are down over 11% year to date in the U.S.
And output's up.
And yet output is still at record highs. There's a lot of efficiency. There's a lot of productivity in the energy sector now. And it's been a remarkable story since the 2014 overbuild, when shale drilling was just getting started and just far too much capacity. Of course, Saudi Arabia then pumps, bankrupts a bunch of oil, shale drillers, blah, blah, blah. Industry consolidates. Here we are today. Would you be more surprised next year with oil at 70 or oil trading at like $45? $15 either way, basically. Would you be, $70 or $40?
Yeah.
What would surprise you?
I think I would be more surprised at 70 than I'd be surprised at 45. I think down seems to be the way of least resistance for oil. If we couldn't make hay of all the geopolitics as they looked this year, I mean, we had a 12-day war between Israel and Iran this year, literally and directly. And there was a winner, which is incredible. I think before this year, you might have thought that those two would never have the gumption to come to blows directly. And frankly, we talked about this yesterday, were this a might is right kind of situation and everybody was still afraid of the big, bad U.S. Heavyweight in the region, maybe it would have never gotten that far. Frankly, maybe October 7th wouldn't have happened. But there's a lot of dispersion with the U.S. kind of pulling back from everywhere, not just the Middle East, but becoming more inward focused. And so all kinds of players are starting to do all kinds of things. Certainly, I think the Russia invasion of Ukraine goes in that context. I think the Iran-backed Hamas terrorist attack on October 7th is that. On and on and on and on it goes. And so for all of this geopolitical risk that's oil relevant, prices are down 20%. So I think when you end up that way, you very clearly see the markets have an oversupply concern and maybe a weak demand concern. And so as it stands, it'd be very surprising to find oil at 70, I think, more so than 45, because something will have had to happen. 70 is not that far away, to be clear. We could get there. But I think the path of least resistance is still down.
There was a big split between stocks and bonds this year. Tony pointed this out on last call. If you were going for a typical 60-40, or let's just say 50-50 stocks and bonds, you basically left half your gains on the table. Long end returned 1.2% this year, while S&P gave you back 16.2. So if you were 50-50, you're looking at what, like an 8% gain? What would surprise you more for next year as we continue with the theme of this over time? What surprises Ilya in 2026?
Yes.
Would it be for another year like this where the Nasdaq's up 20% and bonds are basically flat? Or would it be the other way around where bonds post the big year and stocks are the ones that trade sideways?
In my mind, it's the latter. I think bonds post the big year and stocks come back. I think in particular, I'm interested in the long end because I think that has the dual benefit of risk aversion. If there is risk aversion, then safety typically goes in the long end of the curve. So I think that's one reason. The other is that the markets clearly seem to want more easing than the Fed is prepared to give them. And in my mind, that's very similar to what we're seeing in gold, interestingly. If the market is screaming at the Fed, you need to be doing more, and the Fed is resisting, and the economic data seems to support the Fed in its resisting, then the markets smell something else. They're not smelling an inflationary collapse. They're not smelling some sort of weird outturn on the economy, but they are smelling something. And whatever it is that they're smelling wants them to go for more rate cuts, which suggests at the very least that what they want is insulation. They want cheap money as the Kevlar vest against who knows what. And so I think in that sense, if the markets start to go, you know what, we need more cuts, the Fed's not listening, and we're not going to get anything on current expectations until April-ish at the earliest, and then again, maybe in July, then you're looking at a situation where rate cuts are going to start to migrate down curve. And so I think, and more of them are going to have to start to migrate down curve, because once again, we're going to have this exchange rate where delaying rate cuts now means you have to cut more aggressively later. And so for whatever reason, the market wants these cuts. Maybe it's because of the environment of uncertainty, which gold clearly has picked up on. Whatever it is, the markets want them. And I think that sets you up for an environment where stocks get a little bit wobbly, bonds start to suck in those rate cut expectations and risk aversion. And so the long end starts to look attractive.
We had gold get up 64%, silver up 139.6% on my mark. I don't think we're going to see those types of performances again next year. best performances that we've had in the metals market since 1979. On the flip end, we see that the dollar is down 9% or so. It's worst year.
Yeah.
What changes that narrative? Why shouldn't I go into next year thinking that absent CME margin hikes, gold, silver, the metals are still on an upward path while the dollar will continue to face this exogenous pressure for whatever rhyme or reason?
A couple things are important here to mention about the dollar. Number one, it's been rallying since 2008. And that rally is not broken. So what we have here is certainly a very ugly start to the year. But, and I mean, now that we have spot, on here, you can just look at.
I can just pull up euro dollar.
You can just pull up euro dollar. I mean, you can even pull it up in those charts that we were just looking at. But if you look back here, it's very clear to see. I mean, this is obviously the euro relative to the dollar. So when the euro is going down here, what you're looking at is the dollar strengthening. And this has been the case since 2008. So this whole idea that what we're seeing is somehow a devaluation of the dollar over a long period of time is just utter nonsense. There's just no other way to.
Can I make a counterpoint here? I'm looking at this monthly chart in the euro, and off of the highs that we have here,
it looks like the trend is over. Yeah.
I mean, this is one of the concerns that I have. I think about the lower rates. Again, my North Star typically for doing macro analysis is viewing things through the Mundell-Fleming model. If folks are looking for some weekend reading, effectively, how do assets respond given the mix of monetary and fiscal policy tilts? And so when monetary policy is getting easier and fiscal policy is getting easier, right? More spending, higher deficits, you typically see certain outcomes. I still see Fed looking to cut rates and pressure for them to cut rates, despite the fact that inflation is still above 2%. And I see deficits that, again, the most recent government data that we have is that the federal government spent more money in October 2025 than it did in October 2020, which is astounding because October 2020 is COVID before the vaccines came out.
No, we're spending with abandon. I mean,
it's war at time spending, and I see the euro now breaking a downtrend.
We're
that's
setting
been in place
whole piles of money on fire.
This downtrend that's been in place since 2008, highs that we had post-COVID here in 2020, that broke this year.
Yes.
That seems to be a big deal from a macro standpoint. Like this is now the strengthening dollar regime could be finished. The multi-decade strengthening dollar regime could be finished.
Maybe. And I think this is one of the more interesting things this coming year. So the idea that the dollar is turning, and that it's turning for sentiment reasons, will be something that I think is going to get tested if we get this kind of risk aversion. And what I think we're going to find out is, again, why the markets think all of this. I mean, just look at this. This is a monthly chart. Look at where the dollar stops falling. It hasn't gone anywhere since July. Meanwhile, gold has been surging. So yes, the trend seems to be breaking, and we seem to be near the bottom of a range here. If you look back in time and you look back to the start of that dollar rally in 2008, you can see that there is about a horizontal line here through this chart where there's a top range and a bottom range. And we're kind of at or near the top for anti-dollars, the bottom for the dollar in sort of range terms. And the dollar hasn't continued to weaken since July, since all of the kind of tariff-related kerfuffle washed over it. And it hasn't been responsive to the Fed cutting. It hasn't been responsive to what gold's doing or even mirroring what gold's doing. If the dollar is again an anti-risk asset, as we see in the last 6 months of this year, this sell-off might be over in the event of risk aversion. Nevertheless, I'm actually still short the dollar because you've got to show and prove. And in the meantime, the trend is down.
Ilya, today at being the 31st day of December of the year 2025, likewise means it is Warren Buffett's last day as CEO of Berkshire Hathaway. As we wind down this session of overtime that's now out of time, kudos to the greatest who's ever done it, perhaps. For 6 decades, Mr. Buffett returned 19.9% on average compounded annual growth rate compared to 10.4% for the S&P 500. If you invested with him in 1965, you returned 5,502,284% through the end of last year, and through the end of last week, that had moved north of 6 million%. Ilya, I hope that I have a return of 6 million% for my 6 decades in investing. We're not there quite yet, so some work to be done, but more work to do next year, of course. You and I will be back in the new year on Monday, January 5th, every Monday through Thursday, right after last call, 4 Eastern, 3 Central. So for Ilya Spivak in San Francisco, I've been Chris Vecchio in New York. Good luck trading. Happy New Year. See you in the new year.
Global markets never sleep. Explore them with Forex, now available on tastytrade. Get in on over 80 Forex pairs, 24 hours a day, 5 days a week, with the Forex platform that adapts to your style and speed. FX marks the spot. Trade it on tastytrade.
tastytrade has crypto, and you can trade with 0 commissions: Bitcoin, Ethereum, Litecoin, and more. Diversify in one place. Crypto, we got it, we get it.
tastytrade is now on TradingView. Trade stocks and futures directly on TradingView charts with tastytrade's low commissions. Try it out and leave us a review.
Clip thy waxen wings, thou economic Icarus. Discard these feathery adornments, thy flight's too vigorous. Rather, garb thyself with the soft fur of the bear, and dwell in low burrows of the valley fair. Forsake thy previous highs and perilous summit, for lo, I am short, so I must needs thee plummet. O market, I implore thee, make no high. Like some comic Fozzie, unclip thy bow tie. If thou dost tumble, I shall offer thee up a succulent hoagie. So, ye markets, remain as bearish as beloved Yogi. Follow thee the lead of Kipling's Baloo, and may the move be sweet as honey to Winnie the Pooh. With joy I watch descending chart lines straighten, run down with quickness and sweetness, like Lord Walter of Peyton. Let curious traders admire thy Berenstein way, and joyfully stealing some porridge, let us now say, sweet bearish market, never would I cage her, but admire her drop like some terrestrial Ursa Major. Come down, ye markets, to this sylvan glade, and let the bears have their day at tastytrade.
2025 has closed. 2026 is in front of us. And the question, of course, is, will this be a fresh start? Are we going to look at something new? Are we going to face something different? Or do we just get a little bit of a break for a couple days this week, and then we're back to our regular scheduled program? That's what we're going to unpack here on Macro Money. I'm Ilya Spivak, head of Global Macro here at tastylive. And what we'll do is we'll take a look at the way this week has closed out. And then from there, take a look at where this leaves us as we look at the first week of January and what's likely to matter, and whether that is continuation, as it were, on the big theme of this year so far as it winds down, or something new is actually on the horizon. So here is the last week of the year. Not surprisingly, the big story here was the sharp sell-off in gold and broadly the metals, off 4.8%. We didn't get so much of a Santa Claus rally in stocks. They're down 1.2% for the S&P, 1.6% for the NASDAQ. Yields haven't gone anywhere basically for 2 weeks. Kind of a hodgepodge here. The 10-year up 0.8%. The front end, the 2-year down 0.2%. Nothing has really moved here, as we can see, for at least 2 weeks. Crude oil up a touch, but ultimately not really going anywhere. Dollar oscillating, Bitcoin oscillating. The story in gold, of course, another increase in margins from the CME as we head into the holiday, probably reflective of jumpy markets. Certainly the futures are taking their cues from spot, and spot doesn't close because it is not on an exchange. So certainly not impossible that over the weekend, in very thin liquidity, you get some kind of funny business in over-the-counter instruments like spot currency, spot gold, Bitcoin. And so seemingly CME taking some wise steps here to cool off speculative fervor with another margin increase and get people's capital position buffered. And against that backdrop, seemingly some weaker hands, some speculative hands getting squeezed out for how much it'll cost to hold the positions. And so another big leg down for gold today. And on the week, we can see here off 4.8%. Of course, we started with a big sell-off at the start of the week because last Friday was that first CME margin rise. So not really much going on here, and sort of a quiet end. But if it was a Santa Claus rally that people were looking for, well, it's apparently not here. So take that as you will. I wouldn't necessarily extrapolate it forward, but sometimes you do get a little bit of a peek at the bias into the new year in the intervening few days between the Christmas and the New Year holidays. And so if that turns out to be indicative, and sometimes it is and sometimes it's not, we'll see, then perhaps a little bit of a soggy start for the markets as we enter January. But much more importantly, we start next week with a good dollop of heavy-duty U.S. economic data. Thankfully, the government shutdown is now long over, and hopefully it won't restart when the deal that ended it expires at the end of January. But at least for now, we're going to get a batch of economic data that'll begin with the latest set of ISM PMIs. As ever, these are in the usual PMI logic. So 50 is neutral, above 50 is growth, below 50 is contraction. The further you go above 50, the faster the growth. The further you go below 50, the faster the contraction. And the expectations are that we are going to get a little bit of a cooler service sector and yet another month of contraction in manufacturing. But on the whole, we can see the cumulative situation looks relatively little changed. And if we were to guesstimate essentially a composite out of these numbers, it would be a slowdown. Generally speaking, you could sort of guesstimate that manufacturing accounts for about 30% of the economy against 70% for the service sector. That's very back of the envelope math, but give or take. And if you weighed that and made a composite index, that composite index would take you to 50.8, down from 51.3 in November. Still growth, growth that would be the weakest in 3 months when we had a shock contraction in September, but nevertheless, growth. And on the whole, growth that's give or take on trend. Of course, we'll also get on Friday the latest batch of employment data. The expectation is that we'll only get a 12,000 jobs increase for non-farm payrolls. The unemployment rate expected to go up to 4.7%. At a 12K rate here, using the magic math that Fed Chair Jerome Powell told us, where he basically said that the headline number is overcounting by about 40K. So the actual result, if you will, on that basis, would be the expectation that we're actually going to see job losses. And what we then end up with is the kind of jobs report, perhaps, that encourages the Fed to cut interest rates. It's a similar story for the incoming consumer confidence report, which closes out the week. Here, we'd be looking for, it looks like sentiment that's little changed, but ultimately not really recovering, despite now several months, 5 months of cooling inflation expectations, which has not been the sort of pattern du jour for quite a few years now for consumer sentiment. It really has been a function of inflation expectations. And so we can see here, as we're coming out of the pandemic, we have sentiment declining because 2021 going into 2022, there's that inflation scare where inflation runs up as high as 9% or so if we look at CPI. And so with that in mind, we can see rising inflation expectations. Not surprisingly, consumers don't like it. As the Fed starts to hike rates and beat back that inflation, the one-year outlook is cooling, sentiment is improving. As we start this year and we get the kerfuffle around the tariffs, sentiment cracks lower and is in fact back to these lows that we saw at the height of the inflation scare post-COVID, because inflation expectations clearly surge here from 2.6 to at 1.6.6%. The worrying bit here is that sentiment is not recovering here, even as inflation expectations most recently are coming down. And what we're looking for in these January numbers is essentially numbers that don't get worse meaningfully, but also don't get better. And that will ostensibly help in the Fed's thinking, because, of course, what it has concluded is that inflation is something of a transitory situation on the tariffs and the goods side. Meanwhile, the cooling off in services inflation has slowly continued. And so the Fed can focus on what appears to be sogginess in the labor market. You can obviously see that sogginess with the naked eye over the course of 2025. So we start the year with much stronger job creation, and then over the course of the year, that job creation slows. So from the Fed's perspective, it makes sense then to have cut rates in the past year, as they have, and maybe sets the stage for them to continue to cut them. Now, based on the Fed's latest expectations, they've got one rate cut on the menu for next year. They've got another rate cut on the menu for 2027. This is from December's summary of economic projections. When we look at what the markets have for the same period, it's actually not that far off at this point. So over the course of 24 months here, next year and the year after, the sum total is actually basically in line with what the Fed is saying. 2 rate cuts, only a touch over, 53 basis points. But the sequencing is meaningfully different. The markets have 56 basis points on the menu for next year and essentially nothing for 2027. That, of course, means that their outlook for next year is double that of the Fed. And so they want their 50 basis points up front, whereas the Fed is saying, we're going to spread them out some. So the real question, of course, then becomes, well, why does this matter? And what is that going to do for markets? And to that end, what does this economic data that we face next week, what is it going to show us that's going to move the needle from a practical trading perspective? So if we take a look here, we can see that we basically anchored on the outlook for interest rates next year and 2027 already by around mid-year. And since then, those expectations have kind of idled somewhere in the range of between 75 and 50 basis points. Once we got the sense that this was not going to get any more dovish, mainly when the Fed issued their policy announcement in October and said, listen, you may have thought that we're on autopilot, but we're not. The S&P 500 has basically stalled. We've tried to break out of this range here on the downside. We tried to break out of it on the top side. But apparently, unless we get a meaningful shift in policy expectations, perhaps closer to what the markets are thinking or meaningfully away from what the markets are thinking, there really is no level of conviction in overall risk sentiment. Not surprisingly, of course. All of this kicks off after this kerfuffle with the tariffs and Liberation Day in April. So once this kind of washes off over the markets, we can see, of course, this is where things start. Things get a little bit more dovish as this is occurring, though, of course, most rate cut expectations at that point are for 2025 because the markets are getting worried about whatever this means. But as this bottoms and as this starts to give way to something a little bit more normal, what do we see? The rise in stocks and the decline in rate cut expectations, that is to say, the building dovishness that you see for 2026, 2027 policy expectations move in almost perfect inverse. And when this stops showing directional momentum, so does this. So the question here seems to be, why do the markets want their rate cuts more urgently? And will the markets be unhappy if that isn't where the Fed has room to steer on the basis of this data? Now, despite the fact that we have a situation with consumer confidence that seems to be, as we just saw, relatively soggy, the latest GDP report for the third quarter showed a very welcome rebound in consumption, which is, of course, by far the largest component of GDP at close to 68% of the total. And so the economy actually seems to be in decent shape. Now, of course, this doesn't include the government shutdown that we got in the fourth quarter, but looking at the latest numbers for S&P Global PMIs, the most timely numbers that we have so far. They're already out to December. What we see is that, indeed, here's something of a slowdown in U.S. economic activity in the third quarter going into the fourth. So here's the third. That's the 3 months right here. Here's the fourth. That's the 3 months right there. So there it is, a slowdown, but certainly not anything that repeats the concerns here, this sharp decline around the tariff scare at the start of the outgoing year, and generally within the range of normal here in the wake of COVID, and sort of taking together what we've seen over recent years. Not exactly shocking. Meanwhile, employment continues to shrink. The latest numbers, this is as of December, and of course we'll get the update, or as of November rather, and of course we'll get the December numbers next week. But employment has been declining here clearly. This seems to generally follow the story that we've seen in the unemployment rate and in the NFP numbers. So we can see here that basically since the beginning of this year, we've seen a parallel contraction, sub 50 on the index, in both service sector and manufacturing sector employment, which lines up neatly with what we see right here. In fact, going all the way here to essentially the pandemic labor shortages, we can see the pace of hiring has gradually declined since then. And we can see that right around then is where we get the peak in these ISM numbers and a cool off that follows. So if this is going to continue to sort of generally hold, then the Fed appears to have a relatively solid economy with job losses under the surface and cooling inflation. In other words, the ingredients are there, and the Fed is looking like it is well supported in what it has been saying. And so the impetus for the Fed to get any feistier on easing doesn't seem to be there. The data seems to be confirming largely what the Fed has said. In fact, we can see in the latest CPI numbers, the Fed's assumptions, for the most part, are holding. Service sector inflation is cooling. That's the most sticky part and the largest contributor to the whole. We've had a run-up in goods inflation, but it seems to be something of a plateau going on over here, perhaps mirroring what the Fed has been saying around getting to the other side of the tariffs in year-on-year calculations, rebasing them, showing up, say, in April or so, and saying, well, now the tariffs have been worked out of year-on-year calculations and inflation has been rebased down. We see that with all of that information in hand, the market does not think that there's going to be a change in rates in January. The likelihood of one is not even 15%. And if we look at where the rate cuts are, where those 50 basis points are that the markets are calling for next year, we can see the first one is in the end of April. So right here is where the calculus switches. We can see in March, it's still over 50% chance that we stay put. And as of April, less than 50% chance that we stay put, and a cumulative over 50% chance that there's at least one cut. The second cut is in July, because again, here we're over 50% on no cut or one cut, less than 50 anything more than one cut, by July, that math switches. And so, very tellingly, this is where the flip in inflation in those year-on-year calculations is lining up. So, on the face of it, the economic data that we are looking at next week is kind of par for the course and doesn't change the baseline if we get to expectations as they are. Now, does that ultimately get the markets in a better mood or in a worse mood? Well, clearly they're not prepared to rally unless the calculus here is going to change. And if the calculus is not going to change, and we appear to be near the top of this oscillation range, well, then perhaps what we're looking at is disappointment, because indeed what the markets want is more easing up front. And then, of course, the question becomes, well, why do they want all this easing up front if the data, in fact, seems to be endorsing the Fed's slow-going approach? And perhaps, as we talked about yesterday, the issue really is about uncertainty. If we look at what's happened here over the course of 2025, this is the Trade Policy Uncertainty Index. It was constructed by some Fed economists and looks at the mention of the trade environment together with uncertainty in news reporting. And on that basis, sort of counts where sentiment is. What we see here is, of course, here was the scare around Liberation Day and the unveiling of those tariffs. We've obviously cooled off since then. But as we can see, the volatility in trading policy sentiment has become very erratic. Whereas even post-COVID, this index is hugging very closely with its 7 and 30-day moving averages, which approximate the overall sort of average direction. And they're tightly wound. Here, there's a lot of fuzz around these averages. And so a lot of uncertainty. And as a result, what we see is that we've seen a significant decline in global trading volumes over the past year, thanks to all of this. In fact, we've had a decline of 13.3% year on year for the year in terms of global trading volumes. That is a bigger decline than the 6.2 odd % decline that we saw during COVID, which we can see right here. It is much more comparable with this decline during the Great Recession and the sort of aftermath of the 2008 financial crisis. That was a drop of 14.5%. So all of this uncertainty, though it is not nearly as acute as it was earlier in the year, nevertheless has created all kinds of retrenchment. Why is this an issue? Well, obviously, we can see that over the past year, the tech sector has easily dominated what's going on in equities. It is by far outperforming all of the other components in the S&P 500. Not surprising, of course. The AI story is big and powerful. But that AI supply chain is very globally distributed. Of course, the most important chunk is still in North America because all of the big models are still US-based. But we can see the supply chain is very integrated and almost equally dependent on its various parts. If we're in an environment where this is what's going on because of this kind of uncertainty, well, then this supply chain becomes incredibly vulnerable because any little rupture anywhere in one of these regions, given how dependent the supply chain is on smooth movement across the pie, would potentially break the whole thing down. and be a major roadblock. And perhaps this is why the markets want their rate cuts, because what they want is cheap money buffer against what may happen going forward. And so if, in fact, they don't get guidance on those rate cuts becoming more immediate because the economic data in the coming week is basically par for the course, well, then perhaps the path of least resistance is back this way. With that in mind, the positions that I'm going into the new year with are going to be relatively unchanged from what I had recently. I'm still long gold. I'm short the US dollar against the pound, the euro, and the Canadian dollar. I'm short risk against Bitcoin, against Russell, against NASDAQ, and the S&P, all through put verticals on the benchmark ETFs, all with lots of duration, so as not to get caught up in whatever weirdness there is in thin liquidity at the start of the new year. I still have some thematic positions here, still long Brazilian stocks, which were very kind to me in the past year and maybe will continue. The trend seems to be there. And I'm long MSOS with expiries in January 2027, with the idea that cannabis might come up in the midterms. And that is macro money for today. As ever, we will be back next week, Monday through Thursday, right after overtime, a show I co-host with Chris Vecchio, looking at the Wall Street close and where things may go therefrom. I'm writing for the News and Insights portion of tastylive.com. I'm commenting at Ilya Spivak on former Twitter and on Blue Sky. If you're watching this on YouTube, like and subscribe. Have a safe and happy new year. I will see you on Macro Money in 2026.